Good morning, traders. Happy Thursday. Happy post-Liberation Day. Happy pre-NFT Day. Happy madness. How are you, Anastasiia?
I am good, very interested. But yeah, post-Liberation Day, I think, is a good name for today's day. It's
Yeah.
crazy. The last time I've
Who's
seen the volatility, to be honest with you, was when COVID hit and they announced closing the borders, and the market completely crashed. This was the
yeah,
last time I remember, at least if I'm not mistaken, this kind of volatility in a matter of hours, right? We are not talking
yeah,
days, like
yeah.
10 11 hours since it announced.
I mean, in this time, everyone knew it was coming. So, okay, the COVID one, okay, there would have been insider knowledge that there was going to be announcements, et cetera, et cetera. But this time, it was publicly announced that there were going to be tariffs announced. And it was like a whipsaw, just up and down all over the place. I don't think there was a single market that was spared some kind of bloodbath, whether that be people getting stopped out on shorts or people getting caught out on their longs. So it's been an interesting, not even 12 hours, something like that. I think it's just been over 12 hours that this happened. So still very much getting digested. I know you've been busy having a look at the ins and outs of it. So we'll be looking straight into that. But great to see all of you in the chat. Thank you very much for joining us. We are live and we will be coming to your questions. If you've got anything that you want us to look at, let us know. But first and foremost, make sure you drop a like, subscribe to the channel, and share it with all of your trading friends and colleagues. So Anastasiia, I know you were looking at the charts before we came on, and you've been trying to make head and tail of what on earth Mr. Trump has decided to come up with. What have you managed to decipher so far?
To be quite honest with you, well, nothing to be honest with you with the charts. I'm still waiting because it's at this moment, I wish I would have my crystal ball with me, because it's as equally possible that it's going to continue diving and the European market surging, well, currencies, right, as it will be reversing on the correction. So I'm still waiting. But regarding the Trump, we actually still don't know if it's a final tariff, because he did say something like it can be renegotiated at first. Secondly, that he's gonna enforce more tariffs if countries are gonna try to respond. So I don't think we are done yet. I also, as we talked about it before, the week before with you, that I think that he's using it as a manipulation way and a way to get what he wants. And I'm not sure that anyone from the Senate or him himself did count realistically what an effect it will have. Because this is going to basically depend on whether his plan on bringing the investments to US and bringing the production is going to work out. And although it might sound simple, it's not that simple. Like bringing the whole factories with thousands of people working at the factory, all the economic aspects and everything, it's really difficult. So he's calling it a short-term pain for the long-term gain, but short-term and long-term are a very subjective matter. You know what I mean?
Yes. Yeah. Well, for somebody who's is he turned 80 yet? I can't remember. I think he's in his late 70s. So for somebody to start talking about long term at that age, I'm still not entirely sure about the wisdom behind that. But yeah, I mean,
yesterday that either I'm getting too old for this kind of volatility, or he's getting too old to become a president. It's hard too. I am like admitting that I might be too old for this. I loved COVID, but it's been a couple of years. I prefer the stability and predictability of the market at this point. But I also don't think that someone at this age should become a president. But we'll see which effect it's gonna have. It's a completely different story.
Absolutely. So, I mean, first things first, I think probably it's worth us having a look at what we have for the news today, because despite what Trump may have done yesterday, that's not the only thing happening right now, obviously. So we have had some PMI news come out for the pound this morning. We've had a PMI for the euro. We've also got PMI coming out this afternoon for the dollar. along with the trade balance for Canada as well. So there is a lot of news still to come, which ordinarily would have been moving things around anyway. Maybe not to the extent that it did last night, but certainly they will be having a ripple effect as well. So I think it's fair to say that a lot of institutions, a lot of retail traders as well, will be trying to find the best positions and trying to realign themselves to what they see coming and what they see happening. In terms of the strength scores, so if we look at it on the daily as yesterday, we can see that the pound, New Zealand dollar, and the euro got the most amount of strength yesterday, and the dollar basically fell through the floor like an anvil strapped to its ankles and just plummeted. We come into today in terms of real time, and you can see that weakness has remained so far with the Asia session, and as we go into London and into Europe opening up. So, the yen, Swiss franc, unsurprisingly, risk off asset has seen a lot of money going in towards it. So we'll take a look at some of those currency pairs, but we'll also obviously have a look at the indices. We'll look at crypto as well and the commodities. So let us know, guys, if there's anything in particular you want us to have a look at. But Anastasiia, was there anything that you've looked at first this morning that you wanted to talk about?
Yeah, I want to talk about silver.
Oh, sorry.
We clicked it at the same time. So I want to talk about silver. I was expecting actually silver to go up yesterday. So I was looking at this, and it did, and I closed it. I was posting it in the channel so that I closed this buy because it was a complete mess and it was getting closer to Trump's speech. And then I turned sell, and you know how painful it was. I closed it. I wish I held this sell, but it's always a post-factum matter when you are like, okay, I wish I could just hold it. But nonetheless, if we look at futures, and they're quite different actually right now with futures and with the CFD, how they look together. But what I'm seeing is that we are getting quite close to an interesting level for the futures market on silver. And I always take this one as a base because essentially based on the future CFD is also going to move. So on silver specifically, usually it's not such a big difference, but in this matter it is. So what we see here is we reach the value area of this whole huge consolidation. And now the riskier entry would be looking for it right now. We see that I tried finding the bottom here and looking for the entry now to return to the previous highs, like lows right here that the price has been testing yesterday. And the other way is I'm looking for the price to dive a little lower. I would prefer it to take the lows because it would be too obvious. Also, if it would reverse here, I would want it to go to 32.9 first, and here to look for the entries. If the silver continues to drop, this is futures. If we look at the CFDs, I'm expecting it to go somewhere here at the same time. So if you go here somewhere for the CFDs, I'm also going to be looking for a buy. So I want it a little bit lower. Perhaps it can happen during our session, and then to buy it as well. So that's a silver. If you go lower, I mean, it tries to reject, but it didn't break the highs yet. It's still holding. So I don't see the momentum yet from the bullish side. So I'm still waiting to see some kind of reversal before entering this.
Yeah.
For gold, I've been actually long. It came back to my entry point. I entered long yesterday after the announcement at night, and I entered here. And right now it's hovering around my break even. So I'm thinking to close it now because we are still below the volumes. We are stuck in this zone of the same consolidation here, and I don't particularly like how it looks. But again, if gold during our stream can go a little higher, I would prefer to see above 31, 33. I think that's going to be a nice continuation for a long as well.
Yeah.
I don't believe. I don't believe metals are gonna continue to dive lower because it's the only thing that remains stable. So I do expect that to kind of find a bottom and start reversing back to the upside.
Yeah, I agree. I mean, Alex and I were trading were trading gold this morning, and both of us just frankly mismanaging our trades. And I think it's probably a good lesson for everybody else to not do as we did, because we were just mismanaging trades, trying to get in quickly, trying to catch opportunities, trying to catch longs, at various different opportunities, and gold just chopped us up. And our emotions were certainly getting the better of us. So I am in a long at the moment on gold. I'm waiting to see how it plays out. On the 1 minute, it's just consolidating and contracting down. It's pulling down. Actually, as I speak, it is pulling down now, and breaking some of the lows on the 1 minute. So we may see a little bit of a pullback. And if this is the swing down now again to test the lows, we'll see. But yeah, gold has been suggesting a return to the highs, to retest those highs that we had overnight. I still believe that we will, but it's just very, very choppy. I think there's a lot of uncertainty around whether gold is going to react higher, or if it's going to if it's just going to keep going down. The dollar has been so weak. The divergences are significant. So these are opportunities that we just have to be very, very careful of. I think it's you said it yourself. This volatility, the last time we had this was during COVID. Many people won't have been trading during COVID, so they won't necessarily have the experience that you have from when you were trading back then. Is there any kind of insights or learnings that you took from that time that you think might be useful for people that are out there trading this kind of volatility for the first time?
First of all, it may continue to go up or down longer than we can pay for it. So trying to catch the reversal doesn't really pay off very well. At the same time, that's what for currencies, because the currencies at this moment, they have the base why they're going that direction, right? It's a prediction on what the economy is going to most likely experience. And in this way, I would look for the continuation on currencies rather than trying to catch a reversal. It's a very ungrateful business at this volatility of the market. Now, when it comes to commodities, in fact, it's actually was the opposite. The commodities I did at this moment, for example, oil, right? When the COVID hit, it was actually recovering quite faster than anyone would expect it to be. So something that might seem, like gold and silver, for example, dropping now, I do think we're going to find kind of a low and start reversing back. The difference between this is that it's a physical asset. It holds its value. It's been used in the production. We can also talk about how it's a paper-based, value and everything. But in the fact, there is something behind it. Whether it's, for example, currencies are more fluctuating asset, and if you talk about cryptocurrencies, they're completely dropping and melting. I was just reading the article where they were saying that if Bitcoin will be able to hold above 75 until 15th of April, then the risk is going to already pass. But 75, right? Just a month and a half ago, we were talking more than 100. Yeah. Right? It's because it's a high risk asset. It's because there is nothing, like we can talk a lot about it, but there is nothing behind that actually holds value beside the speculation and belief and expectation on the bright future that is going to bring and a freedom that is going to bring. But right now there is nothing. It's not being used. And the first thing where investors are pulling money away from is crypto, right? Because it can continue to drop indefinitely because of the tariffs, because the more expensive the living becomes, the more consumers, the less consumers are going to be willing to put their money in investments. People invest when they have the stable base, they have house, they have food, they have, clothes to wear, they have healthcare, and then it starts to be services, and then it starts to be risk assets. And the other way around, it starts folding the same way, right? The risk assets first, then services, and then the healthcare, food, the real estate, and so on and so on. So
Yeah, absolutely. I mean, it's interesting you said about Bitcoin. I mean, I was looking at Bitcoin here. So this is on the daily chart on Bitcoin. I mean, yesterday basically formed a significant bearish engulfing candle. If you see, we took all of these highs. I think we've left this one below for us to take later on. So I still believe that there is room for Bitcoin to go higher. There is a lot of belief behind it. There is a lot of sentiment behind it, but my belief that we're going to be coming down to this kind of area, I think personally will be coming down to the 70,000 area rather than the 75, 74. I think it's going to be lower. I think it's going to probably be around about the 70, 71,000 before we see a reversal. So we'll see. But that's certainly one that's worth keeping an eye on. It's obviously found a little bit of support overnight, but when you look at how it drops, it's now sitting below the 200 EMA, for example, on the 15-minute, and it's struggling to really pick up any momentum to get back up again. Gold, interestingly, has rejected from this level here and may now have finally found its strength to push on up. What it's done on the 1 minute, it's very interesting sometimes when I see these moves, is that you see here it has a very, very strong wick rejection twice away from this inside bar, suggesting that it's happy to leave that particular level of liquidity until later on. So for me, that's, I want to see this wick retested, but that might be a nice opportunity for a long on gold if somebody's trying to get in on it. Mine, I had quite a tight stop below these lows, so I've actually been taken out. But I'll see if there's a new retest down here, then it might present another opportunity to get in again. So we'll see how that one plays out. But the chat is quite busy. We've got a lot of guys chatting about gold. We've got a lot of USD pairs and things like that. So I see we've got Henry, we've got Haresh, we've got Mike. Great to see all of you guys. We've got Lynn as well. One of the first questions we got here is Forex Uncensored. I think I said he's in London. Says, my last trade for the week was yesterday. I'm staying out of the markets until Monday to let Trump news settle and its effect on NFP tomorrow, which will be a total lottery. So quite right. Tomorrow, obviously, we have the small minor issue of non-farm payroll, which really doesn't move the market a lot at all normally. So why would it move the market tomorrow? But yeah, that's obviously going to present its own opportunities and its own challenges. So definitely one to be careful of and to be wary of, because Anastasiia, we've seen NFP chew up the markets in the past, and certainly it sounds like a wise decision there from Forex Uncensored to maybe leave it for the time being. You don't normally trade NFP, do you? You tend to stay away from it?
No, I usually don't trade it now. I used to trade it actively, but liquidity changed with Biden, and since Biden became president last time, I stopped trading it because the price just usually tends to make a helicopter move. It goes up, it goes down, it stabilizes around where it started, and it's almost nothing that there's interesting during the NFP now. But there's before NFP hits and the price was actually going for like 100 pips, 50 pips when it comes to currencies. So I don't trade it. Also, if it comes to tomorrow's NFP, we need to realize that it's data that is calculated with a big delay. So the yesterday's tariffs or today's tariffs, right, they are not yet going to have an effect on the NFP. That what is going to have an effect is the tariffs that he already enforced before, which is 25% on Canada, on steel, for example, on aluminium, right? It may have an effect, but the total effect of today's tariffs is only going to have in a couple of months from now on the NFP specifically.
Exactly. I mean, this is something that we haven't seen happen properly for about 100 years, right? This kind of tariff war idea really hasn't happened since the 1920s. So obviously it didn't work out very well back then. and we're all waiting to see how it's going to play out this time around.
He did have the tariffs last time when he was president in 2018-19, but the situation was different back then. Right now, at the very least, the inflation is above the 2% Fed's target, right? The interest rates are on the edge, right now. So the situation is different, and it's going to have an effect. We already saw the economy is not doing too good, and US specifically as well in the past couple of years. So, like, affording it to go even lower before it becomes better is a big question.
Yeah, absolutely, and it's proving to be very sticky. There's nothing clear that's coming out of it right now, is there?
Yeah, well, it's a couple of things, I guess, right now from what he enforced, but some of the things are still in the air. So China is also threatening to answer and give a reply back and a hit back if the tariffs are not going to be lifted immediately. So it's going to be interesting in the next couple of days.
Yeah, absolutely. It is going to be a political game of chicken. Who's going to blink first, and who's going to cave in? So we all know that Trump sees himself as the master deal maker, and he's obviously decided to try and play hardball with the world's economy. So we'll see how that plans out for him. Gold at the moment is looking like a nice setup still. It didn't actually come down to test this area, so cautious potential opportunity. What I do like is that we had this inside bar here, where price came down and wicked straight back up again. So we are still sitting below that 200 EMA, so it's not a solid opportunity yet, but we've come down to test this wick now. Hopefully we can see a bit of a push back up with a wick rejection, and a continuation further up, and then there we go. There's a nice reaction on the 1 minute. If it holds, then that could be a nice opportunity for some longs on gold. I thought you were in London, Forex Uncensored. I thought I'd read that earlier. Emu is asking us to have a look at USD JPY. Just pulling that up in terms of the strength meter. So obviously USD still showing a lot of weakness, and the yen, one of the ones showing some strength. So certainly one that's worth taking a look at. If we see it here, I'll just move this one here. We'll keep gold open for those of you that are interested in gold. We'll leave it open there. But USD JPY, it came down into this area earlier on, and it's broken that low, and it's trying to test it again. Now, the dollar has been trying to get some strength back since everything kicked off yesterday. And if we look at the Dixie, we can see the Dixie has just kept on falling. If we take it out to the hourly, for example, we can see here, there you've got the gap, as you can see there in terms of what happened. So if you see that gap there, that is a big old gap here. So it's reasonable to expect that there's going to be some kind of reaction, that there's going to be some kind of equilibrium attempted at some point by the markets. The question is whether that's going to happen immediately. And as you say, Anastasiia, the things have only just begun. There is going to be all eyes on the reaction from all the various different economies around the world to these tariffs, and what their expected retaliation or not is likely to be. So if we look at that, USD JPY, it's going to be, I would say, amongst all of the others, on the same principle of looking for, I would say technical analysis still, looking for support levels, looking for areas of resistance, and trying to find opportunities. The thing for me would be just making sure that there isn't one thing that's maybe sitting hidden away. So, for example, here on the 1 hour, just alone, I can see this low here. We haven't broken past this one, I believe, on the 1 hour. Let's just have a look. No, we have. So we have broken past that one. So we've now come to this area where we've got this inside bar. on the 1 hour. So it's certainly an area where price is either going to want to take that area or it's going to reject quite strongly from it. I'd want to see that with a strong wick to the upside. At the moment, it hasn't really done that. You know, we're coming up to the close of that 1 hour candle right now, and it doesn't suggest that there's any kind of rejection of that level right now. So at the moment, I would be saying that dollar yen is probably still going to go lower. Looking at it on the 1 minute, that seems to be you know, suggesting the same. It's left this level here of a wickless candle, and it's gaining some more bearish momentum. So we are in a general area where I would expect a reaction, and we have this daily candle from the 11th of March, so almost a month ago. If that low is taken, then I would see us potentially going much lower and maybe coming down to the 142, the 143 area on a longer time frame. We do have some areas of support here. The reason I've got this blue area marked out is I've got this engulfing candle to the upside. So this was a real turning point here, as you can see on the EMAs as well. We swung right back up as we came down into this area. So we are certainly coming to a swing point. The question will be is how much is the dollar going to sell off the back of this news that we've had overnight. I don't know, what do you think on USD JPY, Anastasiia? Have you got any thoughts on it?
To be quite honest with you, on USD JPY, I don't think it's gonna stop yet. I'm gonna pull it up. 1 second. For myself, I was looking at USD CHF. I'm gonna talk about it in a second. For USD JPY, if you look at just how it's moving right now, it just recent price action, it was trying to stop, but then the momentum kept pushing. So it feels like they were trying to hold it here, and then the price action clearly shows that they failed, right? And the price continued to go up, down. And if we place the volume profile, we will see the same thing. I'm just gonna here. So the majority of the volume is below. So they were like, people were trying, buyers were trying to stop it already here, where it failed, right? And the sellers, aggressive sellers, pushed through here again. They tried to stop one time, second time, third time, and it failed again. So I would expect the continuation to the downside like this for USD JPY. Wait, I'm gonna do it differently. Something like this. So if we come back to 0.50, I would look for the continuation to the downside from here. Yeah. Now, the question is how far? Well, that's depends on obviously today. I do find they were trying to stop it at the lows here, like you were saying. But if you look at the previous price action beside this low, like what is here? Realistically, we had this volume that the price has already broken. So we are below this volume. And if we cross here, we will see that this is exactly where they tried to stop the price was going on. So they were trying to stop it at the previous volumes here. So the price did not hold. Now the next ones are perhaps, 1 second, here in this consolidation, small one. God, I need to get a mouse. So in this consolidation here, we're going to see some kind of volume now when it loads, but I don't think necessarily it's going to hold. So the realistic next big volume area is only here. So here we have some kind of volume. The point of control of it is going to be at... Wait.
Oh, we've lost your screen share for some reason.
It's trading cushion down. No, here we go.
There we go.
Yeah, so the point of control is where the price is right now, but it's not a significant volume that can stop the price. The realistic one is right here. So I see the potential of the huge drop continuing for USD JPY here, but so I do see their good short, but I do like USD CHF more, to be quite honest with you.
Yeah, absolutely. Yeah, and Forex Uncensored, quite right. The news is unstable. We've got economic news coming out today, but we've also got just the world's reaction to what's happened last night. So I suppose the positive is that you have volatility in the market. So there is going to be moves, there is going to be opportunities. But as Forex Uncensored says, it's, revert to the strong technicals, revert to the fundamentals of price action, looking for support, looking for resistance. Your volume profile is a great indicator that I know you're a big fan of using, Anastasiia. In terms of anything that you've seen moving, we've obviously talked about silver. You mentioned USD Swiss franc as well. Do you want to talk us a little bit about that?
Yeah, so what I'm looking at here for USD CHF is, if we look at the higher time frame from the bigger perspective, we did reach this consolidation here right now. The point of control of that is this one, so I'm gonna mark it up. So this is a point of control. Now this is a dynamic point of control that was created also in the same consolidation area. So we have these two volumes. Now the price is pulling back from this one right now, but I'm not buying it for one simple reason, because if you look at the futures, on the other hand, for 6S, which is the reverse chart for USD CHF, we are past this consolidation, and the price is most likely going to pull back from this and continue to go up. So my idea combining those two is that we can bounce back higher from this and continue to the next volume, while 6S bounces from this volume and continues up. So this is what I'm basing my current trade idea on. So if we go back on the smaller time frame, it's pulling back from the point of control, and I am expecting it to go and reach the previous volumes here. Now, I'm not buying it because the momentum is obviously sell. So I'm thinking about it is in the terms of, if it goes up, here is the next big resistance, here is the next big volume, where the active trading continued between buyers and sellers, trying to rebalance on the previous move. So if we go back here, I would expect this to become a resistance and push the price next to developing point of control on the higher time frame. So that's about 40 pips still. So depending where we're going to reject 835 or 880, I'm going to wait for confirmation. And it's going to be 1 to 2 or 1 to 3 restore words. If it goes there in the first place, right? It might just not go. So
it could just keep falling straight away. It's I think there's a good point from Forex Uncensored again. Too many opinions out there to come to predict anything at the moment on yen and USD pairs. I think that's across the board to a certain extent. All we can do as traders is look at what we normally trade and look at what we think would look like a good opportunity based on our edge, based on our knowledge of the market and the price action, which is what you've got right here, Anastasiia, with the Swiss, the USD Swiss.
Yeah, so I wanted to go here to this previous volume as far as USD 6S, the futures, go back to the point of control of consolidation, because this is on the Swiss franc futures, the point of control of futures market. So if it reaches this level at the same time, if this reaches here, then that's going to be really good. This is what I'm looking for now, but I'm not placing limit order because I want to see the reaction first, both here and here, before taking the decision.
Yeah, absolutely. I can see at the moment, I've just got it up on my screen here. So we are seeing some more bearish momentum on dollar yen. So coming down for those levels that I mentioned earlier, and looking quite strong on the 5-minute to push on down. So it does look like there's going to be more weakness coming into the dollar at the moment. So that could well hopefully play nicely into that gold trade. Hopefully we'll see a bit more bullish momentum come into that. We'll have to wait and see how that one plays out. At the moment, it just feels like it's a little bit stuck. The markets are just trying to see where the lay of the land is. Where is the best opportunity? Where are they comfortable with their positions? Where are the institutions comfortable with placing their orders as well? Let's remember as well that institutionals are not trading on the 1 minute chart. We are, because people like it, but also B, that's where we can get intraday trades. But the big institutions aren't on these charts. They are on much bigger, much longer term positions. So at all different levels, different orders and different transactions are going to be triggered. Yes, totally. Trade what you know and not a maybe in news like this if you want to trade. Absolutely that. The last thing you want to do is to get caught out by FOMO or just trying to catch something that's a half-hearted attempt. So yeah, most definitely. The Ubraj, I think, is what we have there. Ubraj is asking us to have a look at USD CAD. USD CAD is one of those that's obviously been at the forefront for the tariff argument for quite some time. So we can certainly pull that up. There you have the USD yen pulling down right now. Gold is kind of just sitting in this area at the moment, not really doing much. But let's pull up USD CAD. USD CAD, again, showed a lot of weakness. It came down and has basically taken out all of these areas of liquidity. It's now heading into a kind of a bit of a no man's land. So it's now a question of where can it find support. So we've gone past the most recent lows. And are we going to see an area of support? Where would I see support coming for here? Hard to see anything at the moment right now. I mean, really, the next area of support for me is probably all the way down here. In terms of solid support, that feels like a key turning point. If we take it out to the weekly, maybe we'll see something there. Yeah, again, that seems like the kind of area that might be a reaction zone on the weekly as well. It doesn't look like there's much else to trade. We've got this area here as an inside bar on the weekly. So there is definitely liquidity further down to be targeted. And if you look at how the weekly candle is right now, with only a day and a half left to go, that looks pretty damn bearish. That candle there, I don't see that suddenly bouncing back up between now and the end of the day tomorrow. So we may see a bounce next week. It's unlikely just to fall like a stone, but certainly that is a very, very bearish signal on the dollar right now, where we've taken out all of these areas of liquidity. And it at the moment on the weekly, it certainly doesn't show any signs of stopping. If we look on other time frames, again, 4 day has got an inside bar here. We've got a nice little kind of cluster of order blocks here, so there's definitely an argument for that area definitely to be a target. Inside bar there on the 3 day. So yeah, there's really, I mean, I would be looking to short this. Is the honest truth. Where would you short it? That's the $1 million question. You could have shorted it on this move and the pull back down. But anything else, I'm not really sure. It's just fallen. So you would want to try and wait for a pull back up and see when it does start to pull back and you start to see some bullish momentum pick back up again, then maybe look to try and get on the break and retest. But right now, all of these levels have just been taken, and USD CAD just doesn't look like there's it feels like you'd just be trying to jump on a bobsled going down the slopes and trying to jump on before it goes past you. So USD CAD, there's certainly a lot of momentum into it, but I wouldn't be trying to catch that one at the moment.
I'm gonna pull up USD CAD, Mike. Okay.
Please do.
This is yesterday, but I closed it in a small loss here. It would kick me out anyway, right? My stop loss, even with an increased stop loss, it would be too small. It ultimately did go down. Now I had the zone here between 41.90 and 41,670. And this is if we go back towards this is a lows, and this is the previous volume here. So this point of control, from this zone, which was already rejected from the downside. And the upper volume is the point of control of this zone, which was also rejected here slightly because obviously it collapsed afterwards. Now the next zone that I'm looking at is only down here. So like you said, there is nothing that I also can see for myself below, above the level 40, let's say 695. So I think that we would continue to drop for about 70 pips, 65 pips from now. But if the price would give a pullback, so going lower now as we have the zones, if the price would give a pullback, let's have a look at how the volumes were distributed on this move to the downside, because this was a volume, this is the move that was a breakthrough move from the previous lows, from the previous volume. This is a swing low on the 4-hour time frame as well, right? So this is the price broke at. So the next high volume node is about here to here. So if the price would give us a pullback to the zone, let's say if we look at it like this, from there 550 to 770, I think this is going to be a nice zone for a sell. So maybe something like this would actually be worth looking at. So about 96 pips from there, and about, I would take a fairly generous stop loss with such volatility, and I would not be greedy and would go just one to two risk reward on this one.
Yeah, no, that looks like a really nice clean setup, and you know that's what we're saying. This kind of market, look for something that's clean, look for something that's you know, that's obvious, and makes sense to you. Okulu, spamming the chat will not get us to look at your charts, so bear with us. We will go through the various different charts. We haven't had a look at the indices yet, Anastasiia. So Andrea is asking us to have a look at the NAS. I haven't had a chance to look at the Nasdaq yet. Have you had a chance to see it today?
No, not yet. I was looking at gold and didn't have a chance, but we can have a look at it together. Now I'm gonna place an alert on this one. Actually, it's gonna make a lot of sound. We'll keep an eye on this one, and silver and 6S as well. They're still going. So let's have a look at Nasdaq in the meantime while the setups are getting ready.
NAS again, to me, just looking at that chart on your screen right now, that's the daily. It still feels like it's going to fall further. I don't know what you think, but that doesn't look like there's much strength in that.
No, not at all. It does look like it's going to continue to the downside. The question is only where would we be able to get in. So for the daily, it clearly looks like we're going to continue, because if you look at just the price action, the huge week yesterday, the liquidity from the previous highs, it actually was a beautiful head and shoulders. But again, there were so many beautiful setups if you look past it. But I was just saying, we had a discussion about it in with my community, that you can see how good it looks on paper, but at the moment, catch it not only from the technical aspect, but just a spread, a slippage that you get, is if there is a very small chance that you will be able to work this trade out and get actually profit, because the slippage may not allow you to enter the trade. The spread may kick you out with a stop loss. Not placing a stop loss is obviously also a very risky option in this one, right? So it's very difficult just from the aspect of liquidity in the market at this moment to even work the trade out, although you can see it perfectly aligns with the strategy. So that was a beautiful one, but again, catching that is a completely different story.
Exactly. Gold is finally making a bit of a bullish move. It's on the 15-minute looking like a nice setup. Obviously, there's still 10 minutes or almost 11 minutes to go on the current 15-minute candle, but gold is starting to finally I'll just quickly pull that up. We're starting to finally get that move. So we've created this low here. We've left that liquidity that I marked out earlier. and it's now just waiting to see how strong can this 15-minute candle close. It's taken the low of this inside bar. It's now taken the high. It's reacted from that high, and now it's just a question of, can we push on up? Unfortunately, at the moment, it's showing a bit of weakness, but let's see. We've still got multiple inside bars here, so there's still a lot of liquidity, and we're still sitting above the 200 EMA. So I still feel like we're in an upward trend overall. If we zoom it out, yes, there was a lot of chop, but as we both said, it feels as though the commodities are going to have some strength coming in. So we'll see how that plays out. On the 5-minute, it looks less appealing, but quite often the 5-minute is not necessarily the be all and end all on gold, and it can sometimes fool you into thinking one thing when reality, for example, on the 7-minute, you have nice wick rejections pushing onto the upside with a lot of liquidity higher up here, with all these inside bars looking very nice indeed. So there's again, your own edge, your own analysis, but for me, still looking good for longs on gold. Sorry, Anastasiia, you were looking at the NAS.
Yeah. So in terms of NAS, I'm looking at two options. We have the previous majority volume of here. So this is, if we place the volume profile on the higher time frame, well, 15 or higher is going to be the same, right? The big volume node is right about here, this one. So either the price is going to come back here and it might reject it from here, but I would still be looking for the price to break the previous lows before entering. Now, another option is that it's not going to go there and it just breaks the lows, and I would be looking for the nice head and shoulder spot in here, because the current volume from this stop that the price is trying to do, it's trying to reverse it. They're trying to buy it back. The volume of this is 18,937. So I want the price to be below it. I want the price to leave all this consolidation behind, above it, breaks the current lows on the smaller time frame, and then go for a sell. Another option, again, if we reach this high first and then we break through the same volume from the same lows and then enter in a sell. And I would prefer this option, for one simple reason, because I don't want to see this happening, because then I would place a stop loss somewhere here, obviously, right? And it would be less fortunate. So I would prefer this option. So it goes from this point of control here now, then it breaks a low, and this move to the downside would be a sign for us that it starts there, or continues the downwards momentum. Depends how you see it, right? Yesterday or today. So this is my preferred option. This is how I see Nasdaq.
Absolutely. Some people do trade without stop losses. Forex Uncensored. We can't. What's the word? We can't judge them for it. Some people simply have that approach. Yeah, I mean, it's not something I would ever do. I know it's something that Anastasiia definitely wouldn't do either. But some people seem to feel it's beneficial. Obviously, it needs a lot of babysitting with a trade when you've got no stop loss, though. So yeah, gold has broken down. Just bring that up very quickly for you guys. So gold, that trade idea on gold has been negated. We've broken down. Next level of support, at least on the 1 minute, is going to be down here. Whether that holds or not, I don't know. I'm still quite bullish on this. It's just about whether you can find an entry that you're comfortable with, and that you're comfortable with from a risk perspective. Let's have a look at the other indices as well very quickly. So the DAX, as you can see, has closed part of the gap, but there's still a long way to go. So there's still this gap on the DAX from overnight, and we are quite away from the 200 EMA. So there's still certainly more room to be had on the DAX. But as we said, guys, you've got to trade what you think I suppose in a way, almost, Anastasiia, you've kind of got to ignore the noise and ignore the volatility to some extent, and just trade your system, trade your chart. And if you're not comfortable, if the charts are moving too fast, take a moment, step away, and kind of reassess. Would you say that's maybe a sensible approach?
Yeah, but I would say that it's a sensible approach after already the volatility has come. Well, I mean, after the news. Like, I wouldn't do this during the speech of Trump, for example.
Yeah, of course. Yes.
But
Yes.
right now, after we already, have these huge moves, then definitely I would say just don't get stuck in your own perspective. Trade what the market shows you, not what you think. Not like you think that, oh, it's gonna reverse. It's been falling so long. It's gonna reverse now. I definitely can, expect it to go up now. Because how long can you be shorting? Don't short on the lows and so on. I would say trade what the market shows you. If it shows you the weakness, trade the weakness. If it shows you the strengths, trade the strengths. Don't try to, put their perspective, your own perspective onto the charts.
Absolutely. You've got to trade what you know and what you're comfortable with. That's the most important thing. So yeah. Let's see, what else have we got in here? Everyone is still recovering from the Trump chaos, Fabian says. Yes, they certainly are. And William, good to see you, William. The only thing I learned is when you doubt, then go away and wait for the next opportunity. Quite right. So yeah, absolutely. Great. I'm just having a look to see if there's any other questions. Silver keeps going down, apparently, Anastasiia. Do you want to pull up silver very quickly?
Yeah. I know. I actually wanted to still catch this comment. Wait, here that it doesn't make sense. And yes, and says, I mean, we all can be wrong, right? Yes, and we can all be wrong, no matter how long have you been trading. Besides this, something makes sense for you, something makes sense for me, right? For me, it doesn't make sense to long such a bearish market. Like this momentum and trying to buy it back doesn't make sense for me. And buying back the current situation in a U.S. economy also doesn't make sense for me. Because the tariffs are going to have an effect. And no matter if you are talking about short-term effect, a big-term, long-term effect, it's going to have an effect, a negative effect on the US economy right now. So for me, for example, buying back NASDAQ, buying S&P 500, buying US 30 right now, it doesn't make sense. But again, if it depends what you look at. Perhaps you look at the 1 minute time frame, and then you see this, or 5 minute time frame, and then you see the price going back here, then yeah, sure, I do see it continue to go back up here, but I just don't trade this kind of small moves. Perhaps you do it, and then it depends on the perspective.
Absolutely.
So, for example, silver, we're going to have a look at in a second, because I actually was trying to enter the trade and I closed it at break even for a second. But this is S&P 500, and also doesn't make sense for me, for example, to buy it, right? We are clearly below the lows. And a couple of years ago, I would still think, oh my God, but it's been dropping so long already. It can't be dropping forever, right? Now I should try to catch reversal. And I lost so much money on this, and this is what I've learned. So I said in the beginning of our stream that it can continue to go longer that I'm able to pay for it. So it can continue to go lower, much longer than I can expect, predict, and find sense in. So right now, I'm like also for S&P 500, for example, we are kind of consolidating, but I would also be looking for a short. But again, the point of control is in the middle of this consolidation, and I would prefer to see something like this happening. So I want the price to go even lower, and then here or here, I would be looking for short like this. Something like this. S&P 500. I do like NASDAQ more, to be quite honest with you. But I do see short on those both. And for silver, I was trying to buy it here already. I did close it with like 6 ticks profit or something, just because this is futures. And if we look at their CFDs, it did not reach the low yet that I'm expecting. So it was a little bit fast with this one. So I want to see the price at 32.55. This is the next point of control of this consolidation. It's a point of a developing point of control of the months. If we look at the distribution of the volume through this move to the upside, also this is going to be, if I'm not mistaken, its point of control as well, at least from the first look. Yeah, this is a point of control also of this whole move. So I want to see the CFDs going down here, and if they do, then I'm going to be buying futures as well, and the CFDs too, the silver in general. So it's very close here. So this is something that I want to see on silver, and then the target would be this previous accumulation on the move to the downside at least, but maybe at most as well, because I want to be kind of safe. Another thing that I've learned from trading through COVID is that do not expect, like, try to catch the sure moves to where it definitely goes. Don't expect it to go and recover, for example, long time, because the market may not be ready yet to recover. Besides this, it might just come down here again, get you a break even, and then go up. So it's better to just find shorter moves than trying to expect, trying to predict the longer effect, because the longer effect, we don't know yet what this is going to be after the policies of Trump.
Quite right.
So yeah, that's going to be the point of control, 33,160. So I'm going to be looking for something like this in silver happening. And also about 1 to 2 risks to reward I'm going to be taking.
Yeah. Very nice trade. Very nice setup. So Anastasiia, I think I asked you this before, but normally you don't set these. Do you set these as set and forgets? So kind of a limit order or a stop order?
Stop order I don't use at all. I don't find them useful, to be quite honest with you. The price may just create a wick and just wrap your stop order and go back to the stop loss. So I don't trade personally with them. I also don't really recommend, if someone comes to me and asks it, I usually don't, recommend it. Limit orders I do trade, especially if it's a swing idea that I'm looking at, it's a long term, then I have a big stop loss, I have a huge TP waiting, and then, I can definitely use limit orders. With the current volatility, I wouldn't do it. I would wait for confirmation first, though, because again, I don't want to see the week up until my stop loss and then going back into my profit. That would be painful, and that's not what I want to see happening today.
Exactly. We want to avoid that at all costs if we can at all. Most definitely. LJ's just mentioned something about USD CAD trying to push up off the 8-hour order block, and I can see that as well. It's broken past the previous low and it's now dipped into the inside bar on the 8-hour. So again, it'll be just looking to see whether it USD CAD, yeah. So it has certainly got some legs to it. I mean, the 8-hour candle currently has 3.5 hours left on it, so still plenty of time for it to chop around. It looks like it didn't open up, or it did open up without a wick, but it does actually have a wick on it. I would be drilling down to see where's their reactions, where have things moved around, and at the moment there's no. For me, if I'm seeing a change of direction, I really want to see either a strong wick rejection or an engulfing candle to the other side. I want to see that on some time frame somewhere. At the moment, I'm not really seeing it. On the 1 hour, we've currently got, if it stays as it is, it will be an inside bar, so it'll be leaving liquidity on either side of it. If we go down to the lower time frames, the 15-minute, it started with this very weak inside bar here, and I think it started without. No, that has got a wick on it, but just doesn't feel very, very strong as a push back up. I think yours, I'd be curious actually. My kind of area of reaction is probably going to be somewhere here, which is what the 1418 1418 to 1419, somewhere like that. I'm trying to remember where you had yours on USD CAD.
Yeah. So
Yeah,
I'm looking for
roughly the same area.
Yeah, I'm looking for the rejection now. Actually, it starts slowing down 1 minute, but I want to see the kind of reaction on 5 minutes as well on this one.
Yeah.
And supposedly either here or up here, I want to see the rejection. So something in this area, and then selling it for another 80, 90 pips, depending on where the entry is going to be.
Yeah. We are not from New York, Amith. No. We're based in Europe.
Way too early.
I didn't get much sleep last night, but that's not because I'm in New York. So yeah. Amith is asking, can we look at Bitcoin as well as NASDAQ will dump? I'm expecting Bitcoin to go down as well. Yeah, we've already looked at those, Amith. So yeah, we're in agreement that both NAS and Bitcoin look to be showing more weakness for the most part. So yeah, I'd say we're in agreement on that one. Anastasiia, we did have somebody earlier asking about pound yen, and pound yen's an interesting one for me, because if I look at the strength scores for today, the pound yesterday closed with quite a bit of strength. The yen also closed with a lot of strength, and it is still showing strength today. So the pound yen for me would be a tricky pair to trade, because part of me would be expecting them to cancel each other out somewhat. I don't know what you would be expecting on it. I mean, I'm looking at it on the 5 minute and the 15 minute. Yes, there was moves on it just like all the others, and the pound has shown quite a bit of strength today, but that strength is starting to weaken. So I'm not entirely sure that the pound yen would be one that I would want to really get into. There's been a lot of ranging. If you look at it, there are certainly areas to look for, and we've come down to those lows, but I'm not sure we're necessarily going to see massive moves on it. What do you think?
To be honest with you, I wouldn't also trade this, because look, like right now we are in a range, and there's the VRVP tool that actually shows that if the VRVP is balanced in one area, and this is where the price is, it's essentially the range, because we see there is no volume above or below. So in all this move from the beginning of March already, we've been staying approximately in the same area for GBP JPY. So if you look at it on the 30-minute time frame, for example, we are trying to bounce back from this zone. So it kind of looks like this consolidation, then come back, there another rejection. But the problem with it is that we have another volumes above. So we are kind of stuck in between those two, and I probably traded because we are literally in the middle of the range. Like the one thing that I don't like to trade is when the price is ranging and you are trading approximately at the median on the range, because the price usually is like a magnet, it comes back to it, but you have 50-50 chance where the price is going to go. So this is approximately what is happening now. We have equal chance that the price is going to go, in my opinion, to 196.90, as much as we see now 195.67, like maybe not, but now 195.000.
Yeah.
Here, so it's I would see it ranging here, or if it comes down here, this is where I would look for the first trade, to be honest with
you. Yeah, it's you're essentially, it's a bit of a coin cost. If you're going to trade it, you'd almost hedge it to go either way, because otherwise it's very much in the middle of that range. So not an ideal opportunity to catch. William, I am from the UK, but I'm now based in Europe, and Anastasiia is from Ukraine and also based in Europe as well. And LJ or Lack, I'm not sure what you agree with, but I'm glad you agree. Thank you. It's always nice to know somebody else is agreeing with you. Makes me feel just that little bit better about my my attempts to appear like I know what I'm talking about. And Amith, my only advice to you would be don't trade from a phone and don't try and look at charts from a phone. We've all tried it, and I personally don't recommend it. But that's my own view. So yeah, Yagami, we have just looked at USD CAD. So if you go back a few minutes, we had a look at the USD CAD just a minute ago. So go and take a look at that, and you will see our thoughts there.
Okay, I'm still waiting for it. It's trying to show some weakness, but it's very slightly. You see, it's kind of stuck here.
Yeah.
I think we're gonna go a little bit higher, and then only rejection from
do you feel, I mean, part of me feels as though that, bearing in mind that we've got this news coming out in just under 3 hours, let's be honest, it's 10:40 a.m. GMT. So London has barely been open 2 hours. It kind of just feels as though, the European markets are just positioning themselves, Asia's coming to a close. Just feels as though people are just positioning themselves to wait and see what the news is going to be later on this afternoon. We've got a lot of PMI news that's already come out for Euro, and we've got the USD PMI coming out this afternoon as well. So it could be quite possible that, this morning session is just going to be a bit of a range, a bit of a consolidation after the chaos that was unleashed on us yesterday.
Yeah, there is a chance for it. Yeah, like people are also uncertain, and what I've seen from the high volatility situations is that obviously a lot of people get liquidated on the stop loss or on the margin call. Depends, but a lot of people out of the market. A lot of people lost money yesterday, and usually after that, their liquidity in the market gets lower, and the price is either extremely volatile or it's ranging, waiting until more people are going to get back to the market. And some people don't have money yet to get back into the market after they've been liquidated, and the other people don't have confidence yet, don't feel comfortable. And it needs some time to pass until people are like, okay, I'm going to give it another try, and then they bring more
exactly that. Liban's mentioned about Euro Pound. I've just got that up on my chart, Liban. I'm looking at the half an hour, and that does not look like a nice chart to trade right now, in my honest opinion. We've got it here on the right hand side of my screen. Silver is still sitting here. I was just looking at silver on the 15-minute. Hasn't really done anything just yet for me to see anything too much. On the 5-minute, it does look decent for buys, actually. That is a nice setup there. So possibly buys on silver right now. But if we look at Euro Pound, again, just very much in a range. No real breakout there, and nothing really to suggest where we want to go. Again, Anastasiia, your thoughts on that one?
Euro Pound, I don't usually trade this, to be honest with you. I start with my majors, but we're gonna have a look at this. That looks horrible.
It does, doesn't it?
It looks so horrible, but it actually looks better than GBP-JPY, to be honest with you. So GJ looks good for me. Like, for example, Euro GBP is at least at the previous volume. So if I'm going to clean up all my drawings, we'll see that this is a point of control since the beginning of March. So the majority of the volume was traded here. This is the same zone that held yesterday after their after the announcement of tariffs. We see that the drop from here. So at least there is a chance of some kind of continuation of rejection from the same zone. So it kind of looks better, but also I still wouldn't trade it again, because we've been here for so many times. And EUR is also both European currencies. They do have different tariffs, obviously, from Trump, but it's like we are like they're right now. I think they're going to be waiting for the effect, both of those, because we are located in the same area for UK and Europe, and it's going to have similar effect and intertwined effect on what is going to happen with Europe, going to happen with UK, and this the other way around in certain degree.
Mm.
For example, Japanese USD JPY or Euro JPY, I think would be better bet because at least they have different economies and they are not so
Yeah.
much connected. This one, I think, is going to be just consolidating for a while.
Yeah,
What you said,
I
and
completely agree. You know, and there's now, you know, if you look at it politically, because of what's been happening geopolitically, you know, the UK and Europe are, on the face of it, kind of warming with their relations, you know, to try and gain a closer ties, not only because of the tariffs, but also because of the various situations in Ukraine, in Gaza, and everywhere else, frankly. So there's not so much of a divergence between the pound and the euro right now, as you say, because they are very closely tied in terms of what's happening elsewhere that might impact them. So yeah, that one doesn't look like a particularly great asset to be trading today. My personal view, again, I'm just going to pull it back, is I would be looking for the divergences. So I would be looking at things like USD CHF, USD JPY, USD CAD. Actually, on this basis, I would be cautious about. Certainly for an intraday trade. I do like your setup on USD CAD, Anastasiia, but I do wonder whether today they might just somewhat cancel each other out to some extent. But this is where I'd be looking for opportunities. I'd be looking for the extremes. I'd be looking for, you know, either a pullback or a continuation on some of these pairs. So USD CHF, USD JPY, Euro USD maybe, but also then maybe, you know, the CAD against the CHF or the JPY as well. Those, you know, those are going to be ones where we're going to potentially see more opportunity. So if we take a look at CAD JPY, for example, there we can see we've broken past these lows. We haven't broken past these ones here, so we're still in an area of support on the 4 hour. But if we take it down to the daily, we can see, you know, there's maybe an opportunity for more buys coming in. You know, the CAD took quite a beating. If we take it down to the CHF level, CHF is looking very, very strong against the Canadian dollar, and it's broken past these levels and is really going for it. So if I was to do a combined analysis between the two, I would be cautiously trying to buy the CAD, because again, just looking at that, how that sells off, looks very, very weak against the Swiss franc. So, you know, these are the ones where you see the divergences, and you might see on an intraday basis, you might see something pulling back up, back to the mean, and then selling back down again, for example. But you've got to wait for it to stop. You've got to wait for it to pull back, and wait for those opportunities to come into play. One person was asking about Aussie USD. Now, Aussie USD has just flown today. The Aussie dollar needed some strength. It's been on quite a pullback recently. We were talking about this earlier on the AlphaBeta lab, and we've broken the highs that were created from yesterday's news, and we're pushing on higher. So certainly it looks like the Aussie dollar will continue to show strength. And I'm, from my own analysis, I'd be looking at further bullish momentum on that, because here on the daily and the 2-day chart, we opened with perfect equal highs. So candles came up, and I'll show it on the chart so you can see it. Price came up and came straight back down the next day. So there was no kind of mitigation here. There was no kind of, check, right, are we happy with this? So that means that this level here is a really significant level of liquidity that price will be looking to find equilibrium, should we say. So yeah, for me, it looks, I mean, if you look at it on the daily, it looks like a lot of bullish momentum coming into the Aussie dollar against the US dollar. And you add all of these things together, it all, for me, adds to a greater sense of dollar weakness across the board.
Yeah, I agree.
I see there's a lot happening in the chat. Let's just make sure we don't get lost.
Someone was
So yeah, there we go.
Yeah,
sorry, go on.
Someone was asking to go through the DX5 for myself. I think we are going down because if we look at this on the weekly time frame, right, we are clearly in the same range. We had the try to break to the upside, then Trump came. This is exactly the period of when Trump became a president. Look at this. Then it was still high, and then he announced tariffs. And after inauguration, this is inauguration. Look, this is inauguration, 20th of January.
Yeah.
To this, dollar became started to tank, and I think at least we are going to 99,800 to the previous lows. I think we have a long way to go still. So this is why I would continue shorting actually USD pairs as well as JPY, and I think the Euro USD, GBP USD also not ready to stop yet if US dollar is going to continue. I think if this week is not going to be like here, this will be a huge candle, but it is possible. Then the next week is going to end up here.
Absolutely. Talking of all of this, obviously we're talking about the charts, we're talking about what we can see from a technical perspective, but all of this, let's not forget, is all down to the fundamentals. And it does remind me of a conversation, a workshop that we had yesterday with Dirk. So those of you who are regular viewers will know Dirk very well. He is a regular here on the The5ers stream. And we were very lucky to have him join us for our very first live workshop over on the AlphaBeta Lab. So for those of you that don't know the AlphaBeta Lab, let me just quickly bring it up on my screen for you. So the AlphaBeta Lab is the educational community by traders for traders, and it's completely for free. It is backed by the The5ers, so it is supported by the The5ers, but it is for anyone from any particular trading background. So if you're trading futures, if you're trading even options, if you want to trade options, that's absolutely fine. Everybody is welcome. It is completely free. And we had the workshop yesterday with Dirk, which I would highly recommend everyone go and check out. So we had it here. The recording is there. You can go and check it out. Dirk goes through the fundamentals and the macro outlook of what we're looking at right now. Really interesting insights for me personally. Both myself and Alex, I try to take an interest, but we both certainly see it as a bit of a blind spot for us in terms of our trading. Always good to have that perspective of the fundamentals. You don't need to know the ins and outs of every economy and their GDP and every single economic news that's going to come out and what the reaction might be, but it certainly gives you a good idea for potential investments and potential perspectives. So all I would say to you guys is go and have a look at the AlphaBeta Lab. Alex will tell you a little bit more about it now, so you can learn just kind of an idea as to what we're talking about, to give you a better understanding.
Traders, stop going at it alone. Now join the AlphaBeta Labs, a free online community built by traders for traders. Share your insights, drop value, and get rewarded for all of your contributions. Now there's no limits, there's no gatekeeping, all traders, all markets at all levels. So click in the description below and join us right now.
God, he says it far better than I do, doesn't he? All that energy and enthusiasm. So yeah, I mean, guys, the community really is there, by traders for traders. We have the live channels where we're talking about our trade ideas, sharing all the different ideas. We've got Daniel there, who's done a great course on trading gold, which has proven to be one of our most popular courses. So we've got some courses that are being built at the moment with Jonatan and Alex, but we've already got 3 courses live in there as well. Again, these are free for you to use, free for you to go through, so you can get learnings and understanding. So, there's loads of content. There's loads of incentives as well. So if you're not part of the AlphaBeta Lab yet, I really strongly suggest you do it. Anastasia's there as well. Anastasiia, you're sharing your own journey this year as well, aren't you?
Yeah. The journey, and I'm also going to be posting the tariffs overview actually today, the breakdown. So for those of you who are wondering the effects of the tariffs, is going to be posted there later today when I finally put it all together. It's a lot of information, but we will be able to we will be able to sum it up. So to know what to expect, go to AlphaBeta Lab. I'm gonna drop the series of posts there today as well.
Excellent. Yeah, and here you can see Anastasiia starting her $500 into $1 million funded is the challenge she's taking on this year, which you've already started, haven't you, Anastasiia?
Yeah, I did.
Yeah, so Anastasia's taken a 100k high stakes account with the 5ers and is working her way through to get to $1 million funded. So there's loads of reasons to come and join us at the AlphaBeta Lab. If you've not joined us already, make sure you do so. The link is in the bio, in the description, and it's also on your screens right now. In just over half an hour, guys, we are going to be doing our weekly AlphaBeta Lab podcast. Which you guys are all invited to join us for. This is where we're not going to be looking at the charts. We take a bit of time away from the charts and we start discussing trading related topics, but rather than doing technical analysis, discussing all the different psychological aspects and other ideas and techniques and all these different wonderful things that that we think is also very useful for you guys. So do stick around for that. I'll be joined by a bunch of the guys. I believe we'll have Rich joining us, and we'll have Victor, hopefully, Jonathan a little bit later on, and Alex as well. So do make sure you stick around for that. Let's have a look back at the charts, and let's just see. I'm curious to see what is gold doing, because that trade idea that I had did get somewhat negated, but actually it hasn't really done much, has it? If we look at gold at the moment, it's just continued to barcode really, and hasn't really done much at all. Let us know, guys. Are you anyone in any trades on gold at the moment? I'm really curious. I'm, if I was looking on the bigger time frames, I would still be longing it. We haven't impulsively come down to take this inside bar yet. And if we look at it from the higher time frame, we haven't really broken any structure. We haven't, come and taken the area that we created as support off the back of the news yesterday. So gold is still very much sitting and not really doing much, proving to be quite a tricky one to trade.
Mike, I'm sorry. I'm going to take it over for 1 second. I just sold
Go
silver.
for it.
So for those
there you go.
wondering, actually, we've talked about silver. I did sell it. We just had a lot of volume accumulated here, so that I was looking at it while we were speaking, and it was slightly breaking the slow. So we had the point of control moving lower, and it's pulling back now. So I think it's a good moment still, because I'm waiting for the 32,690 level on futures and 32,55 level on CFDs. So I am actually in the short right now. And then
Excellent.
we'll be looking for a buy it, but it depends on the rejection. If you're going to get some kind of rejection here, I'm looking for a buy, but right now I'm in a sell.
Yeah, excellent. Great stuff. Let's see, just want to keep an eye on the chat. Yeah, Laura, you've got the link there. Thank you very much, Yasin, for sharing that. Let's have a look as well. Yeah, absolutely. You can learn a lot. Thank you very much, William. Really like this comment from William. William's one of our regular viewers across all of our streams and across all our channels. Says, thanks to your sessions, I upgraded my results from profit factor 0.59 to 1.51 and a win rate from 52.2 to 80%. William, that is some really, really good improvements on your trading scores. So huge kudos to you. I think, it's great if these streams are helping you with that, but I would also say a lot of it's obviously down to yourself, and taking the lessons and adjusting your trading to work to your benefit. So congratulations to you on that. Really curious to know, over what time frame have you managed to do that, William? Let us know. I'd be really interested to know how you've managed to do that.
80% is really good. 80% is very solid. It's really rarely seen if you look at the longer perspective.
Absolutely.
Really, you should be really proud of yourself. And again, it's good to learn, but it's a lot of work goes back to you. yourself, right? Because we can share our knowledge and experience, but how anyone takes it and the work that you do behind the scenes is always yours.
Yeah,
So,
absolutely. You know,
super amazing to hear it.
you know, if you speak to my wife, she'll tell you that she thinks I'm talking absolute gibberish and just garbling on to you guys. So, you know, if you're learning anything from me, then great. I'm not sure she would agree that you are, but it's really down to yourself and your own journey, which we're very grateful to hear.
Humble Mike.
Silver is really well. I try. But silver really is coming down quite nicely on the CFDs as well. Anastasiia, really coming down.
I actually did move my level, so I'm actually waiting now. Moved it to break even. I'm waiting for 32.48. Then from here, I'm gonna be looking for a buy.
Yeah, gold is doing something similar as well. Gold is starting to sell off as well. So it seems the gold gods were listening to me when I said there was nothing happening. Somebody was obviously listening and decided, right, let's move things around a little bit and see how it plays out. We have got a few people in buys on gold, so I hope, guys, you've got some good stop losses in there, buying in at the 3124 level, a couple of you. So fingers crossed we can see a bit more bullish momentum come back in for you guys. Streamers highlights, is it good to enter in a short position on gold now? Personally, I wouldn't, until we break the structure that, frankly, I would say until we break the structure that was created yesterday overnight, I wouldn't be shorting gold. I just feel like we're in a very, very bullish market for gold, and trying to short it where we are right now, I don't think there's much room for it to go. I don't know, what do you think, Anastasiia? But I can't see gold shorts, certainly not for a particularly extended period of time.
Yeah, I agree. Silver is tanking, but the gold is approximately holding the same level, right? If you look at the futures, for example, it's even more clear. Like on the CFDs, you can still wonder, perhaps a triangle, perhaps it's going to break through now. But if you look at the futures, it's straight line where it was rejected. So I really don't see it being bearish yet. Perhaps it can be, but I don't see the entry, to be honest with you. Like I see that it's rejecting from the same zone. I wouldn't touch it now.
Yeah, absolutely. Trying to get into a sell on gold right now, you'd be trying to just jump on the bandwagon, like I said earlier. You'd be trying to jump on a bobsled as it goes down the hill already, and it could have already gone without you. Certainly, it's showing a lot of bearish momentum on the 1 minute, on the CFDs, so I can understand why you'd be tempted to get in. But my experience with these things, you've always got to try and make sure that you catch it when it's moving or before it moves. Because trying to catch a market order and that sort of thing on these can be very, very tricky indeed. It has caught the low of the previous 1 minute move on if I just pull that up on my chart. Sure. So it has broken this low structure here, and so now it's a question. It's in that move, it has also taken the inside bar that I mentioned on the 1 hour. So that level has now been broken, and it is now pushing up again. Now, we've had this bearish candle here, which at the moment it's struggling to break, and you can see it's rejecting off there. So this bearish engulfing candle suggests that it may still push down a little bit further. Time will tell, but I wouldn't be getting into anything just yet because it hasn't broken this final area of liquidity on the 1 minute. So there's still liquidity for it to be taken on the 2 minute, for example. That last area on the 1 minute is still a 2 minute inside bar as well. So I would be very, very cautious on gold right now. For me personally, it is still long, but it's too choppy. It is too choppy, and silver is still coming down, as we can see here on my left-hand chart as well. Let's have a look at crypto very quickly, because I know we looked at it earlier on, and I know many of you have got crypto positions. If we look at Bitcoin, let me just open this one out. Crypto as we said earlier, hasn't actually done much since we've been speaking about it. Is pretty much been ranging by the looks of things. But yesterday's candle was a very, very big bearish engulfing candle, suggesting that we're going to be going lower. So if you are holding any Bitcoin, be prepared for a further dip, I would say. That's kind of my feelings on it at the moment. We look at it on the 1 hour. Yeah, you can see it's really just ranging since this morning after the news overnight. One thing I did notice, Anastasiia, and this is one that we were talking about earlier, was oil, which you mentioned about during COVID. Now, oil has dropped 3% since the news and looks to be going lower. I know it's something you obviously traded during COVID. Is it something that you still trade at the moment?
Less, because of how the volatility of oil changed, but as there was a period of time when I traded oil majority of the time, so it was about 90% of my oil trades was oil. When I first got on the 5ers sessions in summer, I was still trading actively oil, then less and less, because it's the behavior of it changed slightly, so I didn't really, the statistics said I should have stopped it, and I stopped it for now. I do trade it occasionally, although much less than before. So right now what we see on oil is that oil is very volume-based asset. Like from all the assets, oil actually respects the volumes, one of the best across all the different kinds of assets that we can trade. So what we see here is that we have the volume, like the volume zone here, that we're definitely going lower for oil, because we did break the previous lows as well, the previous volumes as well. We did not reach this one yet. So I think until we reach 68.25, 68.05, I would still be looking for short. Now, I don't have the entry here yet because I didn't look at it, as I said, for quite so often as before. So if the price would pull back here, then yeah, because what we see is that this was a zone that the price rejected. This was a zone of the previous lows of the consolidation as well. This is where the point of control was created when the price was pushing down. So to push the price through, sellers needed a lot of volume injected in the market here. So we have the high volume node and the zone. And if the price would give us such a blessing to go back, this would be a good entry. But other than that, knowing oil is probably just going to continue to drop here. Now, in this zone, it would be already interesting to look for the reversals. Now, I need to be very careful with the reversals, obviously, because of the tariffs, news that are coming out. We have oil inventories every Wednesday, so that's already passed. So what we see, if this would be some kind of head and shoulders consolidation, some kind of confirmation, then between 68.25 and 68.05 would be looking for a buy. Because, again, we would reach this consolidation here. And oil usually likes to respect it. The same as the previous highs as well here. So this zone was quite important for oil for a while, as we can see, right? So if you zoom out, this is the zone that is trying to reach, and it's not quite there yet. There we go. So if we would reach this and give some kind of confirmation, oil also, a small tip, it likes going beyond certain level, create a wick, and then come back to the same zone again. So I would really be looking out for confirmations in this zone before buying it. But 68.25, 68.05, and this is our zone to look out for.
Yeah. Excellent. I've seen a couple of you guys asking how to join the AlphaBeta Lab. So if you join the link that's in the chat, or go to the link that's in the chat, it's www.thealphabetalab.com, and you will see a sign up button on the homepage there. So you can check that out there. And you can also find our YouTube channel. We are live streaming every morning, Monday to Thursday at 8 a.m. GMT, and also on Fridays, usually from 2 or 2:30 p.m. GMT, to do our weekly roundup. I see our good friend Akram has joined us. Good to see you, Akram. Always a pleasure to see you in here. And I see that we've got some good ribbing going on right now for our other regular Haresh with his crypto positions. Haresh, don't worry, we are all well. I am certainly feeling the salt in the wound as well from John's comments. Crypto has not been kind to me, but as long as you're not trading crypto with leverage, you've got to look at crypto as an investment. Look at it as an investment vehicle. Don't look at it as a trade vehicle. And what goes up must come down. At least that's what I'm hoping. Eventually.
My silver position's closed, and I wanted to show something. Maybe that's going to be a good tip for our viewers as well. So how do I just decided to add to the position just for a couple of extra ticks? Now, what I look at when I look at the added positions is obviously one thing is footprint, but that's for a different time. But another thing is volume. When I was entering the position, you guys saw that the volume profile was here. This was a point of control, and this volume was just being accumulated. And the decision to enter the trade initially was because the price was actually breaking through this. So we see that it was like struggling, and I entered the trade right before the price pushed down because it was below the point of control of this. As the price goes along, we see that we had a pullback, and then the price started dropping. So I just added to the position right here. Let me zoom in so everyone can see the chart. I added to the position right here, you see, right before the continuation of a drop. So it was right here. Why? Because we also had the pullback, and the point of control moved already lower. So this is where the point of control is. This is where the majority of the volume is. So the new volume has been accumulated, and the price just was rejected it. So I was expecting the next push down to the next volume, because the price usually moves from volume to volume. And as we can see, it moved from this volume to the next volume here. So essentially, to sum it up, I look at how the volume moves, and if the price, the volume moves down and the price holds below it, like on this candle, it was already closed below it, holds below it, this is a sign for me to add to the position. That's it.
Anastasiia, we've had quite an impulsive move on gold, actually breaking the previous lows that we had earlier today. Certainly curious to see what it looks like on your futures, because I know we're just breaking past that area that you mentioned. At least that's what it looks like from what I can see on your screen share. I think we're really reaching a point where gold is potentially either going to break further down, or we'll see finally some reaction to the upside.
Yeah.
What can you see on there?
I see that it's too early to buy it, so I wouldn't buy it because the price is. I wouldn't also sell it here, to be honest with you, because we are in the some kind of decision-making point. We have huge weeks here, so there is a possibility that the price is just going to create another week and go back up. Now, question is that we had a kind of big momentum to the downside in the past few hours, right? So we had a try to buy it back, now it failed. So this creates a good wall of orders here. So I would probably look for maybe some shorts in this area back to here, but also not more. I would operate in this area until the price breaks below this zone. So on 31, 33, I'm looking at the futures chart right now. But until that, I wouldn't be, expecting more from this.
Yeah,
because we are still in the zone, and as we can see, it's creating the big kind of big wick as well.
Yeah, interesting on the on gold on the 1 minute. So you can see it here. It looks like it's a very impulsive move to the downside. So therefore, right, okay, we've broken structure, we're going down. But if you notice how it immediately comes straight back up. So quite often it's easy to think, all right, we've broken structure, we've got to be going down. But actually quite often with gold, if we look at it on different time frames, it creates a significant wick and a massive wick rejection. This is quite common on gold. So it's always just something I'm always just cautious of, and that's why I look at the 7 and the 11 minutes, because they give you just a different perspective on things. But when you look at it on different time frames, here on the 5 minute, it looks like, all right, that's a very solid move to the downside, very, very bearish. Right, okay, we're selling. At the moment, it's coming straight back up and looks like it might even take that candle entirely and create a bullish candle, engulfing candle to the upside. Granted, there's still another minute left on it. It could reject down. If we look at it in the 1 minute, this is that area of rejection. So this will be the next area to observe and keep an eye on, whether it rejects back down, and that 15-minute wick, it could simply shoot straight back down again on the 1 minute. So gold is very, very tricky when it comes to those sorts of things, especially in high volatility like we've got right now. So anyone who's not used to trading gold, my advice would be is make sure you're doing your back testing, make sure you're familiar with the nuances of how it moves, because gold will move a lot quicker and a lot faster than probably any other asset in certainly in terms of the CFD market and commodities, because there's just so much volume in it. So definitely just be careful with any gold trades, because it can chop you up quite quickly, and that's me speaking from experience, with the scars and the bruises to prove it. We've got a question here from Hemo Anastasiia regarding your volume on the charts. Let me pull yours back up on screen.
Give me just 1 second, and I'm gonna pull it back in a second.
Okay, no worries. So we will come back to that in a second, Hemo. Let's see. Venetius, good to see you, Venetius. Didn't see you again in there. Euro USD starting to have conditions to short hit the resistance level. Let's have a quick look at Euro USD. We haven't looked at Euro USD really today. On the 1 minute, yes, certainly it is overextended. I think it's safe to say, very much so on the 1 minute, with that big move up. Again, another example of where you would probably see on higher time frames a significant wick forming. So again, one to watch out for. Doesn't always necessarily mean that the move has finished. This is where you just have to be very, very careful to not get caught blindsided. I know a lot of people will say, don't go too far back. Personally, I always like to go back to see what is happening at that level in the past. Now, on the 15-minute, I can't see it. So I'll go to the 1 hour and see what do we have on the 1 hour. Well, the 1 hour is dead air, really. So I wouldn't say that we're necessarily ready just yet, unless we've reacted from somewhere like this here. Let's see, maybe it's quite possible we've come in and tapped into it. Let's have a look. No, we've broken past it. So for me, even though we've had this big impulsive move on EU, I'd be very, very careful trying to sell that just yet. Going back to the question from Hemu and the volume, Anastasiia.
So this particular one on the right side, it is called the visible range volume profile. You can find it in the indicators. It's a built-in indicator in the trading view, but you do need to have the paid version of trading view to use it. It's called the VRVP, or visible range volume profile. You just type it in like VRVP and it's going to be there. The settings for this, the correct settings actually are ticks per row, and 1 if you are using it for the futures. For CFDs, it might not load, so just put 10 or even 100, I guess. There we go, even 100 for CFDs. Ticks per row, 100 ticks per row for CFDs, or 1 tick per row if you're using futures. And the style, obviously, you can use yours. Now, this is going to be automatically forming, but this is good for the moving market, like when it moves at the specific moment. If you are looking for the past volumes, where they were traded in the past and where the price might stop, I'm using something which is called the fixed range volume profile. And it is the manual placement tool. So you can click on it from 1, 2, 3, 4, 5 tools down on the toolbar on the left side, and you find the fixed range volume profile. And then you can place manually to find the levels. Because the visible range volume profile might be mistaken in this way, because it takes basically the whole visible range, even the volumes that are not valid anymore. But it's quite useful at the moment of the volume formation, just like now, for example, to see, if the price is already bullish or not yet.
Excellent. Thank you, Anastasiia. Just to add, Hemu, to that, My brain has gone dead. The indicator that Anastasiia shared, the visible range volume profile, will only work on certain data feeds as well. So, for example, I use forex.com feeds. They don't provide that data. I see that Anastasiia uses Oanda. Oanda does have that available. So, if it's not working, you'll find that it might just be down to the data feed that you're trying to use.
Yeah, that's a very good point, Mike. Thank you.
Let's see. The reason why I suspect that EU has just moved is because the Spanish Prime Minister has just said we are responding to US tariffs with 14.1 billion plan to protect our economy. More details to come, but that has just been announced 5 minutes ago. And if you want to know how I found out about that, it's very, very straightforward. You can go and use Financial Juice. They're not a partner. They're not paid subscription or anything like that. Perfectly available, free of charge. You can go and use their Discord as well. They have live feed, but what they're very good with is capturing news. So there we go. EU members are set to vote on April 9th on countermeasures to US steel and aluminium tariffs, according to a senior EU official. So if you're wondering why, so there we have streamers asking, why did Euro USD move so quickly? That will be most likely why. It doesn't necessarily tell you before the news. It might have a bit of a delay of a couple of minutes, but it certainly does give you an understanding of what may have triggered an impulsive move one way or the other. Anastasiia, Lack is asking if you use volume footprints as well. I believe volume footprints are a specific futures tool, aren't they?
I do use a volume footprint, but not on TradingView. Actually, I use it on ATAS. But I use volume footprint and I use delta footprint, but that's a completely different story. I do not honestly like how it looks on TradingView. Like I didn't find the Usernet. I was looking into it. I promised to bring it back if I find the Usernet, but it's not something that I would actively use.
Yeah. Excellent. Vinny, good to see you, Vinny. Hope you are well. GU was something that we looked at earlier, very briefly. I'm trying to remember what we were talking about with GU. GU has reached still an area of resistance. It hasn't broken past it on the daily area, I think it was. So I'll pull that up on my chart very quickly. The reason I see it as an area of resistance is if you see here on the daily chart, we previously had this engulfing candle to the upside. Now, that's not to say that there isn't areas to target higher up. So you've got one here on the daily as an inside bar, and you also have one here on the daily as well. But generally speaking, when you have an engulfing candle wick, through my back testing, I have found that they will tend to be an area of reaction. Now, they don't always hold. As you can see, this one did not hold, but it still sits as an order block as well, because you had this random bearish candle in the middle of this bullish move. So it acts as a concentration of high volume orders. Now, what would be really interesting is actually if Anastasiia, if you pulled up GU on your chart and just look at the volume as well, I'd be really curious to see what it looks like on the daily chart as well. It's not to say that it won't go higher, Vinny. It may well go higher, but I'd be really curious to see what it looks like on your chart, Anastasiia, because again, it's another way of looking at it that people wouldn't necessarily see otherwise. So on the daily chart, I wonder if we have
on the daily, we don't have much, to be honest with you. Just completely bullish. And the things that I would check is how the volumes were above it to know where it's going to stop. Because right now, the only point for it to stop is 33,800, so the previous highs. To be honest with you, I don't see anything else. Now, if you look,
is that the daily or the weekly? Sorry.
This is the weekly.
Oh, the weekly. Sorry. Okay.
I'm gonna pull it on the daily in a second. 1 second. I'll make it a little darker so we actually can see the volume footprint clearer. Here we go. The volume profile clear. We talked about volume footprint, so that's now my brain is making some errors. So we can see that it accumulated volume here. It moved after the tariffs. There is barely any volume point besides this one. This is the consolidation on top. So on the consolidation is usually their anchor where their the price can stop. Although it's not much. The other level where the price might have maybe have a pullback from is 32,850 level right here. So from 32,850, it might go back down from here. Oops, That's quite a long way to scroll. Here we go. Because we did have some kind of consolidation here. This is also a developing point of control of the price. We do have some big moves still upcoming until that we reach this point in general. And 31,450 was the level that was supposed to stop the price barely. Let's have a look if we had any kind of reaction. We almost didn't have any reaction on this as well. So I would be bullish on GU until the price goes to this previous highs, and the level that I would be looking at to maybe buy it back from, if it pulls back to the 5-minute range here, this to this zone, perhaps the buy from here for GU for the continuation to the upside, which might be very interesting because we potentially can have a very good risk to reward in this one as well. So if we look at this, if it gives a pullback, of course, but we have about 110 pips to go, and it's about 20 pips stop loss, let's say, to be very safe. But it's from 1 to 5.5, even from 1 to 6 to 1 to 3, depends how safe you want to be with a stop loss placement. But from here, I would be looking for a buy. But again, some kind of confirmation would be better first.
Yep, absolutely.
There is, to be honest with you, there is nothing here that may stop the price all the way up until 32,880 at least, and then 33,800 is another 100 pips to the upside, right? So that's quite a long move if possible. By the way, Nasdaq is actually moving like we were talking about. Did the price break the lows? It did not give a pullback yet, but if it does, it might be interesting also for Nasdaq to support the continuation. So from here, if it would give us some kind of pullback, at least towards 88.7, then maybe like something like this. That looks good. Yep.
And gold is still pushing down. I do hope those of you that were in gold longs either had a very tight stop, had either wide stop losses or tight stop losses, and didn't get completely chewed up and eaten up by the move on gold. It has come down to the 104 level, and it seems to be going straight for it. So on the 1 minute, we'll see how it reacts. But on the 1 minute right now, it looks pretty strong. Now, the only way I can see it not doing that is to really, on the 1 minute, just have a very strong wick rejection to the upside. But it doesn't look like it's going to do that. It looks like it is going to take that low, which I've marked out as the low from yesterday, in terms of the reaction move that we had to the tariff announcement. But yesterday was also actually an inside bar. Now, what's interesting is this could now be the market's reacting to the euro news, maybe. We'll see. As you can see there, it's decided not to take that low. So I'd now be waiting to see whether or not price wants to now continue back up again. That low is kind of the key decision point for me. We might see that overextended sell. That might now start to trigger some buys potentially. Guys, it is coming up close to 1/2 the hour, which does mean that our time with Anastasiia is coming to a close. Even Anastasia's alarm is telling us that she needs to leave us, it seems.
That was gold.
But gold is giving you a signal, is it, Anastasiia?
It is. I'm gonna bring it back. So what I was looking for gold actually is long from this zone here.
Mm-hmm.
So, but I will want to see the confirmation, obviously, because I don't want to be catching the falling knife. But this is the next zone where the price didn't come back yet. There's consolidation, high volume node here as well. So, and it's getting closer to this. This is why I got an alarm. This is futures. It looks a little different on CFDs, but on CFDs, it essentially looks like the same lows here, right? So on CFDs, in my opinion, it looks slightly worse. But the point is exactly the same. If we can go a little more down and see the rejection on this consolidation here, I think we actually might see the longs on gold.
Yeah, it's forming a very, very nice setup on the 1 minute right now. I'll just quickly pull that up. So you can see here, we had a very, very close to the 104.90 that I had marked out. Doesn't mean that we're going to go ahead, but my setup would be a very, very tight stop just below that, and see a rejection off this wick now for a long opportunity. So be very, very tight stop just there, and then looking for longs going on the way up, but waiting to see how this 1 minute candle closes to see if we can maintain that low or not. Right now, that's the kind of reaction that I want to see, where the 1 minute candle wicks back up, rejects again from this low, and pushes on up. So we'll see how that one plays out. We have got somebody waiting for us in the wings to join us for the AlphaBeta Lab podcast session. So Anastasiia, all that leaves me to say is to say thank you once again for your company. It is always a pleasure to spend a Thursday morning with you, going through the charts and seeing what the markets are doing. And we'll look forward to seeing you in the AlphaBeta Lab, but also next week on the 5ers stream as well.
Thank you, Mike. Thank you for the company. I love our Thursday streams, and I'm going to be looking forward for the next week as well, Wednesday and Thursday. And today, again, guys, I'm going to share my insights on tariffs a little bit later on AlphaBeta Lab, so make sure to join and watch out for the updates.
Most definitely. Thanks, so Anastasiia.
Thank
Speak
you.
to you soon. Take care. So, guys, we do have a couple of gentlemen waiting for us in the wings. I don't know if I need to do a drum roll or what's the best way to introduce these gentlemen. Here, there's a virtual one being done. I can see in the green room right now. But I'm sure you guys know these gentlemen very, very well. We have Rich and Victor joining me for the next session. How you doing, gents?
I'm good, Mike. How are you?
I'm good. I am good. I haven't blown any accounts, and after the price actions going on right now, I'll probably take that as a win.
Hi guys, how are you guys doing? I'm fine. This is madness. This is most madness. I mean, what wasn't structures that weren't even relevant yesterday, weekly structures, some monthly structures, in one day after they're already relevant. I mean, this doesn't happen very often. Madness.
Yep, exactly. It is. It's a wild ride at the moment on the markets. Yeah, something that I wouldn't recommend anyone do if they're faint-hearted. I think it's fair to say. Those of you who are just joining us, or those of you who are new to the stream, this next segment is what we call the AlphaBeta Lab live podcast. It's our live weekly podcast. So we were talking about it earlier, the AlphaBeta Lab. It is the trading educational community by traders for traders, for which I'm a part of. And we take over this session 1 hour every week on the 5ers stream to do a little bit of a kind of a step away from the charts, which I know is maybe seeming a little bit alien, a little bit of a strange concept, but it's something that we tend to enjoy, isn't it, gents?
Yes, we do.
Absolutely, absolutely. So we don't have a script. We don't necessarily have a topic. We tend to jump in and discuss the ins and outs of our week, of what we've been trading, how we've been feeling, what emotions that's taken us through as well. And I suppose, gents, it feels as though the elephant in the room would be the tariffs yesterday, and what that's done to the markets. We talked about it a little bit with Anastasiia earlier, and I talked about it with Alex this morning as well, where we haven't really seen anything like this since COVID, and this kind of volatility to suddenly hit the market in such a short space of time. Obviously, with COVID, it wasn't something that we knew was coming there and then. You know, there was the lockdowns and there was the markets reacting to that. There would have no doubt been people in government who knew what was happening, but we as the general public didn't know. With Trump's tariffs, everyone knew that something was coming, and everyone knew that it was probably going to move things around, and yet we've still seen, as you said, Victor, structures that, you know, have just been blown to pieces. What's your feeling on trading something like this?
I think these moments is where your risk management shines. If you have a solid one in place, this is the moment you've been waiting for, because risk management is what is going to get you through moments like this. And if you're lacking, you probably are right now either stopped out, blown accounts, or very close to that. I think these are the moments where it separates the good and the not so good risk management approaches.
Rich, what do you think?
Do you want to know what I honestly think?
Yeah, I do.
Nothing we
really do.
Scripted, right?
I really do.
A really good part of these discussions is to try and talk about the things that we actually care about. Like before we came on, we were talking about like what do you guys want to talk about? Not what do we think we should talk about. What do you want to talk about? Because it's such insight. It's so insightful just to have these moments where we just draw on our own personal experiences, not so much what's going on in the market right now. Something Victor said a minute ago, and it triggered me, but like in a really good way. And you said, this is madness. And I thought, isn't it a reminder that madness is thinking that the markets exist for us? Isn't this a really good reminder of actually what the markets are? Why do they really exist? And what is it that absolutely kicks them into shape? Like, are we the mad ones by going, it didn't respect my zone or my level or my... I've been looking at the charts thinking, this is like the same thing, thinking this is madness. But then I've also been reminding myself that, hang on, Rich, you don't drive the markets. How is it madness if the market doesn't react where you think it will and it just goes straight through it, or it doesn't pull back? And it was just a really humbling moment to think, am I the mad one, or is the market's gone mad, right? Because I always say that price leaves a story attached to it. And so when we're seeing price run, it's from the most informed people in the world. So who's wrong? Me, because I think there's a tiny level on a 1 minute or a 5 minute that price is going to bounce at, and then it just nails through it like it's not even there. Like it was a really cool opportunity to be like, Rich, remind yourself what the markets are, who are they really for, and just because the bar to entry is super low and you have the opportunity to come in and click buy and sell, doesn't mean to say it has to adhere to your playbook. It's just something that I was thinking of when Victor was saying this is bad. And I did see chat like, this is Sparta. I'm like,
I mean, it is, as you said, Rich, it's it's madness to almost expect the markets to adhere to what you want. One could even argue that it's madness to even try and trade this in some ways. I know my wife would probably think I'm completely mad for trying to trade markets like this. But I suppose that my question is then should you trade a market like this? Should you even bother, or should you just, I mean, some of the guys in the chat have said this morning, NFP tomorrow, this is like the wild west. Let's just steer clear of this. Let's let the dust settle, come back on Monday when we know a little bit more. Anastasiia made the very good point that the tariff retaliations are now going to be coming in, right? So just because Trump made his announcement yesterday doesn't mean that the news is over. We have the small matter of CPI news coming out later today. But, as I was saying to the guys earlier, we've already had, the Spanish PM come out and say today they're going to respond to US tariffs with a 14.1 billion euro plan to protect their economy. So, there's already things coming out, and that suddenly created a spike on euro US dollar. Is
what a
it?
Spike.
Yeah, absolutely. And we were sat here in the stream, and everyone said, "Whoa, what happened to the euro USD?" Thankfully, Financial Juice came to the rescue and made me look as if I knew what I was doing, and had my finger on the news pulse like Reuters or something. Is this a market that you should trade? Victor, you said about risk management, but I mean I've been using good risk management, but I've just been chopped up today. Now I know that's probably because I'm just trying to chase the trades, and I'm trying to chase the opportunity and trade the volatility. But I've actually got one of my setups that I use now. I use the trade dashboard for MT5 EA. It's a paid one. One of the reasons I really like about it is that you can set your daily risk or daily loss limit as a percentage. So it will turn around and say, you can't place any more trades with this EA now. So then if you want to, you either have to go and do it manually, which you're so used to doing it through the EA, you don't really want to, or you have to go into the settings, detach it, reattach it. And it gives you that moment of clarity to say, yeah, okay, do you know what? This is probably best for me to walk away. And that's what I've done, right? So I've turned around and said, no, I'm not going to trade this today. But is that the right way of approaching? Should you just stay clear of it altogether? What do you think?
Well, I think the market this volatility obviously gives us a lot of opportunity. If you know what you're doing, this is golden. I mean, these moves don't come along very often. You got squeezes, there's a lot of opportunities. But the thing is, I would say that most of us, not us in this room, but I mean, as a trader in the retail space, are not equipped to handle this kind of move, because this is so different than everyday price action. And if you don't realize that and adapt and adjust everything needed to trade this, you're gonna be burned, chopped, and blown your accounts. And coming back to what you said about the risk management, whether you should or should not, well, if you have a solid risk plan in place, it should have limits, like you said, like you did, right? Limits, either external, internal, trade plan, whatever, it doesn't matter, but you should have limits that indicate to you that something is different and you should not continue, because the market isn't what you expected. It's not supposed to hit your limits, and if it hits your limits, your loss limits for the day, it means something. It means that this is not a market condition you planned for, so you shouldn't participate. And so this and avoiding altogether, I think, is very wise. I mean, wasn't it? I think one of those super wealthy guy said, it's risky when you don't know what you're doing, right? So and if you recognize that that you don't know this kind of price action, this is not what I'm accustomed to. 300% daily ATR moves like this, and who knows what's to come. And then it's gonna be a risk, because you would say a wise trader would say well, I'm not equipped for this. I'm gonna just stand away and watch and learn. Maybe I'm gonna trade, paper trade this because I don't have enough experience I don't have enough data to do this. Then I better observe and learn. Maybe next time I can participate a little bit. But just to assume that this is, this is for you to handle just because you think you're a trader, that's recipe for disaster. We all know how it does. I mean, if NFP is a account killer, what is this? What is this? What's happening all around the world right now? Traders are. I'm
this
sure
is
I don't.
This is the master liquidator. This is the liquidator of all accounts across the board. Prop firms, across the industry, I don't think the 5ers are, because the 5ers genuinely, I know from being a trader myself with the 5ers, and I know you two have been trading with the 5ers before coming onto the stream as well. The reason we're with the 5ers is because they're not like most other prop firms, but there will be prop firms out there that aren't the most legitimate and should we say caring towards their traders, that will be rubbing their hands with joy watching people just smash through their accounts. And that's something that is really something for people to bear in mind, is that this news in particular right now, that example on EU, that is a perfect example of random news that just came out of nowhere because the Spanish said, we're not waiting around, we're going to announce this kind of rescue protection package of, what was it, 14 billion euros. Suddenly the euro spikes. Now, none of us would have seen that. None of our structure, none of our support or resistance, all of that stuff goes out the window with something like that. So how do you trade that? As I think it was Forex Uncensored. I mean, he says it quite rightly here, avoid like the plague. But he was saying earlier in the stream, now is maybe not the time to be trading. Anastasiia and I were talking about, do we trade this? Do we trade this like Alex?
I lost my pants. I lost my pants, boys. I'm sidelined for the rest of the day.
Is that all you lost?
I lost my pants.
Okay.
Do you know what? It's funny because all my stats say over every asset that I trade, I'm green on, other than gold. What do I keep trading? Let's guess.
On today of all days. Alex, great to have you with us, mate. But Rich, what are your thoughts?
So first of all, I was smiling awkwardly when you said you just lost, and it wasn't because you lost. I was smiling because I remembered something that happened to me a long while ago. When you were talking about trading, should we trade these market conditions? I want to put trading into two camps. So camp number one is the idea that you're a great trader because you stick to your plan. You've got a proven back-tested plan. You've looked at hundreds of sample sizes. You know that it makes sense. And you sit down and you keep executing on it with great risk management. That's kind of like a lot of people's idea of a good trader. That was my idea of a good trader. And month one went, and I got absolutely ruined in market conditions that weren't relevant to my strategy. Month two, month three, month four, I went 7 months at break even. And at a certain point, we gain enough insights to say the market condition is not correct for my strategy right now. And so most of us in here, we're going to be executing on a profitable edge. But as we get a little bit more experience, we can come into camp two and going, you know when to turn that switch on and off. And honestly, there's no shortcut to it. You can backtest a pattern over years of data and go, hey, guess what? This works. And then something happens in the market. You referenced COVID earlier. We've had all sorts of unrest, globally. I won't go into all the details of it. And today we're seeing just more of that. We're seeing just more market conditions that we haven't seen before. And so us as a trader has to learn, when is the right time for me to switch my edge off? When is the right time for me to paper trade? When is the right time for me to reduce my position size? And there's no shortcut to that from my experience without going through it the really hard way. Alex is up.
Sorry, I've got to take him off the screen. He's just distracting us. Honestly, he's just. We don't need that kind of zoom, Alex. That's the kind of zoom that we just don't need. We love you, but that's just too much. That's too much, Alex.
So back to that point, I would say just recognizing when the market condition isn't right for your system, and you should be able to see that in your stats. If you say, look, I'm a trader that, like, worst drawdown I had was 7R. I've been trading my system for, I don't know, 2.5 years, and I'd never seen a bigger drawdown than 7R. So whatever I was risking on a trade, I'd never seen more than 7 multiples of that. I took a 9R drawdown in 2 days. That was all the information I needed to say, wow, something's happened here. And we're seeing the same today. We're seeing market conditions that just aren't right for us. So there's the parts that we can control, which trading the assets that actually we have an edge on, Alex. And then there's the parts that aren't, where the market condition just absolutely just takes a different condition. And today we're seeing that. And so like, I'm out this week. I'm not trading this week. The markets are absolutely not right for me. I don't need to wait for the losses to see that. And every time I look at the chart, I was like, imagine if this goes up another 0.25%. I looked an hour later, guess where it is? And then Euro USD, 1 minute, 0.5% movement. I'm like, you know what? It doesn't surprise me anymore. And it's because it's almost like, can you imagine if this went up? Surely it couldn't go up. What do you think? What do you think the retail world's trying to do? So many traders are going to try and catch the top on this. It's almost like in our nature. Look how far this has gone up. It's going to go back down again. Getting away from that mentality, for me, that was one of the biggest holes in my bucket. And now I'm just like, order flows up. We're seeing dollar weakness across the board. Why do I want to try and get involved in this? Breakout traders are living their best life right now. The problem is the framework I have for breakout trading hasn't worked for the last 3 years. So I'm not a breakout trader. I could click buy on breakout trades and I'd be doing incredibly well. I know it, but I don't have a plan. So my job is just to sit back and say, just wait. Just literally wait until the market conditions are right for me. So putting trading into 2 camps. 1, are you trading plan? 2, do you know when to turn it on and off? And I think now's a really good time to be asking that question. Should you be paper trading? Should you be reducing your risk? Because, and I remember years ago, prop firm said, when we get volatility like this, it is a bloodbath for trading accounts. And it always stuck with me. Because there was this huge percentage of traders that weren't using stop losses. And so can you imagine you have a directional bias and the market doesn't agree with your directional bias? Like either today, traders lost their accounts or they made substantial gains. There isn't really a middle ground. It's pick a trade.
Either that or that.
Sorry?
I said it's either one or the other.
Yeah. Yeah.
Or you're sidelined. That's literally it. Yeah. It's funny. It's because the reason I think the last time we had this kind of volatility, I raked it in. And I think I came into the market this morning, was like, that I've got another chance now to smash it. And because of that, I was super trigger happy early on in the market. You should have seen me at the ABL chat. I was already in heavy on gold, or heavy on positions. And it's like those times, I think for me, I need to sit back and just understand, okay, now I feel like I'm trigger happy. I'm overly confident, especially after yesterday, which was such a good day. Yesterday was absolutely ridiculous day. And I'm coming in the market now, waking up and I'm seeing the movement. I'm like, okay, this is mean reversion day, because last time it was mean reversion day. You see all of these massive moves from the tariffs. The mean reversion trades were the best thing. So I'm looking at the price and I'm like, mean reversion time. Not mean reversion time, it's recency bias that I've got. And unfortunately, because I mismanaged those trades, now I'm sidelined on a time where I should be in some really good trades. Because you look on Euro USD and Pound USD, a simple break and retest off the EMAs and a continuation pattern. That's all you really have to do. Sit down and just wait, not do anything. But it was constantly in high lots, okay, changing up my position, getting back in. And I think it's
those times where you've got to take yourself out of your body and look at yourself maybe in third person and say, okay, is this Alex, this person that is super trigger happy or wants to get in? Is this the time where actually you should tell him just to take a little bit of a couple of seconds just to reevaluate where he is?
One of the first, I think, one of the first indication, if you're in that third person, Alex, watching yourself, one of the first indication is, does Alex has his pants on? If he doesn't, you know what time it is.
Look, the pants only come off after. So if I'm looking at the charts and I'm like, wow, Alex got his big boy pants on today. He's just had yesterday, he's just had a wicked day. He's got his big boy pants on, his big wrist pants. And then I'm in third person. I'm like, all right, I don't want to see that.
Do you know what? I was just about to think to myself, is that Jonatan behind that mask today? Because that's the kind of thing that Jonatan would have said. But I mean, I get your point, Victor. I get your point. Is that have you woken up? And are you in the right mindset? And as Alex says, he's having that self-awareness to do some self-reflection and understand. Are you in the right frame of mind? Are you just trading emotions? Are you seeing things? To an example, I think it was you who said, Rich, are you trading? Have you just got a set bias and you are clinging to that bias? Alex, I don't know about you, but my bias this morning was gold is long, gold is long, gold is long.
So that's probably because I was saying as well, gold is long, gold is long, gold is long.
But my analysis as well, my own separate analysis was also that gold was long. Yeah. Did gold go long? No, gold destroyed me. Thankfully, my EA has got settings in place to stop me from completely destroying my account. Well, I say that it stopped me from blowing it in terms of hitting the daily limit. But for some reason in my mind, I was thinking that this is my setup. And the reason I'm saying this is because Ryan is saying, don't be afraid of the market, guys. There's always opportunity if you stick to your trading plan, which, yes, there is validity to that. If your trading plan includes your risk management and so on and so forth, Anastasiia has seen opportunities today and seen some great trades on silver, for example. I think that the problem is when your judgment gets clouded because, you become so fixated on this has to go this way. And that's something that I look at today and I think, no, Mike, poor choices. Is news, is today, is now the time to be trading if...
Yes. The time is to be trading. The time is to be... Literally, these times are the times where you need to be doubling down. These are the times where you make a lot of money, but you have to be flexible and you have to get it right. And you can't... These are the times where you practice and practice and practice to get to the times like this where you're doubling down and you're making the most of these opportunities. Now, I feel like I've been practicing a long time. And when it came to game day, I messed up. And that is totally fine because the next time that it comes to game day, I'm going to be on it. But it's just the fact that you can't be scared of moments like this because these are moments that you really can change your P&L and change your trading account. But you have to, before you get today, you have to set today up. And you set today up with the things that we're talking about and set with the daily habits and the daily things, because otherwise you get to today and you're not in the right mindset and you have a bias and you keep hitting the same trade when it's not the right trade, not the right asset to be in. Like Rich said, my asset that I'm not profitable on gold at the moment. I'm not profitable on gold. So why today, out of every asset that I trade, did I pick gold? I should have gone to GU because GU for me is the most profitable asset across everything for me. So it's like, that's why I say this volatility is our best.
And but Alex, okay, so you and I both know gold has chewed us both up today, right? But 2 questions. First of all, first thing you said was you've lost your pants. So define for everyone, what do you mean by that? Because it does sound quite extreme, but obviously you still have your risk management in place. You've not lost your account.
Lost my pants is just, like my trait, my ability to look at the market objectively has gone out the window. I haven't lost my account at all. I haven't lost. I've got to a point that I gave half of what I made back yesterday, and I'm not willing to give any more back because I'm not looking at the market objectively. That's me losing my pants.
Yeah, and I think that's really important.
My account is not even on the question. It's not even close to that. I'm not getting to that stage. But if I'm looking at the market now and a time where we should be doubling down and we should all be talking about right now, guys, how are we adding into these positions? How are we maximizing what we're doing? But instead, I'm sidelined because I mismanaged the trades, mostly because of yesterday's really great trades and previous times that I just over leveraging too early on, and many different things that today, when I go back home, I'm going to have to sit and think, okay, how do I mitigate this from happening again and making sure that it doesn't.
You were losing your mind, not your pants were your trading account. And that's what it sounded like. It's like, oh, man, I've literally done my account today. But you were like losing your mind. You were like, objectivity was breaking down. I wasn't trading objectively. And then that's like, you recognize
that's my edge.
Yeah, but you recognize that and you put the brakes on it. Like, can you think how many traders won't recognize that? They'll just keep going and they'll spiral. Like, losing P&L is a massive trigger for traders to just become emotionally compromised. You recognized it, put the brakes on, and didn't give back what you made yesterday. If you took yesterday and today as a net gain, I bet you'd love to do that every 2 days for the rest of the month. Like, you're already in a cracking position. Like, and the reason you're in that position is because you caught yourself as you were spiraling. You're like, no, done my pants, done my mind. Like, I'm going to stop because I'm not being objective. Like, that level of self-awareness there carries traders into profitability, because it's mostly only that thing that traders lack that just it just spirals their accounts, takes them away from them. Now they're in that revenge trading mode. Like, seriously, dude, I want to take a moment, just like recognize how you've done for yourself today. Like, it was a good day.
I've got a lot better from. If you would have asked the Alex 4 years ago, the same thing, the account would have been blown. Now I've given back some of the profits, but I haven't given back everything. I've given back just over half of what I made yesterday. Next time this happens, and it will happen again, next time maybe I'm giving back only a little bit. And it's like each stage, each of it is each milestone to get past. And that is what I'm trying to do. I know all of these emotions and all of these things happen to me, and I can never get it away. I never want to wish it away. I just need to learn how to slowly get better and better at it, and that's all it is.
I think you said something because at the beginning, you mentioned early on. You said these are the moments we need to double down. We need to go not all in, but I mean we need to push this through. And if you hear that, and if not everyone, but majority of traders hear that without the proper context, they will think, you're risking too much. You're being too risky. You're not. However, it's your stage that you've gotten there, growing organically, right? You came from a place where you know what it is losing your account, and you're past that phase. That's not even an option. You have your risk management. It's still not ideal because you're still losing more than you wanted, but survival is something you already gotten. So survival isn't at risk. It's about optimizing. It's about increasing your profitability at the right moment. So when you say these are the moments to double down, it is within a proper matured risk management context, right? Not just double down whatever you think. It's about within a a
No,
proper growth
yeah.
curve of organic growth. You didn't get here in one step. This was a
No.
process.
Yeah, when I say double down, obviously you got to watch what I got. Probably watch my words and give better context, because maybe there's somebody saying, "Okay, doubling it." No, it's that very similar to what Victor has just said. It's not doubling your risk or anything like that. It just means not being defensive, not being scared of, okay, right now we've got the volatility. This is the time to be maybe pushing the bar just a little bit, if you're like one of my a good setup, just a normal continuation setup that maybe I'm having, and I would put 1.5% risk, and I'm happy putting a 1.5. Maybe today I'm going to put 2%, but I feel happy doing that. That's what I'm saying. It's not a time to be defensive. That's all.
Yes,
and
I agree.
That makes sense. What the second question I was going to ask you, Alex, though, was, okay, so first of all, we're given context that you haven't lost your account, but secondly, you said that obviously GU is your go-to pair, right? Is the one that you have the most success with.
For what the stats say, yeah.
Yeah. So I don't want to go through technical analysis. That's obviously not what we do on this particular podcast. But have you had a chance to look at GU today, and can you see the opportunities that you would have taken and that they would have played out?
More on euro, to be honest. If I was going to look at either one, it would have been more on euro. Pound, it would have been harder to get in, I feel. But euro definitely had especially at 10:25 my time, we had like a really nice break up and then breakdown just at the start of the session at ABL. That was a retest on a 15-minute time frame. It was perfect, You can look at that in hindsight though, and it's great. But at the time, I was looking at that, and I was looking at gold. Yeah. And I decided, okay, that's what I'm going to be picking. And I also saw USD yen, and I did take some USD yen trades. Now, those I took a loss on, and I'm happy. I'm fine with that. I took the loss. That's just the way it is. You live and learn. But game day, we should be aggressive at times like this.
Yeah, I don't disagree with you. My question was obviously just around, can you recognize, okay, we've spoken, gold shouldn't have been the asset you were trading. Could you have gained better success on the other ones as well? Because there are people in the chat that are saying, nah, staying away from this, don't like this. And that's either because, as you said, maybe they're frozen, maybe they don't like the feel of it, or maybe they know themselves, like Rich has said, they know that this isn't their edge, this isn't their moment to make profits, right? Rich is making profits all the time from the day-to-day charts, right? Rather than the crazy Trumpel-Stiltskin charts.
That's also pretty important, because when I say, for me, today is game day, maybe for you, it's not game day, Maybe for you today is actually sit on the sidelines and practice something else. So that's what I'm saying. It's like, for me, it's game day. For you, it's something else. And everybody needs to understand when it's their time to actually double down and be in game mode. And if it's not, then you got to take away. But everything before that time comes is all about practice. Because when you come to it, you either flunk it or you change you can change a lot of things by trading well when it comes to that time.
Yeah.
That's totally true. I think it's knowing thyself, right? What kind of trader are you? What kind of market condition, but as well as pressure or stress condition, circumstances do you thrive on, right? And you, Alex, you recognize that this is something that goes with you. Although you're still struggling in maximizing the profits, you know that this is what resonates with how you trade, how you seize the opportunities. This is the moment for you, but it's not about the moment. It's about you recognizing your moment, and that's the thing that everyone needs to to realize. And as you said, this might, for a lot of people, I think it's very a wise thing to just avoid if you're not you don't have experience, you haven't built up your your skill set to handle these kind of market condition. You shouldn't risk it. Have your limits tell you whenever you pass those limits, it's okay. Step down, walk away, and live another day, basically. But there's something I want to go back to. Rich, you said your data 7R was the maximum historical drawdown you measured it, and that was from 7 years, right?
No, that was 2.5 years. And
2.5 years. Okay.
Yeah.
At 2.5 years, and you had in 2 days more than that. You exceeded that measured max loss, max drawdown. And I think that's insightful. Because if you ask anyone, the majority of traders, retail traders, do not have 2.5 years of backtesting data, good info. What they have is perhaps 100 trades, maybe a few hundreds if they're really good at it. If they even have, at a lot of traders don't even have backtested data on the strategy that they're using. So I think it's a very good realization of everything we do in the market is a matter of probabilities, right? We have heard that many times before, but the fact that you had a very solid amount of a period, 2.5 years is not I think it's up there, right? It's a good amount of back-tested data, but it's still only 2.5. Mm-hmm. Does that represent years and decades? And we all know we have these events. We have in the 2009, I think there was some credit bubble. We had in the 2015, we had the Swiss bank doing all kind of weird stuff, right? And every so often we have these black swan event, and even if they're not black swan event, very rarely they happen, but they do happen with some frequency. And our data, even if it's a few years, is likely not to include these events in them, right? And it's a matter of probability. The chances are we're not covering those big one-off, rare, very rare occasions or events, and you need to realize that is something that is possible. And what are we going to do about it? How do you handle what would happen? Because if I think everyone here sees themselves as a trader, not as something temporary, but I'm a trader and I'll always be a trader. I want to be ready if let's say in 5 years time, 10 years time, whenever I'm here for the long haul, and I think you all are. So you if you're gonna be here for a indefinite time, as long as you're active, you're going to get these events. They're going to happen, these sporadic rare events, and you want to be. You can't predict them, of course not, and you can't avoid them because you don't see them happening before they come. But you can have some kind of contingency plan, right? When this happens, I lose this much over my limits. Let's say you push your limits, and it happens. You got to remind yourself, there is that chance that this could be one of those moments, right? It's the moment to step back and not lose more than you planned on. It's all about probabilities, and the chances are you will, if you just stay in the market long enough, these things you will come across these situation where it's going to be so unlikely. Would you guys have, if I said yesterday, gold is gonna make this kind of move 3 times the ATR or even more, would you say, is it likely?
It's funny because this reminded me something that I heard quite a while back. I think it was even Tom Dante said it, and he's quite famous in the retail space. And he was like, you could read in the newspaper where the price is 100% that the price is going to go to this level, and he bets 90% of the traders will still trade it wrong and it will still lose money on it, even though that the newspaper has said 100% that it's going to hit this level, because you don't know how it's going to hit that level and how you're going to manage the trade. And I think that's what it's super important is nobody knows what's going to happen. Nobody knows how something's going to happen. And the only thing that you can lean on in times like this is, at the end of the day, your risk management and your emotional management as well. Because how many times have we got the direction right, but we've got the trade management wrong?
Endless
not
times.
all the time, but
Endless
it happens.
times.
Exactly. I said
But
300, but actually it's above 400%. So this is so unlikely, unfrequent. It does not happen, but there is always a chance of it happening. That's what I wanted to.
It's quite exciting though, because I've like even today, it excites me the fact that the next time this is going to happen, I'm going to have a chance to get this right. You know, and that's the good thing. When there is the volatility like this, maybe next time, you know,
so
it gives me time to practice and to get better. You know, that's the best time. I don't know if I don't know how many people do martial arts here, but sometimes the best thing is when you've lost a competition or you've lost a fight and you have to get back into the gym, and that grind to get better and to win the next fight is some of the best feeling and the most place where you find the most progression. When you win, you get a nice buzz. Sometimes you don't go into the gym the day after.
Yeah.
Sometimes you like taking a day off.
Mm-hmm.
So that's why, even though this for me today has been an annoying day, it's actually quite an exciting day.
Yeah, Alex, when you said that's exciting, I was just thinking, definitely I felt the same. I looked at the charts. I'm not trading today. I looked at the charts and I got excited. And I wanted to trade. And I literally was opening up the asset and I'm like looking for reasons to get involved in this. And I just wonder how many traders saw that excitement and they didn't ask themselves, is this my kick that I've been practicing 1,000 times? Is this my one kick? Is this my market condition? Unfortunately, I caught the mouse before I did it, because I was like, oh, I'm going to go for this. And I was like, no, you said you're not trading today. I was like, but look how exciting it is. And the FOMO in me was like, dude, you got to get involved in this. Like, I bet you can pick the top. I was like, okay, hold on. Hypothetically, is this your kick? And I looked at it. I was like, no, look at the market condition. I was like, this isn't what I've been practicing for. Now, that's one thing you have really good edge at. You know when it's time for your one kick that you've been practicing for, you're really good at getting aggressive around that. Like when you said about doubling up, like you know what you're waiting for. And like I'd just encourage traders, like get familiar with that one thing you're looking for. And when your time's right, don't hesitate. You've been waiting for that moment. It could be for a day, 2 days, 3 days. If you're a swing trader, it might even be a month. But like don't sleep on that edge. When that comes up, that's your opportunity. Yeah. We don't have to go absolutely silly on it, but just know what you're waiting for, and just ask yourself, is today my edge? When Victor said you took a 9-hour drawdown in 2 days, I had 2.5 years of data over 6 different currency pairs, and every single currency pair collectively agreed with the previous. The expectancies were pretty much similar. So what I had was over 10 years worth of data if I used all the pairs. So I had 2.5 years. I put all the pairs together as like a confluence of each other. Taking a 9-hour drawdown in 2 days, my data literally said, Rich, this is not your market. It took me 7 months to make them 9-hour back. I was averaging 6.5, 7 hour a month prior to that. And it just, market conditions weren't right for it. And like, it was waiting for that one opportunity, but I didn't know. I was like, well, good traders just execute on their plan. I didn't know. I sat there every day, 14, 15 trades a month, just click, and just getting nowhere from it. And I think as we get a bit more experience in the market, we learn like what is what is right, because we're all working towards something, right? Like you, Alex, you're practicing this one kick. You have your one trading approach, and you're waiting for it day in, day out. But like everyone has a goal with trading. Everyone has this idea of where they want trading to take them to. And it's like I got asked this question ages ago, like, is trading your means to an end, or is trading your end? And I remember sitting there without a second's hesitation. I was like, nah, trading is my end goal. I'm going to be trading till I'm like 95. This is what I want to do. I'm passionate about it. But actually, if I asked each one of you here, if someone just knocked on your door and said, here's 8 million, would you keep trading? And if you know what you do with that money, you can very quickly work out, is trading my means to an end? Is trading just the tool, the investment vehicle I'm using to try and gain huge wealth? And if it is, right, that's why you get excited when you look at these charts. Oh, this is my chance to get closer to that goal. If you're a trader until the end, you can look at that and just say, it's not my kick. I'm going to be here kicking for 60 more years. Like that's your plan. So I was just curious, like, what do you guys reckon? Do you reckon you're trading to the end?
I think I like it's competing against myself. I'm so competitive. It's ridiculous sometimes how competitive. Somebody's walking down the road and faster than me, I will speed up just to pass them. Like that, it's that. It can be that. It can be that silly. It can be actually that silly, and that's what interests me about trading, because I'm really competing sometimes just against myself, and that's what keeps it kind of interesting. Obviously, the swings and all the P and like it's nice, but that's things that really. So taking that, even if I had all that money, to be honest, I don't think I would actually be happy. I wouldn't, because that competitiveness makes me happy. Having that place to get not knocked down, and to really find a place. If everything is just great, bloody how boring is that? That's not fun. That's not fun. We want tough. We want something difficult. We want something that is like rewarding to get to, you know?
So Alex's lesson is to take the kick that he's been practicing over and over and over again, but to not kick gold because it's hard. That's basically the lesson.
I don't know. Like,
where? How do we get him on the screen?
You know, I heard you're so competitive. Like that's kind of like a I'm not gonna say the word.
How do we put
That's
you?
That's a weird thing to do.
What is?
Oh, you're walking down the street and then you see someone and you have to walk faster than you. Like, imagine if it's dark at night and that person is a woman. Like, that is weird behavior, man. That is weird behavior.
I don't care who I'm in a competition with. It doesn't. I don't.
It's not a competition. That's the thing. It's not a competition. What if they start running? Are you gonna run?
I will sprint.
Yeah, that's what I'm saying.
Yeah. But the thing is, I know exactly what Alex is talking about because I'm exactly the same. I'm exactly the same. And it's like, okay, this person is walking so slowly, and then they start walking faster. No, right, I'm gonna overtake you now. Right, watch this, and then I will keep walking fast, even though they're miles behind me.
But they do it as well. They look at him like, oh, he's passing me. I'm gonna have to get past
exactly.
him.
Dude, I love walking slowly. That's like, I walk so slow. I walk slow and I look up in the air.
That is why you're a swing trader.
Yeah, probably. But you know, when I lived in Stockholm, everyone is just running around, and I moved to this small town, and then I saw that everyone's just very slow, so I kind of paced myself, and now I'm just walking slowly. That's that. The walker. I'm really sorry for just jumping in here and but I actually didn't jump in. I got
you walked in slowly.
Alex added me to this.
There you go. That should be better.
He walked in slowly. I mean, I think the thing about this particular time right now is, Anastasiia said it earlier, the last time we had volatility like this was COVID, right? And Trump actually did introduce tariffs during his first term, but he didn't go anywhere near as wild as he has this time. And the last time we had tariffs like this was 100 years ago. So, as to Victor's point, this is something that doesn't happen very often, and so there is almost that excitement. There's almost that urge to be part of it, to dive into it, right? And I think the challenge for us as traders is to bide your time as well, right? We saw those wicks and all that news and everything else, right? But look at EU today. EU has responded because of the fact that the Spanish PM turned around and announced 14 billion euros, some kind of rescue package, right? None of us saw that coming, but it suddenly spiked the markets. That is not going to be the last bit of news that we see over the course of this news cycle for the tariffs.
God, wait. Fantastic.
Right? We
Which
are
I think,
going to see more.
Has anyone told you that you look really good, Rich?
Me?
Yeah, you got a new haircut.
Well,
I
how
hope someone has
random
noticed
is that? How did you stop the flow of the conversation?
Exactly.
I mean,
Hey, there's some curveballs coming in here.
I do really hope that anyone has mentioned that to you during this conversation.
I
here
thought
today.
about it. I didn't mention it. I
Yeah,
thought
yeah,
about it.
at the start, I said at the start, I looked at Richard and I was like, Richard's had a haircut, but I didn't stop the conversation to say it.
Yeah, I do agree that it's a very specific situation that we are in now.
This is a weekly podcast about trading, not about hairstyles and hair salons.
I was actually coming in here and I was going to wait till you guys were finished and then I was going to jump in, but then Alex decided to just throw me in here and
and you decided to talk about hair.
Well, not really. I thought about what the walking and everything. I think it's really weird. I feel like I had to comment on that, but I feel very stupid right now. I shouldn't be here.
Okay, all right then. That's
Oh,
good.
sorry. Guys.
But to my point, since then we've also had news from Germany and France saying that they want to push for a more aggressive tariff response. So what I'm saying is that we've got NFP tomorrow, we've got CPI later today. There are going to be spikes, and what I can see happening is multiple opportunities, and I think that you've got to be you want to be part of it, and you've got to be part of it, and I agree with Alex that you've got to be part of this moment. But all I'm saying is bide your time and don't FOMO it thinking I've missed my chance, I've missed my opportunity, because this isn't a an NFP flash gone finished. This is going to go on for some time.
Yeah, you want to keep your ammunition,
exactly.
Honestly, I've run out of my ammunition for today. I'm gonna have to sit like a spoiled little kid. I want to be in, but I can't get in. Because that's just how it is now. I've run out of all of my ammunition. So if you're there looking, you got to as well think, okay, maybe I should save a little bit of ammunition just to see what New York's gonna do.
Yeah.
Or something like that. But it's always good in hindsight.
I think it's as long as you have a solid risk plan in place, go ahead, participate, and learn from it. If you were able to catch move on these high volatility days, then great. And if you didn't, learn from it. Journal about it. What can you do the next time? But as long as you have as long as you
journaling at night, crying,
you gotta look back and see what can I do better. Should I wait it longer? What would be the sign of that I would be waiting in times like these? What is this? Because you gotta be more. You can't be as sensitive as normally because these are wild moves. So you gotta have something. You gotta adjust that sensitivity dial to current market condition. Those are the things. But what is the dial in this specific situation? Those are the things that we can you could participate and learn as long as you have a solid risk plan where you have limits where you can't lose more than maybe a day or two of your profits, and that's it. And you can just continue, and at the end of the week you might even end up in positive. Right? If that's the case, then go ahead. participate, practice, and gather your data on this kind of these kind of market conditions.
Agreed. Agreed. We have had quite a few comments. I'm conscious because we are coming to the end of our weekly podcast session. So just want to call out some of those. So Pooley is missing you there, Rich, on the LLFT. Sorry. So you missed
that today.
across.
It was quite amusing, actually. It was very amusing. I was about to text Rich, and then I was just like, "Oh God, I'll have to text him later." But it was quite funny. I think Will has been drinking way too much coffee. He's there with his glasses. He's either that, or he went out last night and he's still buzzing from whatever he was doing.
I didn't catch it, but I did see something, man. I did see something the other day, and there was like 50 lots, like, and I was like, I'm not sure this is the market I would want to commit 50 lots to. But I only saw the end result. I didn't see kind of the story and how things were unfolding. But
what was the end result? Good or bad?
No, I think it's profit.
Nice. Good.
Yeah,
Nice.
I think it's profit. That's not me, by the way. That wasn't me going in.
50 lots is an uncomfortable amount for me. I think you remember when we talked about this, Rich, that like a certain amount of size. And it gets a bit uncomfortable, but you need to get to those uncomfortable places and just push a little bit so you can get comfortable suddenly with them sizes. I think when it gets to 35, 40 lots, that's uncomfortable. 50 lots.
What's your current comfort zone? I'm curious.
30 lots, I'd be happy, depending on the. I don't mind, because I'm talking about 5-minute charts, so it could be only like 3% risk that I'm putting on.
So if you're trying to jump from 30, what would you jump to?
35.
And you think like that kind of gap is like not too scary to jump? You're like, yeah, it's fine. It's just 15% or whatever it is.
I think so. I think it's just a matter of feeling it out. You know, the more that you do it, doesn't come that there isn't many times where it gets to a point where I'm putting that much size on. So it's very difficult. Yeah. It means that I just have to, get a bigger account at the moment. But what I'm doing now is I've changed this year. Instead of having a bigger account and trading bigger lot size, I've got a smaller account with just lots of accounts onto it. That's the difference that I've made the start of this year, and it's working much better. So I don't get to trade those bigger sizes now. Really, the most I'd put on is 20 lots, and that's on a 50k account. But which is still quite a lot. But across all of those accounts, it is a lot. So it's just a different way of seeing it these days. I probably won't get used to trading bigger size like that because I'm comfortable now with what I'm doing on this account, and I'm just compounding the accounts like you do. That trade copier that you sent to me is a fantastic trade copier, and now I'm just doing exactly that. But I do miss pushing myself a little bit like that.
Would you use your master account as a small account as a way to sort of go, I'm just trading like 0.5s or 1 lots, 2 lots? Or do you think you have to see like a big master account so that you're seeing the 20 lots move? Do you think like you'd just be numb if you were watching a small account?
I think I need to feel it a little bit. I think it's really important to feel it a little bit. Otherwise, you're not. You could probably be a little bit blasé with what you're doing, especially if you're on a really small account and you're on a small account. Let's say because I know some people had $100 account and they were trying to, we copied onto bigger accounts, and then, and I think that's a little bit silly, really. But obviously, whatever they do to make, for them to feel like they've, better about getting into positions, I feel like you have to feel it a bit. Every account that is on there is the same size. They're all 50k accounts. So
I think the key word is balance. It needs to be something that grabs your attention, right? It needs to be some size, relevant size, but not too much that it scares you when it goes against you. So it's a matter of balance, and everyone has a different number, a different range. and yours is into the to 20, 30 upwards range, which is, I think, on higher than most other people. But it doesn't matter what it is, in comparison. It's what each one has to. It's relative. It's up to you. What you have to find out, what are your comfort zones, and you need to stay in balance. Something that isn't, because as we mentioned, in terms of probability, you will have moments where the market will go against you, not once, not twice, but 3, 4, 5 times. These will happen at some time in the future. So you gotta be okay. You gotta have a lot size, a risk that accommodates these moments as well.
Honestly, you can't trust him.
I can't.
Honestly,
I think I may have ADD or something.
I don't know how much wax you've got in your ears, but we don't need to see it.
I don't know. Yeah, I did actually notice I've got very hairy ears. I've only
yes, we all did. We all did. We all did. Guys, listen, that does bring us to the end of our weekly live podcast, the AlphaBeta takeover. Thank you ever so much for your comments, and thank you for joining us for that. Normal service will resume. I don't know which, Rich, I think you're jumping off. Alex and Victor, are you sticking around? I know Jonathan's waiting in the wings to walk in slowly, as somebody said, like a sloth. Jonathan is a sloth and Alex is a cheetah.
A sloth lives a lot longer than a cheetah, by the way.
So yeah, I see we've got Pedro waiting in the wings as well. So I will be leaving you guys to it. Yeah, thank you guys ever so much for joining us once again. Remember, AlphaBeta Lab is the trading community, the educational trading community, by traders, for traders. We would love to see you in there. Come and join us and share your insights and your journey with us as well.
We'll just do a little 30-second break, and then I can change all the background. So see you later, guys.
Cheers.
Bye-bye. Traders, stop going at it alone. Now join the AlphaBeta Labs, a free online community built by traders for traders. Share your insights, drop value, and get rewarded for all of your contributions. Now there's no limits, there's no gatekeeping, all traders, all markets at all levels. So click in the description below and join us right now.
I had to come in and say, sorry, Pedro. You're literally on your own and just like full screen. Oh, mate. Oh, there you go. Oh, I can't hear anything as well. We can't.
Oh, it's muted.
There
I just noticed it was muted.
That was hilarious. Sorry, man.
It was good.
You were just on your own, full screen.
Yeah.
Everybody left.
It's okay.
There you go, man. I don't know if Jonathan's with you now. No.
Yeah, in theory, yes. I think it should be around.
How are you getting on? How are you getting on with what's going on now on the markets at the moment? What's going on?
It's basically adapting as well. So I heard what you said in terms of this is the time to be active and to double down. I think that can also, of course, depends on each trader. I was listening to your conversation. I thought kind of about an analogy to whoever likes football. This looks like that moment where someone that likes, I don't know, Liverpool style, box to box, just like a Klopp style of football. This is their moment, because there's going to be volatility and to be active every single time. But maybe to whoever likes maybe more of a Guardiola style, where they like to have possession, they like to have control. This will be a madness for them, so they will maybe slow down a little bit until the market starts making sense again, and they kind of start to look for new opportunities. So it depends basically on what type of trader you are. Today, I would call it. This is something that usually tends to happen more on stocks, especially after the announcement. Today, I would call it a second day trading, or basically the second day move trading. Which is kind of a strategy that many people look at in their stocks, which is after we have a big move, what is the potential for the continuation? Like the big move already happened. Where can you find now the continuation into that direction, especially in the US indices? So that's a little bit of what I'm looking for. I'm going to try to look for sales on US indices. I think this is just the beginning. So that's something that I'll be paying to. I already short a little bit S&P. It was more of a smaller win. I think that maybe price can still retest a little bit higher before actually we have a continuation to the downside. That's where I'm going to be looking at. There. Yeah.
What's up,
How are
guys?
you guys doing? Welcome, Jonathan.
Good. How's it going, Alex?
Yeah, mate. Wicked. Could be better.
Nice. Dude, what moves? First time looking at the market here today, and that candle on EU is shocking. Like, that is shocking. I opened up the chart and literally, like, I fell back and I hit my head. No, I didn't, but like I felt like I should have done that. This is insane.
Weren't you in a swing long against USD?
Oh yeah.
What is happening with those positions?
Good, decent. So this is USD CAD.
USD CAD. Savage.
This is USD CAD, and then I have what else do I have?
What about UNZD?
NZD USD is actually doing quite well, and AUD USD as well, at least something. But Euro AUD though, that's a big move. That sucks. I did de-risk a little bit when he had that bounce, but like this, what is this? Market is this? But yeah, USD CAD is doing well.
Yeah, that's true.
USD CAD is melting. Like the Dixie is melting at the moment.
Yeah. But it's I feel like I don't like the market. I don't like it. I feel like it's
a bit too fast.
Yeah, it is fast. Wow, look at that. We're it feels like it's not making a lot of sense, and it haven't made a lot of sense since like November last year. I mean, honestly, it feels like we have periods of like this is the time when I hate trading forex, because it's like you have a good trend on, like, say you have a good trend on the daily, and then it's like the whole trend is just retracing in one daily candle. It's insane. It's like it's insane. I hate it.
It's interesting that different traders just like different things. But yeah, it's an interesting market at the moment. I think this is only the start of what we're gonna have over the next 4 years. Yeah. I honestly feel we're gonna have some of the most ridiculous things happen in the next 4 years. Probably, which is exciting but scary at the same time.
I mean, isn't it happening right now though? There are some pretty crazy things happening. Alex, you know what? If you want to come back later, you're free to do that. Yeah, you want to come back later?
Yeah, I'll speak to you in a bit. Bye.
Awesome.
Okay.
Oh, okay. So what am I doing? What are we doing? Are we trading anything today? I feel like I'm so all over the place. I'm trying to renovate the office, but I got this drill. I'm trying to drill into the wall, and like a big chunk of the wall is came loose. So now I have to. I don't know, man.
Yeah,
my fiance said she wanted a handyman, and I tried to be handy, and now it's like we've got to buy a new house. Get a hole in the wall. Look, honey, we have a new room here. Yep. Better stick to the charts. Better leave that to real men. Oh wow. Yeah. Insane. But I think it's time to perhaps do some some macro analysis. Look at what we have on let's say maybe the weekly. I mean, wow, it's absolutely crazy. It's like you guys who've been following this channel for a while, you know that I've been looking for this move for a long time, and I didn't catch it. Okay, like that, it's so frustrating because, you know, I did talk about a possible, you know, 900 pip move on EU. We are now at the lows to the high. That's an 880 pip to the upside from the range low area from the 0.618 here. I'm gonna pause this thing I got going on here in the background. It's using too much CPU. Anyway, so yeah, it's a big move, almost 900 pips, and we had a beautiful accumulation range down here in the daily, but I missed that breakout. Right, I missed the breakout because it happened so quickly. Like there was no retrace on the 4 hour, no retrace on the daily, so I missed the whole move, you know. But it's interesting that at least it happened, and this is a good case, a good example of someone who might have the direction right, might have the analysis right, but the trading didn't really succeed with the trading, you know, executing on the actual idea. And that's what trading is all about. You can do fantastic analysis, which I believe I do, but then you want to actually trade that analysis, and there's a difference, you know. There's a difference between analyzing the market and actually trading the market. I mean, we looked at. I mean, you would agree, I guess.
With?
Yeah. If you would have listened, the difference between analyzing the market and actually trading.
That's a completely different skill. That's why trading is the hardest thing to do, right? Because analyst, everyone can be, everyone can call the market even before or even after, but the idea is to be able to put risk on and to actually basically put money when you put your mouth on account, basically. However, there is a situation where people there is a situation where people may be afraid of putting risk on, and then unfortunately there may be the situation where you never really got your setup or the trigger that you were looking for, and you end up missing the move, which can also happen, unfortunately.
So gold right now is showing us a pretty good top formation here, but the thing is, it has showed us this top formation in the past. Like for example, we have this, right, where it's kind of like breaking the lows here. Well, that's something similar to what we had, you know, here with breaking that low. So we did have a similar pattern down here. It did come down and break that level. So what I'm thinking here for gold is, from a technical point of view, I like the idea of I like the idea of shorting down to this level, at least on the daily, right? It makes sense on the daily. But as soon as you go down to 4 hour, you see you do have a structure here that it's testing. On the 1 hour, it's a very clear structure right here, and it's testing that level right now. So I feel like it's not a clean setup. It's not very, very clear. The levels are not perfect. It's definitely a bit complicated situation with gold here. What do you think? What you think we're gonna go lower, or we're gonna bounce here?
If you see my chart, do I have it in here? I think it was a nice move to the downside. I think it was about to happen, a little bit of a retracement. Of course, the news helped with everything. I think we start having way too many touches at around this level of support. So eventually those levels actually will be about to be broken, and even before the fake out, we kind of had a little bit of a double top in here. So that was a nice turn, a nice fake out. Question of liquidity above this level, and then price eventually turned. I think this level in here can still be interesting to look for a short in the future. So whenever price comes back into this level in here can be quite interesting. And then I had two levels in here. One is basically where price is reacting right now, but this could be just a bounce, and price basically just already bounced from it. As you can see, price already bounced from this level and retraced into these previous levels of support, becoming resistance. So price already did this move. That's kind of a move. That's kind of a traditional trade that you can look at and you can study and you can maybe implement it when you do have a strong level of, in this case, support, maybe a fresh level of demand or something like that, just to trade the bounce from here to here or even maybe catch the breakout of these towards this level. That's always a nice, interesting move as long as you find your entry in there. But in the end, I agree with you. I think price can go a little bit lower. That's basically the daily level that you're looking for. It's a little bit closer to 3050, 3055, something like that. I wouldn't be surprised if price or if gold eventually goes a little bit lower, and then it can even go lower. Who knows in here what's going to happen? But yes, this is somehow another level that I have in here. In terms of shorts, if someone is looking for any kind of shorts, I do like that one, but that's maybe at the extreme. Yeah, within this level, maybe price can bounce a little bit in here, can do something like that, and then eventually it can continue to push a little bit lower. But yes, it's showing some weakness. The sellers are starting to jump into here a little bit, which is interesting. I think one of the reasons as well is because gold has been behaving quite bullish as well, because of course the uncertainty, and that's actually something that I'm going to be interesting regarding the Fed and the Fed Chair Powell. I think is going to talk on Friday, because everyone has been in suspense. No one knew exactly what Trump would do, and this was the first time that we actually saw what he did. This is the first action, the real action that Trump did. Initially, actually yesterday, if you pay attention to it, I think Wall Street Journal come up with the news that it was almost a flat-based 10% tariffs on everyone, and all of a sudden, as soon as Trump comes up with that carton with the board, it's like naming every single country and the different tariffs for every single country. That's when basically the drop starting to happen in US indices. So now we know, and now it's going to be interesting to see what the Fed's going to say about it, especially of course Fed Chair Powell is going to say about it. So that's going to be an interesting because the conversation changes now. Now we know what the plan is. So now everything changes.
I used to make a poll here asking the audience if they're bullish or bearish on gold. Yesterday, it's actually 50-50 right now. So go in the comment section, select if you're bullish or bearish on gold. That would help us look at the sentiments to make sure that you go in and vote on that one. Yesterday, we had 70% saying bullish. Now we have 50-50 basically. So it really does, obviously, I mean, if we look at the higher time frames, it's still very bullish. So nothing has really changed in the structure of gold here on the higher time frames, obviously, and we're early. I mean, we're early on this on this move. But yeah, I think it's interesting to see that as soon as you have bullish price action, everyone's bullish. As soon as you have bearish price action, everyone's bearish, which is following the candle, which is not necessarily a bad thing. But looking at gold here, I would be looking at trying to get in on gold lower, buy gold lower. Not interested in shorting, if I'm going to be honest, because shorting here would mean that there's so much. I think to short gold, I would need better confirmation in the high time frames, and I'm not sure we're gonna get that. Like M Musa is saying, gold is testing the 1 hour demand, and you're absolutely right. It's testing a 1 hour area right now, and that's one of the reasons why I'm not very interested in shorting this, because we got support, we got that demand so close to the level where I want to short. But people are still bullish on gold, and I believe that gold is still bullish. Intraday volatility, like what we're seeing right now, has happened many times in the past, and the candles are not bigger than other candles that we've seen. And candles like that, usually in a trend like this on gold, is going to retrace, and then it usually just breaks into new all-time highs. I'm not saying that's going to happen, but there's definitely a possibility of that.
Yeah, it's just a bit of waiting and see until where price is going to go towards too. I do like a little bit of the structure as a reversal, but gold can eventually just break new all-time highs. But we need to see. Like a structure that I like to see is potentially gold retraces and actually manage to break new lows. Like instead of having a structure of one low being created and trying to sell the high, actually have at least a second low being created, and then you can maybe try to sell the high, where you may have already some liquidity from this top. That's a completely different type of price action that you may have. So a second break, it could be quite interesting. And we actually on the indices, on the US indices, we start having those second lows being created after that big sell-off that we had the retracement, and now we are having several lows being created again, and that starts showing literally bearish market on US indices, which is interesting. Yeah. So yeah, we'll see.
What are we thinking on EU? I think, when I see a strong move like this, I know it's quite challenging to short a strong move like this, but I am kind of thinking about looking at a short here, because it's just it had today it hit the three time ATR, I believe. On my settings as well, so you can see. You can go back here and we can look at. Let's see if I can share my screen here. This is what I mean. I got. I've coded an indicator here, which is can show two different EMA lines here, ATR lines. Very very simple, and it's based on the default settings of the ATR, so a 14 period, and then it's calculated not using today's candle, but using yesterday's candle. So it's ignoring today's candle, because I want to see at what's the ATR if I remove today's volatility. And then we can look at, I've also added a signal here. So I've added a red arrow. It's a very thin arrow, so it's difficult to see, but you can see whenever this line is hit, it creates a signal. And if we go back in time, we can see that, yeah, that has not happened very often. It's very, very rare that we do get a hit of that ATR level. It only happens in extreme cases. You have one to the downside right here, and then one to the upside, and it's very, very rare. So when EUR/USD hits a 3 times ATR based on yesterday's candle and the range high, what I'm thinking is it at least to me, it makes a lot of sense to short this, right? By the way, let me know if I'm lagging or if there's anything like any lag.
No, you're okay. No, you're okay.
Okay. So looking at going into the lower time frames, we now have, you can look at 1 minute. So we have our first strong push to the upside, our first rejection right here, and now we're coming up and retesting that level. So I'm thinking maybe we'll have a double top here. And if we start seeing signs of a double top here, I think it might be a good idea to look for possible shorts. And I would want to add a couple of fibs here. Let's add. One should we be adding? That's good. So now, assuming that there is still a lot of volatility here, and EU is going to move higher, we might test like these levels. If we're going to short this move, we want to make sure that we're not targeting levels too low. I think this area would be good. So on the lower time frames, I would like to add the fib of this one. And what I'm seeing here is if EUR/USD is going to reject this level, I think it's within this area. I think it's going to be here. And yeah. So I'm tempted in taking a trade down to this level. I think there's a possible short on EU, but need some confirmation on this.
Yeah, it's still early. In my opinion, I think it's still early. We had that big move up, but price just retraced to the demand zone, and now it's kind of moving up again. So I didn't really see any structure being broken to the downside, so I wouldn't really just jump to the short just yet. It is true that we had a big move to the upside, unless we have some confirmation on the time frame to get into a short. I'm not, again, personally, I'm not entirely surprised. Actually, it made complete sense every single move that happened yesterday. especially when you see indices, especially on the dollar, and especially on the euro and the pound and so on. I was already bullish on the euro in the bigger picture. In my opinion, the previous high had already broken some structure on the left side, so I was already bullish. I was bearish on the dollar. I think price had much more room to the downside when you're looking at the weekly time frame. So I'm not surprised with that. I was not surprised as well with the bearish move on the indices. I didn't really manage to catch anything. Unfortunately, I was actually working out when Trump started to talk about it, and all of a sudden I saw the market moving like crazy. I was not ready to trade. But I'm not surprised. I'm not surprised with the moves that we actually have seen. At least on the price action, and also go ahead. Sorry.
Yeah, I mean, if you're following the news and following the macro, I don't think you would be very surprised, especially now with the move on EU. If you have no idea what's happening in terms of fundamental analysis, then of course moves like these are going to be very, very surprising. Pedro, I'm going to move your screen up. Okay. Get your screen up here, and I'm going to be back in just a short while. Okay.
Okay. We'll do some analysis, guys. Again, let me know comments. Okay, pound dollar. Let's just look at euro dollar first. And the reason why I was kind of bullish. I mentioned, like, if anyone has been following the stream, at least since anytime I'm here, or even the Portuguese live stream from the 5ers as well, I mentioned several times that I've been bullish. I was still bullish on the euro dollar in the bigger picture. In my opinion, price had broken this top, this structure in here, and all of this was compressed. Okay, all of this was compressed. So I was actually still expecting price to move higher. I mentioned that I was actually quite interested to see maybe price bouncing a little bit from this level, and this is the interesting part as well. So basically, I had two levels. I had one in here and the other one in here in this white line, which is basically where price also bounced today, which is also kind of a supply level. So I had those two levels where I was expecting then to see price having some kind of reaction. This one in here, it looks like that price just broke through, but it actually didn't. There was actually a little bit of a reaction, as you can see in here, but then price ended up breaking to the upside and it flipped. So a zone that it really could be a short, it turned into a long. And as you can see, that's where basically price also is finding some support now, kind of a level of demand. And that tends to happen as well when you have a potential, maybe fresh supply level or order block, whatever it may be, kind of it swaps, it flips, it becomes into a zone that you're interested to sell, maybe you can start looking to buy. So that was something that I was looking for. The dollar index is exactly the same way. I was still bearish, and I think there was still more room to the downside. So in that sense, I am not surprised. A good exercise for all of you guys, if you want to practice, this was something that I was doing back in the days as well. So anytime there is this kind of movements like we had yesterday, maybe in the past it will be maybe an NFP, super volatile day, a CPI, maybe some Fed news, whatever it may be. Like in the past we had also big volatility moves like this, where you see price which is spiking really strongly to one direction and maybe reversing all the way through. Something that I would then do, pay attention where actually price bounces from. Okay, when you have this kind of volatility, price tends to go to the extremes. You can see it on euro dollar, where price did move to, like price spiked all the way through, where there is a fresh supply basically in here. Where did price then kind of go all the way back to? There you go. Like it cleaned every single thing in the middle. Like when sometimes price does spend a lot of time in the middle. When you have news, price doesn't spend time in the middle, right? Okay, price just goes quickly where it has to go at the extreme of a level, all the way back to the other extreme of the level, and then it finally is start to gain direction. You can study if you want to improve the zones where you're expecting price to react from. Study where price reacted from yesterday in the moves like this. Okay, go study through the different charts, S&P, Nasdaq, Euro, Pound, whatever it may be. Go study the levels. Go study exactly if it makes sense or not to you, where actually price is reacting from. Did it respected something? Did it broke something? Go study that. That's a great exercise for each one of you to do, and it's going to improve a lot your price action skills to identify the levels where expecting eventual price to react from. Okay, that's just a tip. That's just an exercise that you guys can do in here. So what can we look for now on the? What can you look for on euro dollar? I can look at Bitcoin in a bit. Gold, Aravind, we already talked about gold. We are at a good level of demand. Price can still respect the supply. It depends on the time frame that you're looking for, and it depends on the strategy that you're looking for. We are not exactly here to say it's a buy or a sell. I mentioned the two levels that I'm looking for on gold. So You can use them as you want, and then just use the strategy that you are looking for. Okay, I mentioned that I had this demand zone. I had maybe a little bit of that level, but you have this level that was support becoming resistance now, which price has already bounced from as well. So you can use that information as you want, and decide if you want to buy or sell gold. Okay, so that's then on you. What am I looking for right now? Right now, what you need to think about is, does it make sense for price to start reversing from this level on euro dollar, or should we expect eventually price to go slightly higher? It's not a bad zone, to be honest. It's not a bad zone. Price also had this left shoulder, and we have that supply level. But to look for shorts at this point in here, I need to see some weakness, and I don't see any weakness at this point on euro dollar just yet. And by weakness is maybe, okay, price by any chance starts slowing down a little bit in here, maybe doing something like that, pretending that's a double top. Maybe price now breaks a little bit higher and now maybe starts breaking these lows. Maybe that starts showing some weakness, that price could start turn, maybe going me back into this level where it was before. If prices continues to move like it is moving right now, which is basically retracing in here, we're testing the demand zone, and then maybe just continue to push higher. Then in that sense, maybe price can just continue to move, and I'll just wait until eventually there's any signs of reversal in here. So I'll be patient. I'm not going to be just selling euro dollar just maybe because price is close to a top, or because it made a big move. I want to see some price action confirmation in here before jumping into that. And just to analyze as well the dollar index. Okay, so this is basically the analysis that we had since we created this low. So since price broke this low that I was bearish, that was my expectation. And I also mentioned several times that two levels in here that we could see a continuation to the downside. Okay, one, it will be as soon as price basically breaks above this structure, we could find straight away some selling pressure, kind of collecting the liquidity above this level and start pushing lower. Or we could then eventually continue to go a little bit higher, maybe retest some of this structure before continue to move to the downside. But I was already bearish, no surprise whatsoever with the direction that the dollar index is taking in here. Because we actually broke this low, there is literally a lot of space in here until price gets closer to this level again. And yeah, overall, this was already kind of a break to the downside as well. So this was a kind of a nice move that happened in here on the dollar index. And the same situation is happening with the euro and the dollar. So price also retested, now reacted from this supply level, and it can just continue. There is no break. We didn't manage to break anything in here, so there is no reason whatsoever to start forcing buys in here. Okay, if price just continues to do this and it continues to respect the previous high, there is no need to start looking for. There is no need to start looking for longs. Maybe you want to try to catch this small retracement, but that's a high risk kind of a setup in there, until you eventually do have a break of structure, and then you can start considering potentially looking for longs. Otherwise, just let price move. Don't try to sell it as it is right now. Sorry, to buy it. Yeah, that's at least to be my take. And price can go slightly lower in here. Can go a little bit lower. But yeah. So something, for example, something that you can start doing is, okay, let's start tracking the previous high. Okay, this is now the previous high within this basically supply level. Set up an alert in here. If price starts breaking this level, now it's something that you can start paying attention to. Until it doesn't happen like that, just continue to wait. If you are looking for sales in this case, or if you are looking for a continuation setup, then maybe this is a good level to start to short it. When price rotates back in here, maybe you can short it again. Yeah, it depends on the approach that you guys take. What other pairs? Fabian asked also for pound dollar. Yeah, you can take a look at the pound. Pound, no surprise whatsoever as well, because on the pound, we never even managed to break structure to the downside. So overall, I was also still kind of bullish, and we had all this compression in here that eventually I would like to see price breaking. We actually managed to break above this high in here, and all this is compressed, so no surprise actually that price could just break through eventually when it gained momentum. There's no more sell orders in here, so price will just jump, and now we are getting closer to this level. So on the pound, by any chance, that will be my next key level to potentially start looking for sales, maybe somewhere around here, or even somewhere closer to that structure. Again, I want to start seeing some weakness on the pound dollar before looking for any sales. On a higher time frame, what do we have in here? Where is price actually reacting from? Okay. So what do we have in here on the bigger picture, right? Even just as a sequence from here, okay, we have new highs, new high, price retest, respect the low. We have new highs, price comes back, retest the extreme of the low. So the tendency, just by this sequence, right, what we have, we should have a kind of a break to the upside. So the tendency, just on a higher time frame, on a weekly time frame, I'll actually be expecting eventually for the pound dollar to take this new high. If we had broken this low, that could be a different story. But price actually came all the way down in here. It respected the low, basically almost to the pip, literally to the demand zone, to the extreme in there. And since then, it's actually moving to the upside. Now, question mark is: does it make sense that this top makes is it a good level when looking in here? Okay, does this make sense to be the top, or should be expecting eventually price to get a little bit closer to this extreme in here on the pound dollar, or even to go perhaps even something a little bit deeper into this level, which is still above that high? So that could be also the next destination in here on the pound dollar. So bigger picture, I could still expecting this pound dollar to move more to the upside. That doesn't mean that you're not going to have any bounces from price in here on the lower time frame. Okay, I'm just talking about the bigger picture, the direction that eventually I'm expecting the pound dollar to move towards to. Because in the lower time frame, yes, somewhere around this level can be an interesting zone to expect pound to react from, and maybe then somewhere around here. We can also try to see already where did price reacted from. I hope I have enough time frame in there, or a lower time frame, to pay attention. Yeah, I'm not sure if I can do that though. Yeah, I'm not sure in the trading view if I have enough data to go there in the lower time frame. Just 5 minutes.
I think if you use the replay tools, if you go there on the daily,
yeah,
and then
that could make sense.
Yeah,
I think that would be the best way. Yeah, can I go there then? Until which time frame can I do it? Oh yeah,
you can go all the way down to the 1 minute if you select on the replay.
Yeah, so just run a little bit of use. Okay, cool. Okay, this is an aggressive candle. Okay. Yeah, I don't have that on 1 minute. But as you can see, there's not exactly, well, there's a little bit of a decision point here. Price break, retest, and there's maybe something in here. And then basically the next level, at least on the 5 minutes time frame, it will be a little bit higher. So that's maybe where price eventually wants to go towards to. So yeah, we'll see. On the pound, let's just delete everything in here. On the pound, we'll see how price eventually is going to approach that zone a little bit higher. But I would like to, that's more where I'll be looking for shorts. And just as a tip as well, right? So imagine that I want to short, imagine that I actually wanted to short from somewhere around this level. I wouldn't like to short from that level. The price would just move in a straight line. Okay, I wouldn't like to do that. That shows a lot of strength. So something that I like to see is if I do see a level that maybe potentially I want to look for shorts in there, I would like to see price slowing down even before it gets there. So this kind of move like that we have in here, it's actually good. So I can see that maybe price is starting to find some sellers interested to start fighting price in here. So maybe net price can go up a little bit more and can go down again until eventually starts compressing, starts losing momentum until we finally get to the level where I want. And then that's a much better scenario for me to try to short it instead of just a complete straight move up like that. But if you do have a straight move like this, usually price can bounce a bit, but the likelihood is then to break the high again, instead of actually having a proper reversal situation. So it's actually nice to see price already starting to slow down even before it gets to the level where you want to potentially short it from. So that's nice. That's actually nice that price is already slowing down in here on the pound. Maybe let it go higher a little bit more, and then eventually we'll see. Yeah. If anyone is looking for continuation, guys, just do the opposite. Okay, just wait maybe for a retracement and try to jump into the long again. Yeah, that's basically what you could do.
Yeah, that makes sense. I am looking at definitely looking at potentially shorting this, but it's need to wait for that good confirmation. And then also I would probably risk a little bit smaller than what I usually would do, because yeah, It's a big move to the upside. You don't want to be fading a move like this with high risk, because I do feel like trading against a move like this is not always the best idea.
I'm kind of vaccinated against it. Right, I've lost way too much money trying to just sell the first top that is created after a big move, trying to sell that double top scenario and constantly losing. So whatever I'm saying now is because I have lost way too much money trying to do that, and I get completely obsessed trying to reverse or trying to catch the top straight away, and being killed way too many times. So I prefer to wait at this point. I prefer actually to see weakness before trying to sell it. That's why, because I've been there.
Yeah,
I've done
think
that way too many times.
But then the question becomes like, at what time frame? Like what is weakness? Is weakness on the daily or is weakness on the 1 minute? Like what is weakness? I think that question is a bit subjective. Depending on who you ask. I mean, so on the if you go to the 5 minute there, I think you go to 5 minutes, you zoom in a little bit. I think we're seeing potential weakness, right? Potential weakness here, where we had a sharp move first to the downside. We're trying to recover. Yeah, that green level, we lose that, and I believe the first sign of weakness.
Yeah, this could be at least on the euro dollar. At least we didn't even manage to break. I think the demand zone is still here, so we didn't really manage to break. But on the euro, on the pound, we did manage to break it a little bit. But weakness for me, yes, it involves breaking structure. In this case, could be, but even though this is just a 5 minutes time frame, so when you do also have a big move to the upside like this, also try to see the other candles, maybe 15 minutes of 30 minute structure instead of just getting too zoomed in on the 1 minute break of structure. Because maybe you're breaking a 1 minute zone of structure, but you are respecting something else more valuable on the 15 minutes or 30 minutes, and price will just continue, and you start that derail of losses of trying to sell double tops. And then theoretically, like one of the main things that people are trying to do is try to sell double tops. Is just one of the most basic strategies that everyone does, and in this situation, it tends to not work that well sometimes. Something that I also try to pay attention is where is the price actually reacting on the left side. For example, is this high already reacting from something important? In this particular case, if I do see that I have maybe a supply level, maybe slightly higher, I will not be selling right now. Because this may be actually just to starting to build some kind of trapness, kind of create some traps in here to force people to sell into the wrong direction. There's maybe a trade in here. Maybe could try to sell from here all the way to the retest of this low. There's maybe something in there. It's just not the trade for me. Maybe there is a selling here. I'll just not participate on it. I'm not expecting this top to be the final top for today. I'm expecting this top maybe to continue from price to go slightly higher until it creates a better top. So yeah, that wouldn't be. That's why I wouldn't really try to catch it just yet. But that's a good question what you ask, and it goes into experience, it goes into practice as well, and testing. You guys can test what is weakness for you or what confirmation it is for you.
Yeah, and also you need to have a good idea of the idea that price action is fractal, and the fact that whatever if anything is going to happen in price action, it's always going to happen at the lower timeframes first. So if the higher timeframes are going to reverse, you're always going to see the first signs on the 1 minute, and then the 5 minute, and then the 50 minute. You just have to choose or look at the data and the probability. At what part in that cycle do you have enough confirmation? So if you look at the daily, for example, you have a daily uptrend. Now that daily uptrend will first show a sign of rejection, or show of a break of structure on the 1 minute, and then the 5 minute, and then 50 minutes. So at what time frame do you feel it's confirmed? And I would say, it depends on who you are and what you've tested and what system you're trading. But for me, if I'm looking at a high time frame trend, I wouldn't see confirmation on the 4 hour. If the 4 hour is breaking structure, then I have pretty good confirmation of the first sign of a break of structure in the high time frames.
Yeah, either that or a clear level of support or resistance, whatever, that it's been holding for a few times, and you literally see a break of that structure that's maybe even visible on all time frames on the daily, 4 hour, 1 hour, or whatsoever. And that's a strong level that when it's broken, you kind of get your confirmation that is a proper break in there, which is also possible. Someone was asking about. Go ahead, sorry.
So I have a. This would be the idea that I talked about before leaving, where you're having basically that rejection. Now it's still an uptrend, right? But it is the first sign. Like I'm saying, if you look at the 1 minute, this is
this
is the very first sign of a break of structure, breaking that level and creating a lower high. Looking at the 5 minute, you're breaking that level as well. Going on the 15 minute, the only thing that would be a sign on the 15 minute is this. What is that? Is that a hammer or a shooting star? What is that? Is that
That's a good question. I'm not sure. Yeah, kind of a pin bar. I'm not the best of naming the kind of sticks.
I should know this because in June I have this CMT test. And it's going to be like it's a 4-hour test with 200 questions, and I should know this.
That's
so
is it multiple choice?
Sorry,
is it multiple choice? The answers, the questions.
Some are multiple choice and some are written answers.
Okay.
I like multiple choices. It's just better than a written answer. Okay, so this is either a hammer, shooting star, or a pin bar. We gotta look this up, guys. What is this? I know it's probably a hammer. Is it a hammer? Is it a shooting star? Because shooting star and hammer is the same thing, but it's just for top and highs.
Florentine is saying that is a shooting star.
Yeah, it is a shooting star, but isn't. Yeah, that's a shooting star. Let's take a look at the hammer. No, okay, so no Okay, so a hammer is when the body is at the top, and a shooting star is when the body is at the bottom, and a pin bar is when the body is basically bigger. And a pin bar usually, this could be a pin bar as well. I mean, it could be a pin bar as well. It's either a pin bar or a shooting star. I need to inverse hammer. It's an inverse. Man, there's so many. Okay, give me a second. I'll be right back.
He's getting the book for sure. But yeah, guys, don't feel sorry for not knowing exactly the terminology of the candlesticks. It has been maybe 10 years since I last read kind of a technical analysis book, so that explains the names of the candles. All of a sudden, then you just start looking at the charts and you create your own patterns, and you don't really care anymore about the names of the candles. But yeah, most likely I would fail the test that Jonatan is studying too, because there are things that I haven't really studied for a long time. Okay.
Okay. Had to run up 2 stairs to get this.
Exactly, the book.
Here we go. I'm gonna look at the book.
Uh-huh.
We're gonna look. What is it? Okay, while I do that, you can look at something.
Yeah, we can look at. Someone asked me, who was it? First of all, José, the live stream in Portuguese is at 5 p.m. Monday to Thursday, and then Tio Patinhas asked me if Aussie dollar is a good level to sell. Potentially, I would like you to see. Actually, I would like it to go slightly higher.
The book is CMT. It's CMT level 1. The big book. How many pages? 700 pages. It's
quite expensive, I believe.
It is quite expensive. I think it's $250 for the book.
Yeah.
Then the test is $800. But it's 3 tests. I think in total it's 400. That's 4,000 for the whole course. So it's CMT, right? And for those of you who don't know what CMT is, CMT is a three-step course where the first one is level 1 and level 2 and level 3. And when you've gone through level 3, it takes takes somewhere between 2 and 3 years to go through everything. And after level 3, you get you become a chartered market technician, and you get to have that little title in your name, CMT, which is a professional designation, and it shows that you are basically an expert at technical analysis. And it's not necessarily for trading. It's more like for people who want to create a career in technical analysis and in trading. Not specific. Mm-hmm. So if you're only going to be trading, then you might not need this course. But if you want to work in the profession of technical analysis, then highly recommended. Really good knowledge in there. But the thing is, like, as a trader, I'm not going to use all of this as a trader. But as an analyst, I'm definitely going to be using most of the concept. But as a trader, I trade price action. I don't even use any indicators. But this is mostly about understanding indicators, what they do, how to create a system, how to backtest a system, and how to build portfolios and all of that. Very interesting stuff. Okay, I'm going to look up the definitions, what we talked about.
Yeah, let me just continue here until we get the answer. So Aussie dollar, again, it's a bit similar to euro dollar and pound dollar. Is this the level? Is this the top? And price is starting to reverse from here, or are they going to continue to have slightly more upside? Something to be aware in here on the Aussie dollar, just to have a little bit of a bigger picture perspective, is that looks like that price is also shifting in here. Like we start to break some structure in here, we broke even that previous high. So we're starting to have a little bit more of a bullish momentum, breaking some structure. It's true that now price has been holding this level, but now we also created kind of this kind of double bottom in here. So eventually I wouldn't be surprised if price actually starts challenging and pushing higher on the Aussie dollar, just with this kind of shift that we have in here. And why does that matter? Because when we are approaching a top to try to decide if you want to actually sell it as a double top, even if you are not looking into a trade like this, like you don't really need to be looking almost for a swing position here, but it matters a little bit to know where price is coming from, because maybe the likelihood or the odds of this high holding price, it increases if price doesn't really react from something important, or maybe it just broke some structure without reacting from something relevant. If price actually already makes a big move down, maybe reacts from an important low or demand zone, and it looks like that you are shifting in here, then maybe it can start decreasing the likelihood that maybe this top is going to actually hold it as a sell, and can actually hold it as a long, kind of a flip zone in here. So that's why sometimes also it matters to know a little bit more of a bigger picture perspective of the levels where price is coming from. But yeah, personally, I think I would prefer to see price going slightly higher before looking for that turn. We did manage to take this high. That sometimes that's enough. Price still respect the other one, and sometimes just taking this high is enough to start turning. But I would prefer to see price going slightly higher. The level that in here that we need to pay attention. Just pay attention also to this demand zone. If price continues to hold this level, then the likelihood is to go higher. If price maybe starts breaking below this, maybe then there's an opportunity to look for a short all the way until there. So yeah, just be careful with this level in here. The price can still hold to the upside.
Okay, so
did you find?
I did. So the it's an association called CMT Association, and they've been giving this title since the 17th, I believe, 1970. Wow, the English. Anyway, so Hammer and Hanging Man and Shooting Star and Inverted Hammer are basically very similar. So you have the Hanging Man and the Hammer is basically the same candle, but a Hanging Man is bearish and a Hammer is bullish. Let's see if you can see it. I don't think you can see it. It's okay right here. So
we can know, yeah.
Okay, so that one the bearish one, you can see that they're the same, but one is bullish and one is bearish. And the bearish one is a hangman, and the bullish one is a hammer, and there's no wick to the upside. And then you have shooting star and inverted hammer, and they are basically the same but inverted. So that's a bottom formation. So, and a pin bar is when you have, for example, a pin bar would be a shooting star, but with a smaller wick to the downside. So this one right here, technically, is neither of the patterns. It's more like a pin bar. But the thing with these candlestick patterns and the short term pattern is okay. I just lost my train of thoughts. Someone, my fiance walked by the office. What I'm talking about? Okay, yeah. The thing is with this. The thing with these short-term pattern is this right here has similar characteristics to a shooting star, right? A shooting star and potentially an inverted hammer. So the patterns they don't need to look exactly the same, but you need to understand why it looks like this and what it might mean. And it means basically that there's it's a rejection. It means that there's more selling pressure than buying pressure, and the fact that the close of the candle was very close to the open of the candle means that there's also indecision, right? There's indecision with more selling pressure. And that's information that can be useful in analyzing. So if I switch over to my screen here, you can see what I'm talking about right here. Now you have this top formation where if you connect the this high and then this with that low, it gets sort of like this triangle. And you see the fact that if this candle closes like this, you have price action between the open and the close is very close to each other, with big wicks to the upside. Means there's a lot more selling pressure than there is buying pressure. And according to the close and open, there's a lot of indecision in the market, which tells me that price is basically slowing down. You have a very strong bullish move to the upside, and then it's clear that it's hitting resistance. There's indecision with more selling pressure, and price, I think, seems likely to move lower here. It doesn't really matter what it doesn't really matter what the name of the candles are. It's just you need to understand why. What is the principle behind those candles? Because I see a lot of new people. They're like, oh, it's a bullish engulfing, therefore it must go up. No, you need to understand like why. What is a bullish engulfing? Why does that candle look like this? And in what context are you seeing this? The exact same thing happened here, right? Exact same thing with that low, but not the same thing with the candle close. So more selling pressure, more indecision, and this is, to me, looks very likely that we're going to move to the downside. Now, if I would have to like put a probability in percentage, sound like one of those and news analysis, which is like, oh, this is a probability of 70% of moving to the downside. We don't know. We have no idea, but it looks like it's gonna move lower.
I like that. There's news that just came out while you were explaining about the forms of those candles, and yes, the weather analysis you just did there. The unemployment claims, it is worse than expected. So that's a sign of contraction for the U.S. economy. And that's perhaps another reason why, an extra reason argument for dollar weakness today. That's the theme of today, dollar weakness. It's extreme, the kind of, changes just one decision, Trump that is, with his tariffs, that long list we all see in that press conference with all these percentages hitting just about friends and foes with tariffs. So it's going to be it's great to see how, you know, the geopolitical events, how much, and especially now how much they affect, you know, the markets. Obviously, that's what the markets are, right? The fundamentals move.
People are saying that it's better than expected and not worse than expected.
Is it?
Well, let's take a look. I don't even know what we're talking about. So let me go into financial juice here and see if we can find anything.
It's worse than expected because they were expecting 225,000 and it was 219. So it's less than what they expected.
Yeah, it's less, but in this case, it's
never
good
doubt Victor. That's what I thought. You're going against Victor here. He knows numbers. Okay, you don't bet against Victor when it comes to the numbers. If he says it's unexpected, low, worse, then we gotta trust him.
Yeah, no, but in this
on that bombshell, I will take a quick break. I'll be back in just a bit. Okay.
No problem, Pedro. You were saying. Are they talking about perhaps another metric that came out? Because maybe, let's see. No, there's only one thing that
no, it's just
released.
because what we're talking about in here is the claims, right? So in this particular case, you actually want to see less people asking for claims, which means kind of there's less people in need of support. So in this particular case, like in this particular case, you actually want a lower number than higher.
Obviously.
Yeah. But in reality, these unemployment claims, it has been in a range between 220 to 140. So anything that is in between kind of that range, there's not really an issue. You can literally look at the data history for the last 1 year and some. It has been always the same. There were maybe a couple of weeks where there was close to 260. That was a problem. But in theory, it's just around 220, 240. It's relevant, basically.
Yes. Maybe of course, everyone is watching the Fed, right? With now the tariff that has, it's known. It's not an unknown anymore. It's known, right? That's why we see gold retracing, because, you know, a certain amount of uncertainty has been taken away from the market by knowing what the tariff is, what Trump has done. We knew what it was going to, but not exactly, you know, to what extent, and you know, which countries, which sectors are going to be hit. So now that we know, uncertainty is a little bit out of the equation, not completely, of course, but somewhat. And the question is, what will the Fed do? Right now, we have monetary policy. It's now a fact. With what will, so all eyes are now not on Trump, but on, well, actually on the countries that were hit with tariffs. What are they going to react upon this this decision of Trump, right? The administration of Trump. Are they going to counter with their own set of measures, whether or not? So that's one thing on the political side, but the on the, you know, monetary policy, now the eyes are on the Feds. They are in turn read the economic numbers and their projection to see if they're going to do anything about the rate. So these labor numbers are particularly interesting for the Fed, right? They give us, these are the numbers, labor, right? The job economy, job market, and the inflation. Those are the two main things that the Fed look at when they decide whether to move the interest rate or not. So it's very interesting to see what they will be, how they position themselves going forward with these numbers.
Exactly. Which I kind of mentioned that already to Jonatan as well. And the first time that we are going to hear from the Fed Chair Powell is going to be this Friday, tomorrow. I think he's going to speak in some kind of conference. So it's going to be the first time that we're going to actually listen from him after we actually know what the tariffs are, and after yesterday's announcement, which is going to be quite interesting. Because up until this point, since Trump was elected, the Fed Chair Powell has been mentioning, wait and see, we are holding back to see what exactly he's going to do. We don't really know. We need to see also how the market's going to react to it. But now we finally know. And maybe I agree with you. Maybe that's why gold actually is moving a little bit more to downside, because of the even though people may say that it's a bad thing for the economy, but it removes a little bit of the uncertainty. And one of the worst things that the market doesn't like is uncertainty. Now at least there is some kind of certainty in here. And the Rascal is asking about oil, right? Oil. We have to understand that oil as well benefits from a strong economy because the price of oil or the demand from oil kind of increases if the economies are doing well. Otherwise, people are not going to, or the companies are not going to spend as much. Maybe people are not going to use, not consume as much, and the price of oil can go down a little bit with that. And we just got into this trade war now, and there is a lot of uncertainty. The amount of purchase across countries, even maybe venture consumers, most likely these prices are going to kind of pass down to consumers in the end. That can lead into decreased price of oil, because that's going to be maybe again, if you get into recession, traditionally then oil also moves moves lower in there. And then in addition to that, I think there was kind of some comments from the OPEC members where they actually are planning to start even producing more oil. So even if the supply side decreases and you are still even increasing more the production side, then just as a traditional move, the price is going to go lower, right? If there is more of something and there is less people wanting that product, the prices traditionally are going to get lower until people get interested again. So that's maybe a little bit of what we are seeing as well on oil in here. Yeah.
Because we with the tariff news yesterday and today, EU, not only EU, all pairs basically are way outside of their normal range. But of course, today isn't a normal day, so it doesn't surprise us. Although the extent of which it is expanding is very not usual, right? It's highly unlikely to happen. But these days they do happen from time to time. You will have, right, every so often, every so many years, there are either crises or events happening, big changes happening at once, and this is one of those that affects the market very abruptly and not completely unexpected, but the extent of the move is unexpected. So let's look at someone was asking about Hamid, our good friend Hamid was asking about gold. Now let's look at gold. Before we do so, I want to check the daily, just to give you guys an idea of what the moves are today. Of course, you guys may have already noticed it, but let's see. We started here, of course. This is the daily time frame, just for comparison.
You are seeing you are showing my monitor. If you want to check your screen.
Okay. Thank you for letting me know. Minor detail. All right, so this is oil. This is not oil. This is gold. This is the what do we see? This is the daily. I'll do the top-down analysis and go to the opportunities if there are any. Just to give you an idea, the ATR, right, the daily range, what would be to be expected on any given regular day is let's see, it's 37. Currently it's at $37, right? And gold started here. That's the open of today, and only on the wick, right? Only on the wick, not on the actual move, but on the initial move to the upside, it already reached $35, which is basically 100% its daily ATR. But that wasn't the actual move. Right, the move was, of course, to the downside, and if you measure from the top to the bottom, we are $105 below the high of today. So basically, the range measured from that high to our current price, and today is not over yet. We've already done almost 300% its normal daily ATR. Just to put things into perspective, this is some major movement we are seeing here in the market. So on that note, let's go to the quickly to the top-down analysis on gold. I'm sure a lot of you guys are watching and seeing Hamid. Yes, ATR broken. For sure broken. It's completely smashed, and there's nothing left of those ATR ranges currently. before we continue, hit the like button. Do not forget, hit the like button so we can continue. It's our oil. That's how we operate, right? You hit the like button, we can move some more forward. All right, so let's go to the top-down analysis on getting on the perspective. Even this is only just one day. It's a huge day, huge down day so far. Probably gonna stay that. Maybe even get even bigger or worse, whatever your side you're in. But on the bigger picture, the monthly, there isn't anything happening yet. The bullishness on the higher time frames is still there. Nothing has been broken. Even with this huge move, it's nothing compared to what gold has been going. So let's not panic and throw the baby with the water yet. I said yet, yes. Well, didn't meant to see that. So the on the higher time frame, there's nothing happening. This is just healthy retracement as we see it, right? You go to the lower time frames, it's super bullish. Nothing has changed. Market structure is way bullish. This is the first time, though. Well, not the first time, but first time in a long time that we are looking at a big bearish wick. The weekly candle hasn't closed. That's going to be tomorrow. More volatility coming in with NFP. But that's, as you can see, we haven't seen, it hasn't closed yet. So we'll have to wait to see the actual close. But we barely, this is the last time we saw one, right? A big bearish wick. And of course we had that one, but that's a few in between, right? That means that something, when you see these indications, they happen more often. This may not be the top, but you can see the deceleration by the frequency of these, let's say, bearish wicks. They present more often. That's a good sign. Even if prices keep on going higher, it's a good sign. You can gauge the deceleration if there is one happening. So that's the only thing I can see here. There isn't any bullish structure or bearish being created. I mean, this is a moving candle, so we really don't even know what it's going to be look like at the end of the week. But that's it. There's nothing really happening here. Nothing's broken yet on these higher time frames. So getting to the daily, and the daily gets a little bit more interesting. For the first time in a long time, the last time we saw really bearishness coming in was at these level when we were consolidating halfway in mid-February, right? Other than that, we haven't seen, that wasn't an outside bar, and this one is an outside bar, right? Other than that, you have to go back, way back to get some really bearishness coming in until today, right? This is, well, we don't know yet, but it looks quite bearish, and it's likely, unless there's no news coming out, Pedro, right? Between now and the end of the day, is it?
Services PMI, I think, at 3 p.m.
Services PMI, yes. All right, so, but I wouldn't think that's going to change the market completely, right? So it's going to be fairly safe to say that we're likely going to end up below the low of previous day, meaning we're going to highly likely to end up with a outside bar, a bearish one we haven't seen in a long time. So that's, I think, the change here. Something has changed. Of course, we know we have been talking about it all day, but something has changed. We might be opening door for more bearishness, right? That's it. We have to wait for the close, and whenever it closes, not whenever, at the end of the day, when it closes. Hi, Jonatan. And when it closes,
Victor.
Hi. The trade, of course, tomorrow. Maybe this is something for even when during Asian session, right? We might see a pop, right? All of this bearishness in the market by the end of the day, maybe before the end of the day, you might see like a relief rally coming in. It might happen, might not even happen. But if it happens, then I would be very interesting to go short from this order block, because now the market has given us a sign. The market has told us, I want to go down. I want to go lower, right? So now is the moment. Okay, we know the direction. Now is the timing. If you're swinging, this is, of course. If you're intraday, you're probably already long, short, and perhaps even taking your profits. But on the swing trade side of things, the moment is waiting for price to come back to these structures, and then you short it. If it does, maybe it's not going to do it. If and you short it for the continuation move, right? So that's the opportunity here. It's about being patient, waiting for your chance, for your turn, and then you participate only if the market really does what it's telling you that it's the possibility, the scenario that you could be getting in. If you go to a lower time frame, you can see all that big handle, that big create. That we had a demand era that was completely smashed by this current candle. I haven't taken it away yet, and it's because the candle hasn't closed yet, right? So I'll have to wait for it. Although we all know this bullish, this demand area is, it's virtually gone. It's not there anymore. So it's just a formality before we take it off. Now you ask, perhaps you're gonna ask, what is the next move in gold? What do we have? Where's the opportunity? Where is gold? Is gold going to continue to the downside, or can we get some kind of a reversal, even if it's just a retrace from current levels? Well, if we go to the daily, there isn't anything. As you can see, the only this isn't a daily order block, right? This is the only order block we have in view, meaning eventually I would think this could be a nice target. Either it's going to continue to go down, or with some retracement, right, up to that order block that I just mentioned. But eventually, I think this is the area we want to be eyeing as a target. Not necessarily today or tomorrow, but coming couple of sessions. On the H4, what do we see? This is an H4, not a daily. It came in right to the next, right? It broke one structure, and where does it go? Typically, price goes from one level, it goes to the next one, and so this is the area.
Victor, sorry to I'm gonna go ahead and interrupt you here quickly. You're talking about the bigger order block, the bigger block that you have at the very top. If I understand you correctly, you want to enter somewhere in that the order block that we're seeing right now, right? You want to enter somewhere in there. So
yes,
this is I think this is the difference. I think this is the difference between you and I. I want to enter on the 4 hour. Yeah, exactly. I want to enter here, and you want to enter higher. And so we're basically trading similarly, but I'm getting lower risk reward. You're getting much higher risk reward, and I think I have a higher win rate, and you have a lower win rate as well. And it's all about the difference in entry.
Yes, absolutely. What I see is this. I see the reversal pattern, right? I see, yes, you name it, in its natural habitat, a quasi, right? That's the quasi. It breaks it. And then what is my job when I see this? Is in my case, I don't enter anything below here, because I understand that this was the move that broke the structure. And I'm going to be waiting for the retracement of that move that broke the structure. This is the move. Let me point it out. At least that's my point of view. I'm not there are thousands of ways to approach this, but the way I do it is, this is the move, right? The current move we're in. That's the move that signaled us that there is a change, right? That's the break of structure, and I'm going to be waiting for that retracement of that move to get in the same direction. So I'm gonna trade this move that we're seeing, just not right away. I'm gonna wait for the retracement, and then I hop in. And then the difference is that sometimes the market doesn't come back, right? And on those days, Jonatan will catch it. I won't, right? And some other times, it will come back and I get in, I get my trade. And of course, it doesn't happen that I win all the time. But if I do get my trade and it works out, I would likely have something, a high risk reward ratio, actually much higher than that. If this is on the H4, it would be something like around 10 or so. But in the meantime, I might have to try this a couple of times. But I think it's very insightful to be offered for the viewers different approaches, different ways, because we're not all the same. And what works for me makes sense to me, but it might not, make sense for everyone. And as we saw earlier, how market condition like we are currently seeing is exactly what Alex is waiting for. He's training for his moment of, don't want to say moment of glory, but that moment that he can execute and seize the market. There we go, Alex is right there. We're seeing, Alex, about the difference between you and Jonatan, where you're waiting for these high volatility moments.
Sorry, I can't hear you. It was everything was muted. My computer was muted, so I missed everything that you were saying. Sorry.
It's okay. It's okay. We were just talking about the difference between, this move. It's clear, right? It's bearish for gold, and the difference in between, for example, Jonatan and I. Jonatan is already looking for a, with a shorter retrace to get in, and I'm looking for a much bigger retrace. It's just a matter of.
Victor? Would you say that my entry is like there's a bigger probability of seeing a rejection at my level, but there's a bigger reward at your level?
Are we seeing how big?
Alex, let him answer. Shh. Let him answer.
My level is bigger than your level.
No, what I'm saying is, but this is the difference between what is Dirk doing here. Wow, Dirk as well. We're four. How many are we? 5 people.
I want to hear what Dirk is going to say about all
Man,
this volatility.
If I were allowed to swear today, I would say something like, I'm getting effed left and right today.
Thank you very much. I am not the only one getting effed right.
Oh my God, what is going on? It's crazy.
Yeah, thank you very much. I have also
very polite way of saying it.
I've also been effed today, but that's only not because of the market, because of myself.
Yeah, of course, it's because of myself and my stupidity that I was trying to buy the bottom in gold. Great done. Nice.
Gold effed you as well. Gold effed me.
Wait, did you try? You tried to buy? Oh, you bought gold before this?
Yeah,
move.
I did. I had a long position yesterday already, but I was stopped out of it. But it was okay. That cost me $500, half a percent, all good. But then earlier, I thought I was like super smart and thought it was a good idea to buy again at 3,090. And of course, I just bought again. So, to risk another percent. Oh man.
Yeah, and I was short the NASDAQ. It hit my TP a couple of hours ago after taking me out with some insane slippage.
But it's what in the world is going on today? It's like, why is like everything down? Doesn't make any sense.
I don't know. Do you know that's the thing we were talking earlier, and it's like, why would I be trading gold when just euro and pound are flying?
Yeah, really, absolutely.
Yeah.
2.5% nearly on euro, and we're there trying to pick the bottom of gold.
The answer is because even 26 years of doing this stuff sometimes doesn't protect you against being a stupid idiot.
Do you know what? I had the exact same thing. Yeah, I agree.
That summarized like 26 years of experience. Is like sometimes you're just stupid,
So, anybody in profit today? Victor, Pedro, Jonatan?
No.
I took a short on the.
I looked at
You
my
took a
P&L
short,
this morning
Petro.
and I said I'm not going to be
I took a
trading
short on
today.
the S&P, but I closed it too early. I was wishing that price would then go higher, but now price looks like it's just moving down.
Still, that makes you the goat today.
My transaction was quite good. It was actually at the top, but unfortunately, I'm out already.
I didn't put any trades on, so I didn't win, didn't lose.
Guys, I gotta take a quick break. I'll be back. I'll be back later.
So where did you get in long, Dirk?
Well, yesterday, and then hold on, since I'm still in that long position, let me quickly check again. I have my first long entry at 3,088, and this second one I bought at 68 or 69, actually, to be more precise. So that one still okay. I'm still, of course, a bit banking on the rebound that's going to come sooner or later. But I mean, this is a typical example of how you can make your life difficult, because the momentum was, of course, to the downside. So I really could have just ridden that momentum, but I was reluctant to do so because of the strong upward momentum we've seen in gold for the past weeks.
It's okay. I was buying up at 127.
But you stopped out also, I hope.
Oh, no, I was stopped out quite early on, and I decided to get in again. So I'll pull up my chart and just show you how I ate up my profits from yesterday. Let's see if that's just the right one. So yeah, we were basically in this area. And it came into demand. And I was looking on the 1 hour, and the idea for me, I was like, okay, it's coming into all of these EMAs on the 1 hour, and it's gonna hold. And as you see, it basically just didn't. And I was just buying it, especially on the 1 minute. I was buying all of these areas. So I bought here thinking it was going to take out all of these highs. And then I got stopped out, came back in at this level to take out these highs, and then decided to cut it when it came down into this candle, and then I decided to get in the last time right here, and then ended up just cutting it early. So just mentally not the best types of trading, to be honest. I think it was just, I was looking just tunnel visioned, it being up.
Exactly my thoughts as well, yeah, when I saw that. And now, of course, in hindsight, it's always easy to say I should have or could have done that. But if I just look at, what were the moving averages that I usually look at, the 21 and the 50 EMA doing, it was very clear. It was a very clear short entry, the first one being earlier at 3,110 already.
You're singing to the choir, because I'm looking at it now. I'm like, how the hell am I thinking that it's long when this is how I trade. I would trade as well. Like if I turned it inverted and we were here, and it broke up against all of these EMAs, we'll take it back. We'll take it back to
exactly that one. That would have been your point of entry, right? Yeah.
If I would have seen that, I would have gone, okay, probably going to get into something like that, and with a long position from that 50. That would be it. And I would aim for that would literally be the setup that I would take in if it was a long. Yep. I didn't get taken in, but there you go. It's sometimes, I don't know, sometimes inverting your chart is sometimes one of the best ideas, to be fair.
Control I is your friend,
Yeah. I don't really see that it was a bad trade on your side. You actually entered a good spot. I think maybe more the managing of the trades it was, because you entered which you had support. Like if price by any chance was about to go higher, it will go there. And you actually had a reaction after your entries. Yeah, like it was not a bad entry. It was actually quite good entry. Yeah, you were just completely biased of looking for price to retest the highs. Like I think that was more of your mistake.
The issue wasn't the trade. The issue was the emotional management behind my trading today.
You're looking for high, right?
Yeah, that's the annoying thing. But also, like I said, I came into today because in the past where we've had this kind of volatility, I've made some amazing profits. So seeing that, I've come into the market today with, okay, this is game time. And because of that over risked, and because of that, I've then mismanaged the trades, which has then given back all my majority of my profits from yesterday. So even though this was a good trade idea, the overall idea would have been to keep my stop below the low and to have left it, set and forget, and that's it. If it would have taken me out, it would have taken me out. But getting out of the trade while it was still in play, then getting back in, then getting out, and then getting back in again, that's not good. So, but
it's also a matter of managing your expectation, because the entry, as Pedro said, is as we see, it was a good entry, and the setup, the opportunity was there. You grabbed it. The only thing is you're having an expectation based on your previous experiences, where you're waiting for that moment to hit that home run, and you're not happy with just a base hit. You want to go for the whole 9 yards, right? That's why we're holding. Did you?
Not looking to go to the whole 9 yards at all. Getting in the same. Not at all. It's just the fact that I think it was just a little bit of mismanagement of emotions today. I think being gold, it was a great place to buy. It's come back down to an EMA, come back down to a demand area. We've had a reaction. That's a good buy. There's no need to keep playing with the positions. But especially if I look at euro, and at the same time there was this trade on euro, you got to understand the difference. If we're looking at like the two different assets together, one was looking like that, one was looking down, and one was up. So which one would you prefer to be in long? You'd prefer to be in the one that is trending upwards, really, wouldn't you? So it's about picking as well. Picking the asset that you really want to be trading is a good thing to be in as well. So there's quite a lot of lessons to be learned today, which are good.
Yeah. True. So going back, I think on gold, we were talking about that. You have you're long from 69. 3069, you said, Dirk.
That was my second entry. Yeah. And the first one was 3089.
Basically, you got in somewhere here, and an 89, you said?
Yes, correct.
There. All right, cool. Yes, I agree with the second one, because we are currently in an area where we could see if there's going to be, below us there isn't anything, right? On the daily time frame, there isn't anything. So we don't have anything except this fair value gap, of course, but we don't have anything else for price to target. And this is, let's say, this is the area. If price is going to have some kind of a rebound, this is the area it's going to likely use to have that move. And we are already, what's the ATR saying today? Of course, it's been broken. It passed the 100%. It's at we already mentioned that it's about 300%. So it's quite extended, and about time. I don't want to say now is the moment it's going to reverse, but if a reversal comes at 300%, I mean, it's not going to be completely unexpected. And since we don't have anything else on the other time frames, I would say this is as good as any structure for price to reverse. But the other thing is, personally, I would want to see the actual reversal on the lower time frame, something that indicates that the buyers are coming in. So that could be this area. Let's see. I'm just watching some trades.
I don't know about any reversal at the moment. I do not see any reversal.
Yeah.
It's going to keep going down until...
We just bounced off the 21 EMA again on the 2-minute chart, man.
I think the best thing to do with gold is everybody get off the 1 minute time frame. just let it work out.
What I would do is I would look for signs on the lower time frame for that reversal, because if it is going to happen, there is no other way. It needs to reverse in the lower time frames first. So I would let the market tell us if it's going to reverse or not. Is it going to respect this area or not? Right? That could be one test. If it doesn't, just let it go. And if it does, then you could try your luck at getting a piece of the action for that possible rebound. On the H4, it makes a lot of sense, but there's nothing other than that. Just an area of interest doesn't mean necessarily it's going to. Looking at the 15, if it closes there, it looks very weak. It's likely to continue. If it closes as a continuation, another bearish structure, we're supposed to be looking for that rebound. I would say that that rebound would be off the table. But so far, we'll have to let the market tell us this is the area. This little order block could be your sign, your test to get in or not, if we're going to have some kind of a rebound. And the initial target, of course, is the top of that quasi, which would be let's see, where's that tool? Right, this would be the initial target. If only TradingView cooperates. Right there. That could be, and if you're even more conservative, you can do it below the top structure that we have right there. That would be the trade, just to begin with, waiting for something on a higher time frame that merits holding that trade longer, and perhaps catching the actual rebound if it does come through with such a move. So we're right there. Don't be impatient. Just wait for price to tell us if it wants to respect that structure, yes or no. It's on the 1 minute. It's a little bit too fast for most people, but that's how I see it. All right.
Yeah, we'll see. We'll see what gold we do.
Yeah, it looks very weak. If there's going to be any kind of reversal, it's only temporary, because it has so little legs to stand on, for that reversal. It hasn't given us anything at all. It's so bearish, so weak. We'll have to. It really has a lot of convincing to do for us to see that it's going to change direction. There you go. That's the initial reaction. Right? I feel like what's that guy, Edinburgh? We're watching the animal in the wild. Here we go. It's getting out of the hiding place. Some biologist observing the market price action. No, but that's what it is. It's by not trying to project our desires, ourselves onto the chart. It's just letting the chart talk to you.
Yeah. Now, the bigger picture, when you were mentioning before, that discussion between which level would be entering, if it was Jonathan, basically under test of the previous support resistance, you'll be looking more of a quasi mode extreme. I'll be like you, waiting more for the extreme. I think there's a beautiful level close to the highs that you can potentially look for a short. Or if you could just go straight away, like if you look into that 1 hour time frame or 4 hour time frame, where we were, that can be in like which levels to look for the entries in there, which is different levels. Yeah, somewhere in there. I like even a little bit higher. And those two levels can definitely react from. And Jonathan, yes, is preferable level to be a little bit under test of that first level and try to jump straight away, basically almost as a break under test type of a situation. You and me, you'll be looking more for price to maybe get closer to the other left shoulder, which is slightly closer to the top. Yeah, that will be Jonathan, basically somehow. Yep, I'll be looking for something like that. Indeed. Something like that.
But the beautiful thing is that Jonathan's entry and a more extreme one can coexist at the same time.
Exactly.
Right? You could be
gold broke my computer. Goddamn gold.
You could be trading multiple, Jonatan's entry and some other, structure at the same time, just so not necessarily all the time, but they don't have to happen at the same time, right? This would be Jonatan's entry, right? Something like there, and that could be, it could come to fruition, complete, its target, and then get to perhaps something, something more extreme, like you or I would be entering at. But you said something about, let's look at gold. We were watching that 1 minute structure. It's clear, right? It takes out the guessing out of entering. Should I enter? Should I not enter? Just let the market tell you. What did the market create any bullish order blocks? Did it?
Can I ask a question though, Victor?
Go ahead.
What would signal in that area? What would signal to you that is holding and that's found a reversal? When would you know that that's the signal?
You mean this area?
Yeah. What would be the entry to that, and when would it be confirmed that that's the reversal?
Well, it's about the same concepts that I use, right? So the creation of another order block. If it's going to go up, right? What order block did it create here? That's a bearish one. That's the opposite. It should be creating bullish ones, right? And if it creates a bullish one, that could be a sign, right? So you wait for that creation, that order block to be created. That could be your confirmation. You could be waiting for more things, not only just one. You could be waiting for two, or maybe something on the other time frame. But it needs to be, that's how I do it, the creation of an order block. And I have two different definitions for that, right? And just letting the market tell you what its intention through what kind of structure it is creating, right? It only created one order block there, and it was a bearish one. Does that? Well, I mean, that's clear, right? That's not the buyers, because the creation of the order block is which side is taking control. That's all about the order block. It's all about that. And if we are going to see a reversal from that structure, from that possible entry on, which has that shaded area that I have, right? This area, the buyers, they need to take control. There is no other way. It cannot go up without the buyers taking control. So we just wait for the buyers to do that, and the trail, the breadcrumbs that they leave behind are those order blocks being created. So you just follow the buyers. If they come in, you go in, and if not, you stay out.
So what would be like a typical entry pattern? Then you'd wait for a quasi, and then enter into the right shoulder of the quasi.
Yeah. So basically, what it is we're looking at. You need to have a high time frame, a higher.
Sorry, Victor. That candle on a 4-hour is atrocious. that is just disgusting. None of us should be buying that. None of us should be buying.
True. The thing is, going back to what you asked me, the first thing is you need to have a higher time frame reason to do that. If you're just going to go to the 1 minute and look for quasis, you're not going to be very successful, because you got to have more than just, lower time frames reasons to get into the trade. So one of the first thing is we do have an order block here. To be fair, it's not an order block that I would, it be considered a signal, because it's not part of a quasi and it's not a fresh order block, but it is there, right? So I know we could have some kind of a pop. We are clearly quite extended. So I'm looking for that possible rebound coming in, right? Not a typical trade that I would do, but because it's not a fresh and part of a quasi, etc. But that's the reason that I have for the H4. The other thing is I would go to the lower time frames and look for other reasons. And currently we don't have any other reasons on the H1 and H2. That's another point where it doesn't fit the bill. However, if we are going to get some kind of a rebound, it makes sense that even though we don't have that much of confluence and alignment, that it could come from this order block, this H4 bigger order block. So then I go to the lower time frame, and this would be something like the 1 minute gives you a lot of false signals all the time. We all know that. But you go to like a 5 minute or maybe even a 50 minute, and you wait for the market to break that. As long as it doesn't break it, you don't have a quasi, you don't do anything, right? So just you keep on stocking price until it breaks it, and then you start looking for a possible entry. And in this case, we did have a little quasi that was created. It's a little flimsy for a setup because it's just 1 minute on a 4-hour reason to get in. Not exactly a good alignment, but it was happening within that H4. Right, that's the quasi, established downtrend, breaking of the neckline, and it comes back to this order block. Right, the only order block. Actually, I say only, but let's measure it with a 50% retracement. Right, the only order block below that 50% retracement. So that's the only area, and that's why we only had one area indicated. If we're going to have a reversal, this is a great area for it to do. It doesn't have to do it, it's not obligated, but it makes sense, and that happens very often as well, right? So you wait for price. So the first thing is have a higher time frame reason for a move, right? Second, you wait for a reversal sign on the lower time frame. In this case, not ideal, but that's the example we have on the 1 minute a quasi. That's a reversal pattern. Then you wait for the price to come back to some area in the quasi, which I call entry order blocks, which is a place where it's likely it has a good chance of reversing from that area. Then, right, when it gets there, you still don't get in, right? It gets to your area of the quasi, you still don't get in, right? You wait for price action, actual candles to tell you that the buyers, in this case, the buyers, because it's a bullish structure, a bullish setup, that the buyers did come in. And only then you pull the trigger. So that's the sequence that you were asking me about, Alex.
Yeah, nice. There's I just look at it and I'm like, this thing is just so annoying. Isn't it? It's like the most annoying asset to trade, but
it shows me again why all these years I was so reluctant to trade gold, really. So luckily this is only on an evaluation account, but still.
But it's like because it gives such, when you're on the right side, it gives such great trades. But when you're on the wrong side, if you have if you're not careful, it can really, really hurt you. And it's funny because I looked at all of my stats over everything. The only red asset that I have is gold, and I still trade it. Like, my best asset to trade is GU. Why am I trading gold? Something about the shiny thing that just wants me. I just want it. I want to trade it for someone. It's just so fast.
Yeah, and I think it's also because it's frustrating, that there is this one market somehow you cannot crack, you cannot handle, It's like it's like trader's honor. You want to be on top of things, but then it makes you humble over and over again.
Again, I was saying earlier that I'm super competitive. That could be one of the reasons. Like, it's the one that I can't get the grasp of, so I keep hitting it, trying to be right on it. But it's and I can't believe EU is still pushing up.
It's crazy, really.
I just can't. Yes, it is. What, 2.5% up on the day? And all I'm seeing on Financial Juice is Germany putting retaliation tariffs on Spain. Everybody's just retaliating to these tariffs that Trump has put on. I don't think Trump realized. I don't know if I wonder if he thought that they were going to retaliate. I think maybe he may have thought that they were going to just roll over and do what he wanted. I don't know.
I mean, that comes from the guy who still thinks that tariffs generate income for a country immediately. So I don't think he can think ahead 2 steps.
I don't know what's better, though. Is it better taxing everybody like the Labour are doing in the UK and just taxing absolutely everybody for everything? And they're like inheritance tax and then farm tax and then this tax? Or is it going outside of the US going outside of the UK, and it's like, what poison do you want to take? Do you want to take that poison or that poison?
True.
Yeah, you need to be a strong country to be able to do what he's doing. Like, he's literally making a bet on the US, and we'll see if it's going to play or not.
Well,
again, I think he's playing long term.
A lot of investments into the USA. I'm quite certain that if you run a company here in the EU, or let's say like a car manufacturer in Germany, they will very hard think about producing cars directly in the USA now, because it's just the biggest market that is in the world, and they are struggling so much in China already. But still, this is not going to happen like tomorrow. We're talking about like years until things like this go into action, if at all.
Yes, and I think that's I think that's typical of Trump, right? He's not very diplomatic in the way he do things, right? Even if he has a vision, this way shocking the markets probably isn't the best, most diplomatic ways to get what you want to get.
But as well, maybe in a business sense, shaking everybody up. Everybody's in panic at some. We're in panic. They're in panic. Everybody doesn't know where to put their money. That is a really good negotiation tactic when you've got everybody panicking, and he's the one saying, "You know what? I can calm everything down if you want."
It is.
I hate to toot his horn. Actually, I like to. He's great. I actually think he's fantastic, but.
It is.
Like yesterday. Go ahead, Victor. Sorry.
It is. No, it is. I think you're absolutely right. As a deal breaker or deal maker, I think Trump is a much better, actor in his position, not a acting actor, but an actor is an agent, than other perhaps politicians, because he's a business guy, and he knows how to do these deals. And you see that, he comes in with a strong arm, and he presses and he crunches until he gets what he wants. And usually he's very good at it. But is it good for the people? Is it
even
good
yesterday, did you guys actually listen to the conference or not?
Yeah, I was actually looking at it live yesterday. I was trading a bit also yesterday.
Did you see the way he was talking about? He was like talking. So he was announcing, okay, so now 50% tariffs on China. Who doesn't like this? Like, no. So do you prefer this, or do you prefer higher tax in the US? Don't you like? And then he's naming someone in there on the audience. So what do you think about it? It's beautiful, right? It's amazing. And then all of a sudden, he hitting on the Democrats, like the sweepy Joe Biden. He was not doing this. And now, okay, now let's go to the UK, and then Europe, and then I don't know. Any other countries that you didn't even know existed before he mentioned it yesterday. It's incredible that even the way he speaks about it, like he was making fun of everything, in the way he talks about it.
And in a way, he's very charming also. Like,
yeah, it's his personality.
Yesterday. He like brings up one of the old workers that was working, I think, from Ford or some American car manufacturer, says, hey, do you like what we do here? And this guy's like, oh, thank you so much, Mr. Trump. And one thing I really like about him, I must say, on a rhetorical level, he's really, really good. He can talk for hours and hours nonstop, and you never hear like an that he kind of loses the thread of what he wants to say. And I really think that is quite astonishing, considering his age also already. Especially if you compare to somebody like Joe Biden, where you constantly were feeling like, my God, is he going to piss his pants, or what is going on down there?
I wonder what Joe Biden would have done to make moves like this happen. There's something, it must have been like a disaster to the US. Like he did something really bad.
We're talking about a party whose protest is holding up signs in the Congress. So there's nothing. All right, guys, I gotta make a move. Let's see where this is heading. I think we're going to look back at this eventually and say like, whoa, there were a lot of good chances, and hopefully we pick them.
Yeah, definitely. I think we're gonna be in for a nice 4 years of just very interesting moves. It's gonna make some really Really good war stories, I think.
Yeah.
But then again,
All right.
what are
Take care, guys.
See you later.
see you, Dirk. See you
Dirk.
again soon. But then again, what are we complaining about? We want volatility. We got volatility, right?
Yeah, I'm definitely not complaining. I can't wait for the next 4 years. It's fantastic. God, I haven't woke up with so much energy in my life. Wow, God, EU 300% up. Where's my coffee? Oh God, gotta get to work. 200 miles an hour on my motorbike. Get into work, lose 5%. Yay.
Oh my God.
That's true, and
yeah,
we are only started. I think this is just the beginning. Who knows what's more to come?
Yeah, and you are 2 minutes away to see what's going to happen with the US Open, which is going to be quite interesting. Because yesterday the news were quite late. It was literally like 1 hour away from the market close, or even the market was already closed as he was finishing his talk. So it's going to be interesting to see how the market actually is going to open right now. Yeah, we'll see.
And Bitcoin has been
some ridiculous reversals for New York Open. If there is not a reversal or some type of change in local structure, I'm going to be super shocked. If it just keeps going up.
You mean up or down?
I'm talking about like on euro dollar more than anything.
Euro. Okay.
Yeah.
But actually, we didn't. I didn't. Probably you guys did it while I wasn't in here yet. But we could talk about EU. I mean, this move still very strong. You're saying it's still going up. Not just saying it is going still up until just a few minutes ago. But let's look at what the let's break it down from the top-down analysis. I'm gonna do it quick. So I tend to start my analysis and go on forever. Obviously, I enjoy it very much. But what I wanted to say was yesterday, and actually in our workshops in the Discord community, we talked about this, that the only order block or the only structure on the high time frame, on the monthly time frame, was way above us. And it was unlikely to reach that, because of course it was very far away beyond its weekly range, etc. And lo and behold, we already, just a couple of sessions later, I think 2 days later, we already reached it. So that tells us something. So we are actually in an entry order block on the monthly, right? So very interesting for higher positioned traders. High time frame, extremely high time frame. Other than that, we have on the weekly, we were reacting initially on that weekly entry order block, the bearish quasi, but it's clear that didn't have a grip, right? It didn't contain price. By the looks of it, this impulsive move is very clear that this order block is of no consequence for price, right? It didn't hold price, even though it had an initial reaction to it. And this fresh order block obviously is not doing its job. So it's not very relevant either. We can take that away. And basically, we're left with nothing other than that monthly order block above us. On the daily, what do we see? We do have on the daily, let me check if we still have that. We have way too many order blocks. So I wouldn't consider this, let's see if it is. We have 1, 2, 3. Yeah, we have way too many, meaning that this, we should change this to a regular order block, not an entry order block. Okay, so the next structure we have above us is a daily structure, which makes sense to me. If we're breaking this and we don't have anything above, I'm automatically gonna assume that this is a structure market is aiming for, meaning in not necessarily today, but in the coming days, this is what at least price wants to reach, and we haven't gotten there yet. So if that's any sign, we still have a little bit of space in any case to reach this. And going to lower time frames, there isn't really anything other than a huge monster of a breakout that we noticed today. That was the bullish reversal. It didn't come to my area, but that's long gone. It looks like something that happened many weeks ago, but it's only a few days ago with that. All right, so that's on. We don't have. You could look for structures to the left on the lower time frame, but it doesn't make sense because the structure is so big, right? I mean, this leg is so big from this point, right? From this point to the lower point. That's a way too large of a leg to be looking for lower time frames structure. So we have to use what we have, which is just current price action, and this is obviously very bullish, and the momentum is to the upside. H4 not showing anything. Of course, the H4 is going to be the last one showing anything. We did have a pin bar earlier on, but remember, we haven't reached that structure above yet. So I would say I would be, if anything, if I'm going to do some kind of mean reversion trade, of course, I need to see the reversal happening on different time frames and things like that. But I would want to see this area being hit before if I'm going to do some mean reversion as a swing trade, right? You could do it on a lower time frame. Let's say you go to, let's say I don't see any bearishness yet on the H1. What do we have? Nothing, basically nothing. Only structure was created. The last one on the hourly was a bullish one. So we still not there yet. Possible going to see an outside happening in 27 minutes, right? If it closes below this low, that would constitute an outside bar. But we're not there yet. Might not even happen. And even if it happens, it's only on the 1 hour. Doesn't mean it's going to crash down. Especially looking at that impulsive move we had so far. So I would assume that the market is still trying to reach that level. And in between, of course, it can do all sort of things and even go a little bit lower, but eventually it's going to go, I would assume, there unless we see some other structure, some relevant time frame being created. Not happening yet, and we'll have to see in 25 minutes at the end of this hour if we actually get some reversals, candlestick patterns. And if we zoom in on the lower time frames, although I don't recommend this, you want to have a bigger time frame reason, right? That's what I said before. You want to have something on the hourlies indicating a possible reversal. If you don't have that on the lower time frame, your chances are not that good. And if we look at the just structural break, where is the neckline for this high? This being the head, the neckline is all the way down here on the 15 minute, meaning we're not ready to go short yet. And if we go to the lower time frames, we have a reversal here. No, we don't. Let me check. No. If we go to the lower time frames, we had a neckline here on the bigger structure, right? That would be this.
I would go short. Sorry, man. I looking at this and I'm like, I would probably just take a little punch short. But,
sure, I understand that on the bigger structure. On the bigger structure, would be the head, and that would be the left shoulder. We haven't broken that yet. Unless it breaks this, it's not telling us yet. Although within this range, there is a nice quasi, right? You can see it is being broken right now. So if I were to take a short, it would be based on this reversal pattern, right? There, breaking it and coming back, but I don't have any entry order block on that structure, so I wouldn't be able to get in anyways. That's something. And on the lower time frame, of course, if you go lower, you will find all kinds of structures, but your probabilities are not that great. I would wait in any case for the market to reach this level, this structure, and then look for that possible reversal pattern coming in later, perhaps at the end of the trading session, at the end of London. Likely, possible. We'll see. That's an EU. To me, you were either you got in earlier and you're still holding, but I wouldn't be going long here. It's way too extended. the opportunity to go long has long gone. Either you're already long, you're still holding and trimming it off, or you're looking for that possible short mean reversion trade, which I think is not the moment yet.
An interesting fact is that the dollar index actually managed to fake out that same low. So the spike that we had on euro dollar, basically creating a double top on on the dollar index, we broke the low, which is interesting. So there's a little bit of divergence between both assets at this point.
That means that means that the the diversion. That means that the move, this weakness, is a dollar move, and euro is decoupling a little bit by probably what's happening. The news is coming out of Europe, right? So it's actually a combination of two. It's not just the dollar moving. If it were only the dollar move, then you wouldn't see that diversion. That diversion comes from the dollar and the euro moving on their own right.
Yeah, exactly. Now the question is, which one is going to follow, right? Is the euro going to follow the euro dollar index, or is the dollar index now going to kind of continue to show some reverses to and potential longs? Yeah, this question. However, I do like where the dollar index is reacting to on the left side, but again, it's still being conservative in there after that big drop. It's kind of there's a zone in there on the time frame where price is reacting nicely from a demand zone.
Yeah, this is too big of a structure for me to look for the daily. So I typically wouldn't be looking for anything there on the daily time frame. On the let me see if this is, because we have to limit once the leg is too long. You're gonna get too many structures. So you got 1, 2, and 3. I would say it's still valid. Actually, got a daily structure here, which would be the target for dollar index for the coming few sessions, meaning it hasn't reached it yet. It could be what price is going to. Both of them are indicating that there is more room for this move that we're seeing today.
Mm-hmm.
We're not there yet. The drop in the dollar index and the surge in the euro dollar is likely not over yet.
Yeah, kind of agree.
Do you know, I can't wait for tomorrow where we can come in
and trade
and see what's happened, and it's a new day.
Yeah.
I'm trying to look for that reversal, but there's nothing here. Nothing. So it looks very weak. It's likely going to just continue to show weakness, and yeah, we'll see.
Yeah. What about pound dollar? Do you have any specific level on the pound dollar where you would be looking to potential sell?
Pound dollar, even more so than we were talking about this this week, where we were saying that the likely place where the price is heading was at the top of that range and that structure on the daily. That's why I left that the TP. And oh man, look at that. I mean, of course it's the same as with EU, but this one has already reached a structure, right? So it's a little bit different. Let's check if we have enough. This is too big of a lag for EU as well. I'm gonna check. We have one. Actually, there's one big there. Actually, this is a nice area. I would actually. I'm gonna double check this just to be on the safe side. This isn't. No, that's nothing. Here we have one, which all they overlap each other, so there's just one big order block, and this is then the next one. It's I would consider this an entry order block and look for reason to go short here, because of the bigger quasi that we see, right? That bigger quasi from the left, it makes sense for price to react here, but we'll just have price telling us, right? We take out the guessing. This is too much of an impulsive move to be expecting a reversal from this area, right? So that already tells us the likelihood of it reversing from this order block with the data we have, with the information we have, is not very likely, right? You're not gonna get a move like this. At least let me put it this way: it's not very likely that you have such an impulsive move, and then price comes back, reacting from it. It can happen, but it's not very likely.
Imagine the distress on people if tomorrow they wake up and it's done the whole move in one day, just like up and down like that.
That would be a really strong
move. Yeah,
that would be a big sign in the market.
Yeah, this is. I mean, to move this all the way back down, you need an equally strong event to happen, like the tariffs. That's the thing. And do we expect to happen something to happen? Trump to come with something as impactful, or something else happening? Maybe not Trump necessarily, but someone else on the geopolitical arena coming with such an impactful.
I'm terribly sorry, but I am here to once again interrupt you.
Talking about cutting a man off in the middle.
But we do have someone. We do have someone.
President.
We do have someone in the background. The one and only. From the one and only.
Mr. Move the market.
From the only place where you can trade stocks like you trade Forex with and get funded. You want to trade stocks and get funded? Well, this guy's the guy to talk to. And he's in the background. Alex, you got to fix this. You got to fix the layout. What have we done?
Okay.
There we go.
We'll do a better intro before the person said. Okay, now he's opened his mouth. But before we do that, we're gonna go on a quick commercial, guys. Okay.
Oh my God.
Traders, stop going at it alone. Now join the AlphaBeta Labs, a free online community built by traders for traders. Share your insights, drop value, and get rewarded for all of your contributions. Now there's no limits, there's no gatekeeping, all traders, all markets at all levels. So click in the description below and join us right now.
Wait a minute, why are you running an intro?
There you go. I did the intro.
Why are you running an intro from ABL? This is Michael from Trader Pool, and you're running an intro from ABL. Welcome, Michael.
Have to use it anyway, Mr.
Hey
Market.
guys, give me a sec.
Hi, Michael.
All right.
How smooth?
He left as soon as he came.
That transition was so smooth. And then it comes in, and boom.
What up, guys? How's it going?
All good, man.
Good, Michael.
Everything's okay? You doing good?
Yeah, all good. Well, looking at the markets, I don't know, man.
How's the market on your side, Michael? On the equity side, how is it? How is it handling all these tariffs from Trump?
I mean, the drop in the Nasdaq, amazing. Like in 7 minutes, 1,000 points, right? It's crazy. I got long at the bottom like a few minutes ago, and also 2 hours ago. So I'm averaging my position on the Qs and also on the Nasdaq on my The5ers account and Trader Pool. So happy days for now.
Nice. Well, I got stopped out. I guess. You probably.
Mickey's like, what an amateur. Don't use a stop.
Why do you use a stop?
Oh, you don't use a stop loss, do you?
I truly don't, but not hard in the system, obviously. How's it going, everybody at home? But obviously, I have a stop loss, right? I have a stop loss in my mind of $1 that I'm willing to lose on a trade, and then when it's get to that level, I'm out. But but I don't put it in the system.
Right. Well, Mike, I'm going to leave you with these three gentlemen because, as you can see, my background's dead. I'm working on new lighting. It looks horrible. It looks like I'm in the... It's actually not this dark in here. I don't know what's wrong. I got to fix that. I'll see you guys. See you guys on Monday. All right.
Nice one.
I'll be in the background.
See you around, Jonathan.
Yeah. Okay. So I'm actually here. Alex, do you want to talk about the market or do you want to talk about Trader Pool?
Wait, hold on a second. Yeah, why have we got your presence right now? Is there something special going on in Trade the Pool that you want to let us know about?
I mean, there is always something special, right? We love special. We love to work on big projects and every few months just to deliver. And for those of you who didn't hear about it yet, we actually launched our new programs, 2 of those, the Flex and the Max. Flex is basically unlimited time. Up until this moment, we had 45 days to pass the evaluation. Right now, it's unlimited. So even if you're not really familiar with stock trading, you can learn a little bit about it. I'll show you in a second how and where. And then you can take your time and trade 12,000 assets. So ETFs, leverage, anything that you want to put your hands on, and anything that you do like on a regular basis, right? McDonald's, Nike, Tesla, penny stocks, you name it, we got it. And you can do a bunch of cool stuff. Thanks now that you joined the website. So if you're already there, a few things. First of all, if you go to education at the top, you have Forex to stocks. And we basically prepared 1-pager for you that will teach you anything that you need to know. The terminology, the way we approach the market, the small nuances that you need to know when it comes to trading a different market. You have 4 different videos that will teach you everything that you need to know there as well, with our guy Mitch from our own live trading room. At the end of this, by the way, at the end of this session, we will redirect you automatically to our live. Mitch and Michael Noss is there trading live, and you can join them. And Alex, if you're already there, or who's playing with the website?
I'm playing with it.
So if you can go to the trading VOD, this is something.
I've shown them. Look at this lovely stuff. You guys are in for a treat.
And this is a lot of trading content, psychology, risk management, strategies. Doesn't matter if you trade in stocks, Forex, futures, you will definitely, when you were young, huh?
Look, you can't not say anything, Michael. Look at that.
I'm a different person. Yeah, 3 years, right? So you will learn tons of trading materials or content there. Definitely go and check it out, the trading VOD. And again, the beauty of what we created right now and launch is to versatile and to give all the traders the opportunity to trade stocks. You don't have to go from literally leave Forex and join stocks, right? But if you want an edge and if you want to add more to your portfolio, you should definitely check Trade a Pool and start learning a little bit about the way of stock trading. If you guys have any questions, feel free to drop them in the chat. A lot of the times, you know what, Alex, a lot of the times, this is probably the most common question, is that are my strategies on euro dollar will work also on Trade a Pool, right? So this is definitely the most common one. And the simple answer is yes. A chart is a chart, right? When we are, from time to time, you show me like crypto and we're looking at the same thing. We're watching levels, support, resistance, supply, demand, all of those things are relevant for each market. The only thing that you need to know is those nuances, the terminology, the symbols, the pips comparing to the cents, stuff like that. And we got you covered on this page that we showed you in a second ago.
Yeah, this is, you've now made a program, Michael, that I actually am really interested in. Yeah. This for CFD traders like us, this is more our language now. Like before, it wasn't exactly there for us, but now with all of this, especially with day trading and the flexible plan, this is definitely more up our street. And I've been waiting starting to trade stocks for a long time. I've always been in your office saying, I want to trade stocks. And I think this gives us definitely a really good opportunity to do that. But one question that I do have for you.
Yeah.
Who are the better traders? Stock traders or Forex traders?
Only one way to find out. We need to put on the show, battle, and just test it out, right? Yeah. But I mean, it's really up to the person. You gotta be you got to be in control of your trade. We talked about it actually today, right, in the morning. You said, you traded, you gave some profit back to the market, and you said to yourself, what the hell am I doing? Why do I return my profits to the market? This is something that everyone are dealing with. So
it seems I've been crying about my day today to everybody, because everybody.
Oh yeah. Okay. I thought I'm special.
Everyone's heard the stories about what's happened today.
Nice.
Wicked. Okay. Has anybody got any questions to? So what's the connection between TTP, Michael, and the 5ers?
So basically, the 5ers is the parent company, and Trade Pool that I run is, the child for now. But we are growing.
Yeah.
Actually, if I'm here, I can definitely share my screen for a sec.
Go for it.
Just to show the guide that we basically what I'm doing on my 5ers account, right? So, can you share mine?
Yep.
So everything that I do on my 5er account, right? I'm trading the NASDAQ on that level, but everything that I do is basically the same strategies that I'm using on my my Trade Pool account, basically, right? So all of the trades that I made up until today, and this is a 320K account, I'm doing literally the same thing as I'm trading stocks. So in that case, as you can see, all of those things are by the dip kind of situations. In most cases, what I'm doing, like what I'm doing right now, and the concept is the same because it's a chart like euro dollar, maybe not as volatile. The Nasdaq is more volatile, obviously, but if I'm taking a different chart, doesn't matter which one I will take, it will be the same thing, the same concept of just finding those levels, right? Support, resistance. This is a great area. So once it's pulling back, I can go long, etc. Or it's dipping down, reaching a major key level. Now I can buy the dip. So the concept is remain the same. The only thing, like I said, that you need to understand is basically the differences like between the hours, right? The Forex market will run 23 hours and the stock market has pre-market, regular trading hours, and aftermarket. So all of those things we covered on this one pager that we showed you on our website. If you go to education, then Forex to stocks. But the idea of trading remains the same. So this is something that is super important to remember. And you can trade anything like this. Doesn't matter the asset. Sorry.
Yeah. Alex, how would you manage Forex and stocks together? Probably I wouldn't, mate. I'd probably just put one or the other. Or you trade Forex in one session and then you trade New York, obviously, for the other one. But yeah.
We do have. Go ahead.
I'm saying that in a lot of the times, you wanna. This is something that actually I think I talked about in the last event that we did, right, Victor? When we did the risk management event, and I talked about diversifying your portfolio, because once you understand that you can have crypto and you can have stocks, futures, Forex, you give yourself a much better position because you know more, you understand more about the correlation between the markets. And you can definitely use that to your advantage. When you see that the Forex market is more active, then you go there. When you see that the market or the stocks are more active, you go there, and so on. So more asset will basically, or more markets will teach you and give you more edge in your trading, basically.
Yes, I think it's more opportunity, right? It's more, if one is not working, you can switch and transition for a period to that other market. It makes a lot of sense. Michael, there's someone in the audience asking, is it available for people from India as well? Can they become a stock trader with the Trade the Pool as well?
Yeah, 100%. And also, we also launched a new program, a 5K account as well, that is available with $47 up to $200,000 of trading. So this is something new that we added as well. And everyone are welcome, basically. So feel free. We have many traders already from India. I know guys in India that love to trade stocks. So definitely the market is open for you. And let me remind you, if we have US guys or Canada, this is CFD free. So you're trading real shares. This is not CFDs. So you basically can join if you're from the state.
Basically, the whole of North America can participate and get funded with Trade the Pool. For sure. Yeah. Cool.
And what's the platform that we use over, Michael? It's
called Trade Evolution. Super easy platform, and we also have under the Trading VOD, we have a section that specifically planned for that. So A to Z tutorial that you can easily learn everything you need in order to execute the trades. And we are working on adding more platforms as well. It's coming. I don't want to share a lot of right now, but we're definitely doing incredible stuff around it.
Yeah, amazing stuff. I know we got news coming out in 2 minutes. I'll put Victor's screen back on. And any kind of questions that you have for Michael while we've got him, because we don't have him on here very often. It's very rare that we have him on the 5ers stream, but I think this is a lot of traders as well are quite curious, especially from in the Forex market, which has got quite a lower barrier to entry, because obviously in stocks, you want to trade stocks, you have to have a minimum, especially for day trading, minimum of about 25,000 just to even get the ability to actually start trading. Isn't that correct, Michael?
Yeah, within the US, yeah.
Within the US. So it's like basically Trade the Pool is giving the options how we understand how prop works. It's giving us the options to do that as well. And I've seen some people take some massive profits from their trading in Trade the Pool as well. So I'm really excited to get involved. If you got any stocks for us, Mickey? Any tips? Anything that we should be looking at?
Just buy the market. That's it.
Just anything? You haven't got like a secret kind of ticker that you're looking at that you want to just give us?
I mean, you can watch LEU.
LEU.
Yeah, that's a uranium company related to that. The first
Which one is it?
The first one, yeah.
LEU.
If you go to, obviously it's not day trading, it's more of a long term, but it made a massive move to the upside, then dropped like crazy. And this is a classic pump and dump, right? So you see the double top, right? Or try to breach to a new high, didn't make it, dropped, now reaching the area of support. Could be interesting. But again, this is not for day trading. Day trading, go for the big one, Tesla, Amazon, Nvidia, or maybe those that are reporting every quarter.
Yeah, we've got a little bit of news on Euro again. Can't believe this thing is still popping up on the day. This is just absolutely ridiculous. But there you go. Wicked. So that's it. I think after this, guys, we're going to be sending everybody over to Trade the Pool's trading room, where they've got two fantastic traders that are going to walk you through the platform, the programs, and obviously get into some really interesting trades as well. So thank you very much. Thank you to everybody here. And Michael, have you got anything last words to say?
No, just go to tradepool.com, check us out. And the guys is asking about India. Yeah, you can definitely do that. We also have a 14 days free trial, by the way. So you can definitely take advantage of that. And yeah, we'll see you on the other side.
See you later, guys.
Awesome.
Bye.
Bye, guys.
Thank you, guys.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.